begins.
Check 1, 2.
This leader is provided to permit the projectionist to complete adjustment of focus and sound level before the film begins.
Check 1, 2. Short news. Customization. Subscribers only. Save all that there. You ready to rock and roll today or what? Check 1, 2. Check. All right, we're almost there, baby. Let's do it. SPY, yes, ESF. We got some Tesla we'll throw in there today. We'll throw some Apple in there. What else we got in there? NVDA, everybody likes that right now. They probably got the meme stonks too. Hello, good morning. Fed day, baby. Got my weird hair's acting all weird this morning. What do we got? We got the Fed day. Jerome, Powell. Rate decision. And we got meme stonks. I think we got meme stonks. I'm assuming someone wants. Okay, live stream. Boom. Oh boy. Send now. How's everybody doing out there? What's going on? Good morning. Got to put my watch on. Hang tight. I'm like a child putting my watch on. I can't put it on myself. All right, good morning out there. Switch right over. All right. We got a bunch of stuff to go over this morning, of course. Another day in the market. Another drama-filled day in the market. All right. We got a whole bunch of stuff to do this morning. As usual. Good morning. Let's say hello to everybody that's here this morning. Let's start with that. Let's take it nice and slow as hold on, we'll slam some ads in. Okay. Good morning, Jay Cortina. Good morning, Doug James. Good morning, Redrift. John Saporito, what up? Chaz, good morning. Pat Pendergrass, good morning. RS, Dave Terrell, Stonks Anonymous, RS. Dejan, baby. Cooked Sweet D. Binky G. Sweet Al, Where We Roam, CSM Jazz, Kobe, Matt Coella, Black Beauty Machine. Who else is out there? Fernando, Oscar, Dario, Mata, Kobe's in the house, Matt Coella. Who else is out there? Fernando, Jared King, DJ 2012, Derivative VLCH, CSM Jazz, JD, Richard, Blanchett, Justin Eli, Patrick Al, Sean Haran, Mark Torzi, Drew Turner, Alexander Kovac, Poor Badger, good morning. Benny Mack, Dave Teralt, what's up? Good morning. How's my Twitch peeps doing? See who's in the house right now. Dejan's on both sides.
It may be some time before equilibrium sets in.
Vig the Viking, Derek, Hand, Dougie D, Fisted, Theta Slayer, Bull for Trading, Griff STL, Cosmo, Not Project, Young Traveler, Bull for Trader, Darth Molly,
here order flow in futures,
Bumbledine, don't do it zero.
At tickstrike.com.
Caleb Karen, Legends in the house, holding it down for Cap this morning. Mad 248, career low made the move. Oh yeah, baby. Made the move. Good morning, Duke 5064. How are you? Phone on 99's in the house. Good morning, Duke. All right, who else we got in there? Gave up my mod, right? And only relevance in this world for you. Well, you want to be a mod again, career low? Hold on, let me see if I can make you a mod, man. I'm not good at this yet. Oh, you did the Prime Gaming too? Let me see if I can. I don't know if I know how to do this or not. I got yelled at the last time I tried doing this. Hold on. Mod career low. Okay, he's a mod now. He's back. He's on Twitch mod now. Go in there and make a comment or something so I can see. Okay. Good morning out there. It's Fed Day. So in the overnight, we saw, in the overnight, I don't know if you can see it here, but we didn't quite get up to 4050. We saw the hedge come in, though, on futures.
Expectations remain anchored.
We're going to look at we'll start the day with this. We're going
to names in the markets now as Credit Suisse shares extend losses, last down around 5.2% on the ticker CS.
We'll let people pile in here, and as they pile in, we'll just set the day up for everybody. So they can get now. First off, in the morning before a Fed rate decision,
Rabkov says the probability of nuclear conflict is higher now than it has been in the past decade. So again, this is being cited by Interfax, coming from Russia's Rabkov.
Just on a Fed day right away. The morning is going to be. Think about the Fed day as like you go to I don't know, like a Harlem Globetrotter. You go to like an all-star basketball game, and the early show is the Harlem Globetrotters. Just a bunch of day traders showing off for the crowd in here. So you'll see classic setups typically, a bunch of old school trade setups. You'll see like a triangle, and you'll see an expanding wedge, and you'll see a dragon's tail, and you'll see like a devil's wart, and you'll see all these setups. Some of them will fail and then eventually get trapped, waiting for the decision and then some kind of a squeeze. Now, we know the market is hedged heading into this event as well. So there's going to be a hedge on the market from the sell side hedge funds. They're going to have their hand on the market until the last minute, right? They pull their hand away, looking for any kind of weakness in the market as the day starts out. So if you want to trade this, you can. Usually the most success that I have trading these days in early day and early morning are just classic setups. If you see a bear flag, if you see a bull flag, you probably will see some day traders come in and trade like a 1-minute chart. I shit you not. So just be aware of that as the day starts out here. Otherwise, just hang out on the sidelines. We're going to set some stuff up for you so you can see where the implied move is. You can see the expected move. We'll talk about what's likely from the Fed today. All that kind of jazz. There's some targets above, some targets below. We'll look at the VIX. We'll look at a bunch of meme stonks and a bunch of other stuff here for you. We'll look. Well, I guess the meme stonks now include regional banks. So right off the bat this morning, let's look at the implied moves for today. Let's see what's being priced in for today. Let's look at the options. Let me check the options contracts right now. Not too bad today. I'm quite impressed, actually. The pricing is reasonable. There's a large concentration of calls on 402C for $1.15. Not too bad. Some of these decision days, we can see $3, $4, $5 in the money 0 dates. So kind of reasonable today. Not too bad. I'm actually quite impressed. It might make for a nice day for a strangle. Oftentimes in these days, there's like grind that happens and some theta burn on 0 dates. But then if you can get a good price on the up and downside moves, they might print both sides, believe it or not. And we've got a straddle in the market on March 23rd. On 399C and 398P for the 23rd. The 24th, we start to see things spread out a little bit. This is into, I believe, Friday, right? Yeah, Friday. We can see a little bit of more spread in the options contracts and the highs and lows. We're going to look further out to the 27th. Same deal. I'm losing the monitor already this morning. Let me look at the 31st real quick and see where the market is. Kind of a light book on the 31st. Not too much. No real decision to be made, it looks like. Hold on a second here. All right, we're back. So not too much, not that I can see in SPY at least. I'll check SPX next, but in SPY at least, I'm not seeing too much. Those 402Cs for today are now up to 22.5 thousand contracts, so $1.22. They were about $1.15 a few minutes ago. Let's look at the spread right now. What am I looking for here? SPY. Let's see here. Okay, so for the implied move for today, we got 403.22 and 393.99. Not too crazy. Actually, not too crazy today. I'm actually impressed. Sometimes it gets much wider. We'll write implied move. The options market is pricing in right now for the SPY at least. We have some range expansion as after today. I would say after today, we get some range expansion. 394. I get this right here. Make sure I get this exactly right. 394.01. Right down here. It's kind of well, not kind of. This is our implied range. The options market is pricing in. Not too big, right? Not too much priced into today. That's not really a large move. 398.64. That's 40 points in that direction. 40 points in change. We got another 30, 50 points to the upside. A little bit of bias to the upside today. Now on these days, and I got some other stuff to plug in here for you this morning, but on these days, there's two ways of looking at this. But not two. There's a bunch of ways. You could actually, but you can strangle this market. 403s, So like 403s are 94 cents to the upside here, right? You can start to plan your day. Maybe you take an upside call, and then you grab some downside puts. So you're 90. Right now, net 403s are 95 cents. Now we've got 25,000. They moved from 402 to 399 Cs. They're now 25,000 contracts at $2.50. 403s are 93 cents, 94 cents, 92 cents, something like that. If you start making our way higher, maybe grab some calls, start making our way down, grab some puts, and you can strangle both sides. If we get any kind of a whiplash effect somewhere in here today, you can monetize each side. It's not an easy trade to manage, I'll tell you that. It's very stressful to manage a trade like this where you take both sides. You can get your brain will tell you, oh no, it's just going to keep crashing below. Meanwhile, it swings higher. Another rule, not rule, but a rule that I live by on these days is a failure to actually tag in the money. So I said 403s. 402s are sometimes better, let's say. And on the downside, 394, 395 might be better on the put side, right? You get a failure to actually tag the implied move. Just like a brief failure. You actually end up printing something closer to being in the money on the up and down side. So I know that I said 403, but like 402s, 395p. For any kind of violent swings we might encounter. Usually we get at least one or two upswings and downswings on these days. It won't just be a one-sided trade. I think the only times where it doesn't happen is if there's a surprise. Now, a surprise can go two ways. I'm sure you hear people out there saying if we have a pause, that there'll be a shock to the market. I agree with that. I agree with that to an extent. I think that if there's a rate cut or pause, there could be a violent move higher, believe it or not. And at least historically, you'll see a violent move higher, and then we begin a massive sell-off. Look at this from the perspective of a sell-side hedge fund. They're going to stand out of the way on a surprise, right? They'll get out of the way and allow the initial market reaction to be positive. This isn't guaranteed. Don't take anything that I say as like this is financial advice. You should always be consulting a financial advisor who would probably tell you, turn off my program and come down to the office and speak to them. But in my experience, at least, if you have a rate shock today that's positive, sell side hedge funds, step out of the way. Market's going to explode higher. And I mean explode. The S&P 500 is the most shorted market shorted instrument out there right now in SPY and market hours specifically. So you'd probably see an explosive move higher, but after the initial wow, this is awesome sauce, everything is great, woohoo, it could roll right back over and become a violent move down because you will see it pushed that more is broken than you have seen. So keep that in mind. Another rate shock would be 50 BPS. 50 BPS. I have seen events like that. You'll see an event like that, and one of the key things you'll be looking for if something like that occurs is instead of just a move lower. Yeah, there we go. Hold on, let me close this up for a minute. You can usually figure these things out quite quickly. If there's a rate shock, let's say there's anything that's like bad, and I mean like bad, like 50 BPS, fuck your calls, fuck you, fuck the poors, and we're keeping everything. Something like that, you'll normally not just see a drop to just below the implied move, you'll actually see a smash through it. Sometimes you'll see below the implied move a fake out and then a smash through it.
In the UK Brexit deal vote.
And this is really key here, is does it or does it not recover? If it doesn't recover, turns around something like this, that's usually really, really bad. And it doesn't recover. You'll typically see violent moves all the way down, and you'll think it's coming back, and it's not. It's going to close, and it's going to continue selling for the next 2-3 days. So just be aware of these movements in the market as they take place. Now, these are positive and negative shocks to the market. These are the outliers, right? these outliers take place sometimes on a Fed rate decision day. It's better to have a reaction trade, right? You don't get involved in any of this bullshit in the morning, and you wait for the first move to come out, right? If you see the market start to squeeze up and it starts to fail here, you can short this down, then buy this back up again, right? Something like that. If the market starts to sell off into the Fed rate decision, you can usually buy a dip to come up here. It's easier sometimes to sit on your hands and not do anything. I know that some of you out there are going to say, "Nah, Cap, historically, recently at least, in recent history, what happens? We trade sideways, and we eventually squeeze up at like 11:30, 1:30 in the afternoon. The presser is released. We squeeze higher. We come back down for the presser. And then we squeeze higher again, right? Something like this usually does, or in recent memory at least, has been how the market reacts on these rate decision days. And then we usually cool off into the close. And then the real move is after tomorrow, Friday. Sometimes it's Friday or even Monday. You won't get a real move. They'll just kill the options market. Thank you for playing. We're going sideways into Friday. And then Monday you get the actual move in the market. And that's if we get 25 BPS. The Fed's job today is not an easy one. The Fed's job today, threading a needle, is going to be a challenge. And we've seen him in the past. I want to highlight this about the Fed. We've seen this in the past where the Fed needs to thread a needle. Jerome will stick to a script that's prepared. And it'll be normally it'll be like 25 BPS. We're going to fight inflation, blah, blah, blah. If the wrong person asks him a question, he will go off on the handlebars. He will go off on the handlebars and slam this market. So he will, that does happen inside of the presser. So be very careful inside of that presser, what he says inside of that presser. He could get aggressive and angry. He doesn't come off as like an emotionally angry person, but you can actually see that in what he's saying. But he has to thread a needle today. There's no doubt about it. There's no doubt about it that it's going to be easy for him. The agreement that he's made with the market, the agreement that he's made with Bob on Main Street, the agreement that he's made with the bond market, the banks, VCs, everyone out there has been broken at this point, and he needs to renegotiate this agreement. Whether it's the same agreement, a new agreement, is still unknown at this point. And the other thing too is that the trust in the Fed has definitely been damaged at this point. Definitely been damaged. There's no way around this that is the case. And we also have political pressures. I see that talked about in the news that there are political pressures inside. We've got a bull trade setting up here right now. I'd want to see some kind of a confirmation here just off of this open. You want to see just the trade up and then some kind of some proof back over here before you do anything. But I do want you to realize that the presser itself is kind of key today, and is likely key where you might get some volatility that's unexpected and not scripted. And that would be the key one for you to pay attention to is the press. The presser is going to be so important. I don't know any other way to describe that. The presser can sometimes come off as positive. Hey, here's my prepared remarks. Here's my prepared answers for all of these reporters. And then one reporter comes out and asks the hard question.
So in 5 minutes' time now, at 10:15 a.m. Eastern Time, or around this time, the UK Brexit deal vote is scheduled to take place.
And that's all it takes. It takes one question. After all the bullshit comes out, you just ask the Fed the one question. You're kind of fucking these people over. You're fucking these people over. Or how do you fight inflation and yet not raise rates? And look at the balance sheet. Anything that's like not scripted, and he could go to town. Let's just be aware of that as the day unfolds today. If you are a new trader, I'm going to tell you, on these days, right? You know, one of the best parts about these days is not to trade. I have to tell you that. You can come into this market normally any day of the week. The best days we all know are trend days. Even the sideways days, though, you can usually get in and out of the market, make 100%, make 200%. I mean, these are easy trades. Every day you can show up. On these event days, it's a gamble. If you're here today with me and you're like, well, I'm going to trade this today, I'm hoping that you're like, it's 1%, 5%, 3%, 0.05% of your account that you're trading, that you're not out here going, yeah, I'm in 100% trade here, and then I just doubled it, and now I'm in doubled down my money, now I'm tripled down my money, and now I'm losing money. Into the end of the day, I got to go back to work at Wendy's or something. Any of that kind of stuff. If you're even that kind of a trader, today is not the day for you, more than likely. Or pick a trade and stick to it, and be willing to lose all of your money, because these days are not normal trading days. They're not. There's all kinds of traps here for you to lose your money. And if you are that person and you're taking a trade right now at this moment, you're likely going to lose by the time even if you're winning now, you're likely going to lose part of that trade before we even get to the decision. So honestly, these are the days to watch. These are the days to become familiar, especially if you're not familiar. If you don't watch every rate decision, every Fed meeting, this is one of those days where you paper trade it, where you just sit and watch in the background and see the motions of the market and how it moves on days like today. I'm telling you, it's not that these are not only these dangerous, they fuck with your mind, because you'll like want to sell. You'll see it bleed down and sell and then rip higher, and you would have said, man, if I had just stayed in that trade, I'd be rich right now, or at least would have made my money back. So I gotta say it one more time. Like, if you're not like Johnny in the spot, in out, you can see the dips to buy and the rips to sell regularly, like 70 to 90% of the time. If you don't make 7 out of 10 good trades, this isn't for you. You don't want none of this, Dewey. If you're not willing to lose all your money in a day like today, this isn't for you. You're showing up with your $1,000 paycheck and you're like, I'm going to let it all ride on black. This is probably not the day. There's so many easier days to make money. Easier setups to make money. Setups that follow through to make money. There is another question here. There's something else to talk about here, and that is vol crush. You know, if we don't get a bad rate, if we don't get anything out of the norm, if we get something normal, there'll be a vol crush trade in here too. So there's a way to be looking for some kind of volatility crush trade in the future. Now, I know a lot of you out there are saying, now the VIX is down. There's no vol crush here. The trade's over. I'm assuming that there could be. If you see the volatility spike today, but then after post event, and this is the last part. This is the little asterisk trade. The market will be repriced today once, if not twice. So any options that you're looking at for the rest of the week, possibly even into some bleed over into next week, you're going to see repricing of options 2 to 3 times today. You'll see the initial move. You'll see the initial move, and then immediately, no matter which direction it goes, up or down, you're going to see the repricing of options. If you get the other move, the next move should see a repricing of options. You'll also sometimes see a repricing of options as we close the day out into tomorrow. So don't get trapped in that either. Don't be like, woo, this is awesome. My $10 options are now going to $40. That's not happening. They're going to reprice your ass down from $10 to $1, and then you might make $3. Do not get caught in the trap. Everything today is directional based. And it doesn't matter if it doesn't matter if you're buying options for Friday for today. They're going to reprice all this shit. Guaranteed today. Winky Face is in the house today. He's had meetings all week long. Good to see Winky here today. All right. So that's all out of the way. Blah, blah, blah. Implied moves. We're now going to add in the next thing. We're going to add in the next layer for you this morning. This is the one that the bears want. All right, here, give me a second. Hold on here. Okay. I want you at home. Get yourself a piece of paper and a pen. Get yourself a notepad. Get yourself a crayon that doesn't roll off the table. Go to the back page of your coloring book. Back page of your coloring book. As long as price stays above, currently in the SPY, 398.51. Well, the trade is long, okay? The trade is long. The only support for bulls today, the only support for today specifically, the hourly right here, 396.28. Okay? There's a band of support, though, for the bulls, 395.62, 396.30, 28, I guess, 396.42, and 396.98. The two main support levels here for bulls is this one right here, this green one right here. This is where bulls tee off intraday, and bears on the downside of it as well. And then the daily. The daily is kind of the key for bulls to hold. This daily right here sets trend. And believe it or not, if you're a bear out there, we just, for the first time, the market for the first time has become positive for bulls. So if you think this run is over, it might be, but I'll tell you what. Trend being in the favor of the bulls here. This is the first time this has happened in a long time. So when we reestablish trend as up for the bulls, they have a lot of open sky above. And as long as they maintain this trend, this daily trend, it becomes extremely bullish. If you think Apple's bullish, if you think NVIDIA, like if the run is over, it might not be over. It may not be over. It may be a matter of way more higher than you think. Now, we have to see if this is proved out today or not. If we can see price stay above the daily and the hourly trigger, the bulls are going to be looking for some significantly higher prices. If price drops below and rejects off of these two here, say at any point, breaks below, rejects underneath, the bears will be firmly back in control of this market, especially with a rejection. Any kind of confirmation rejection above here today, bears will be in control of this market. So we're going to pay attention to this as the day moves forward. I'm going to draw a couple bars here that are most important to you. I'll draw the green one and the yellow one for you on your charts so you can see them in relevance to where the market is right now. Just right here, I want you to see both, okay? 397.03. This is a key one for the bulls. This is your daily trend. This is where it all starts for a bull. If you're talking about where it all begins for a bull, it's all right here. $396.30. Consider this where the smart money is for bulls, okay? The green bar is where the smart money is for bulls down here. If there's a dip to buy, it's down here. If there's where do we tee off, it's this green box. And it's been moving up, right? Every day it's been moving up. So any kind of a breakdown here, you want to be buying this to go higher as a bull, okay? If you're a bear.
So in 10 minutes time now at the bottom of the hour, do you get the EIA crude oil inventories forecast minus 1.8 million, prior 1.55 million, with a range of 1.5 to minus 3.5 million. Gasoline inventories forecast minus 2.364 million on the prior, minus 2.061 million. And the distillate inventories, a forecast of -1.5 million from the prior -2.537 million. And for the crude Cushing inventories, we saw a prior read of -1.916 million. So just make note of the API crude oil stock change, which did come out
Nice
of the build
squeeze.
last night, 3.262 million on the forecast of -1.448 million.
If you're a bear, you need to see not only a break down here, right? This isn't good enough for you. Not good enough. It's just an opportunity to buy a dip. If you're a bear, you need to get underneath both of these, and then you need to get underneath this implied move to go lower here. So this is some key levels here for bears to see. You want to see, if you're a bear out there, you want to see the break of the daily, the hourly, and the implied move. You want it. This will show you range expansion to the downside over time. Okay. Now for bulls, it's the ball is in your court here. You have the support that you're looking for. You have the hourly. You have the daily trigger. Everything here is bullish on today. You can see the squeeze taking place higher. For bulls, as long as you stay above this white line right here and this red line right here, we're bullish. You want to put some stops underneath or something like that. Unless you see us trade below 398.31, 390, 398.64, the move is higher here. The market is supportive to you being a bull.
Should be coming shortly.
Let me put this back above here. We're going to put some H lines in above here. First one that we're coming up on right now is the previous high from yesterday. Tag that right there. H line, baby. Jason Hendricks line. Previous high from the previous day. We've got some pre-market highs in here. A little bit of vol in here, but this is the ultimate target right here. If you are looking for this trade and you're like, I'm late, Cap, taking that trade, we'll see if we can get a reversal and some kind of a confirmation. We're looking for something like this. Trade higher, come back down, recheck again, and then you'll slam up and hit that H line above here. Another note to be concerned about if you are a bull. Let's see if it shows up on this chart here. I don't see it showing up here. It's going to go to 15 minute. It shows up here. Right in here. See this little yellow or this white ticker line right here? Comes right across the implied move. This is a place where bears are going to want to take a short on the market. You can see it right up in here. It crosses right through, and I'll show you where that stems from. That's just coming from way back over here, okay? Way above over here. It's way back. Actually, I'll raise this up. I can get that more exacting for you. Right up in there. Places where they've teed off in the past. It's going back in February 2nd. It's also up this right where our 3 is right now. And if bulls want to see continuation to the upside, you definitely do not want to see. Bulls definitely want to get above R3 and then hold above here. You would still take profit up here. Then you would wait for confirmation or even a trade higher or a confirmation trade, and that's your second bullish trade higher for bulls. So even on today, let's look at today real quick. So even if we have this move higher today, right? So you get this move higher today, and you're like, woo, it's bull town, right? Yeah, we broke above. You're still going to take your profit in here, either here or here.
1.8 million prior 1.55 million. Range of 1.5 to -3.5 million expected. Gasoline inventories forecast -2.364 million on the prior -2.061 million. Distillate inventories forecast -1.5 million prior -2.537 million. And the crude Cushing inventories saw a prior of -1.916 million. Again, just looking to the API numbers that did come out last night. So API crude oil stock change came out at 3.262 million. So that was a build on the forecast of minus 1.448 million.
So even if you get this trade today, let's say you get it tomorrow. Let's say you get up to R2 today and then you get up to R3 tomorrow, right? Let's say it's tomorrow. Let's say it's Friday. No matter what happens here, you're not in this trade up here. You're taking your money and running. You're not saying, hey, Cap, when we're up here, you're not like, hey, Cap, now I'm bullish. I'm going to jump in. This isn't where you jump in above here, okay? You have to then wait for the confirmation. That would be we go higher. Then we actually retest right here. And then only then do you get the confirmation to take this market long as like, hey, it's a new bull market. You do not get involved in the trade. Maybe day trading you could in here, but you do not get involved in this trade like I'm full port and long calls. Because this is also a great place for the rollover to come in and you get trapped, right? You know, like everybody be buying calls, nobody be buying puts, everybody be long the market, and they roll your ass, and the real dip buy was down here to go higher. So just be really careful this up above. Oftentimes you'll see this fail. And this is the actual bull run right here. Okay, somewhere down in here. Another thing that happens up in here is you'll get this move higher. You get the first rip higher, and you'll be like, yeah, fuck yeah, new bull market. We'll come back down, and then you get the failure, and the actual buy was down here. Again, this is all options market kind of bullshit. Coming up on that H line now. If you are trying to run a strangle or a straddle on this market, you bought your call side, you're trying to get up in here and grab the put side for the rest of the day above here, and then you can have some cheap calls and some cheap puts, and you can hold them right through the Fed decision this afternoon. All right, let's see what you guys are talking about. Let's check in with posters in the comments here. See what you guys are saying out there. All right, going through some of the comments here and see where you guys are commenting here. Ready for the hammer of death? Coach K saying playing UPST on this inverse 4-hour break, 16 daily options too. We'll look at meme stocks here in just a moment. Good morning, Chase. How are you? Morning, David G. How are you?
The EIA crude oil inventories.
JBS pitch the same for 90% of it. Just a few fill-ins on each time. That's it. Well, there's, Super Bullman is making up a good comment here. And one of the things about what he's saying is Powell the speech is the same for 90% of it. Just a few fill-ins each time. That is it. I agree with that statement. I am fascinated, Super Bullman, about the pivot. When does it come? Or a more aggressive Fed. Now, they did make an agreement saying that they would always telegraph what that is prior to that. Those days are over of hiding stuff from us. I am fascinated. I am fascinated to an extent with what supposedly was said earlier last week about where the market is priced will determine the ultimate rate hike. Now squeezing past the H line, trading 399.87. Now looking for 436.
Minus 6.399 million. Minus 6.399 million. That's a draw on the forecast of minus 2.364
nice, beautiful
million.
squeeze right now.
And at minus 3.313 million. Minus 3.313 million. Also a draw on the forecast of minus 1.5 million. Crude
those 399 Cs are now trading $3.20.
million.
Beautiful, beautiful trade higher.
So according to the EIA, inventories of crude in the US SPR reserve steady at 371.58 million.
Can see supply just above where we are right now. And he's making a fair point. That's my question is, when do we get when do we end up getting that one moment where we get a change in the Fed? Will that be telegraphed to us or not? And then also what Jay Powell said about where the price of the market is will influence my rate hike decision.
Weapons to Russia for the Ukraine war.
And the only thing that I thought to myself when that was said was, are you shitting me? All of these scientists out there, all of these smart people out there, and you're leaving it to the price of the stonk market will determine where your excuse me will determine where your rate hikes are. And I'm like, you got to be kidding me. I'm like, you're telling me that the price of the stock market is the determining factor in where the rate hikes are. I'm like, okay, I guess all that smartness, and that's where we're at. Well, same puts that back to a 5-minute. Right there for you. Yeah, we got JPM Collar still out there as well. So the JPM Collar paid for itself on the first leg of that trade. Boomers only care about the 401k. I don't think so. I think boomers care about rental properties. That's what I think boomers care about, rental properties, man. The more they can amass, the better. We're going to create an entire class of serfs. It's kind of gross. Yeah, I know. The 401k burr equals happy voters. I saw that too. It's voting season, baby. Can't be hurting that 401k in those houses. Yeah, we know that ultimately on a larger time frame that bears always lose in the S&P, right? We already kind of know that. Did someone say SPY to 0? How about trading VIX for the week? We'll look at the VIX right now. We've got VIXpiration, right? Oh, yeah, baby. VIXpiration. Let's look at VIXpiration. We'll look at the half hour, and we'll look at the 1-minute chart on VIXpiration. Can see that demand came in here, here, and we're looking down below at roughly around $19.56 on the VIX for looking for demand here. Bull's gonna be looking for, of course, no demand down here at about 1956, 1963. VIX is becoming bearish right now. You can see it's just starting to turn down. There's a little bit of bullishness on the VIX right now, at least on the hourly, but on the daily, overall, starting to turn down. We do see some appetite for buying the VIX still on the hourly. The 1 minute and the 5 minute, they're still kind of bearish right now, but overall, we should see some kind of a demand as we head into the later part of the day. You're going to be looking for some key levels here if you are a VIX bull. Your two places you're looking for are 2186 and probably 2227. 2227, you want to see a trade. You want to not only see the demand kick in down here, but you want to see a consolidation and a break higher, and then an explosive move higher if you can get it on the VIX right down in here. Right down in there. It's about somewhere about 23 and change, or 22 and change. $22, somewhere around $22 if you see a rip above it. You want to see the confirmation trade, you don't want to see it come up and then break back down here. So right around 22 and maybe 25 cents. If you can see that consolidation and the move higher, you could long the VIX. Otherwise, the bull's going to be looking for a break below. For no demand down here at call it directly at 1960 on the VIX. Let's go over some of the meme stonks this morning. Let's go over the classic three. Start with GME.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
GME. As long as price, it looks like it needs some consolidation here, but as long as price stays above 25.11 and you have time for the 1 minute to come up here and meet up with it, and 1 minute's still a little bit low on it, but as long as it stays up, price target above. $26.56. $26.56. If price can then get above 27.81, remember, anytime price goes below these numbers, the trade is dead here. We're already starting to see it squeeze right now currently. You'll see some kind of a failure likely here. See if I can show you this. Nice little squeeze already presenting itself right in here. Something like that. Truthfully, though, the best trade here is waiting for the hourly to come up. So GME could be developing. You want to see this hourly come up here and possibly price come back down. Then look for the trade somewhere in here. Right around, if it rejects above here at 27 or so, 27, 27.50, if it rejects, monitor that trade as it develops down around this 25, right around $25. Trade is most definitely dead. At this point, I would think below 25.
Republican U.S. Senator Scott and Democratic Senator Warren unveil legislation to create an independent inspector general at the Federal Reserve. Also in Brexit news, UK opposition Labour Party via Twitter says it looks like around 23 Tories currently voting against the Windsor Framework statutory instrument.
A lot of focus right now on GME, so unless price is able to break above 86.65 on BBBY and hold tight stops, I'm going to go against BBBY.
So the UK House of Commons approves the Stormont break elements of the new post-Brexit deal on Northern Ireland. So that's 515 UK lawmakers voting in favour of Stormont break element of the new post-Brexit deal, 29 UK lawmakers against.
Daily is still kind of bearish. You're kind of looking. I mean, it's not completely bearish, but it's not great either. The hourly is turning up for the bulls here in BBY, but you want to see price break above 90 cents. If it holds 90 cents, price target above of $1.40, and the trade is dead if it trades below its 1 and 5 minute. That's rule number one. Rule number two: any break below this 90 cents once price gets above, trade is also dead. Price target above $1.40. AMC. Nice. I like AMC right now. Resistance above here. Previously known resistance, but I am bullish on AMC as long as price stays above 465. You're looking to just hammer down on these sellers above with a price target here of $5.17. I'd want to pick this trade back up if price can get above 520 or so, somewhere around 520, and let it consolidate. Your next target above that would be $6 flat. $6 flat on AMC. We'll look at Tesla and NVDA and Apple. Tesla to pick up that trade once again is going to be maybe two places to pick up a long trade on Tesla. 191.81, 186.70 to tee off from. Both of those levels, tee off on them. Price is or trade is dead if we break below and hold below 186.67.
ECB's Visco says interest rates are still relatively low.
Apple
To avoid a wage price
keeps
spiral.
teeing off its hourly like it's nobody's business. Bam, gone. Bam, gone. Bam, bam, gone. 160.26 right now, coming into some kind of a natural resistance point, though, soon. So we'll talk about that briefly. Let me give you a second here, and we'll look at Apple. Extremely bullish. Boy, this is almost ready to short here. You can already see it. See, we're at the top of the daily here. We're at the top of the hourly right now. Almost shortable here. If you're a bear, I bet you're getting really juiced up right now, just wanting to short the shit out of Apple, aren't you? And look at Apple with these big, giant green bars. Woof. Woof, Apple. Two price targets on Apple above. First one is going to be 163.26. Let's see if I can show you this here. I'll give you a 30-minute chart here. $163 and some change. Right up here. Make this one red. $169.73. Right there. Make it yellow so you can see it. Make this one yellow so you can see it.
So just looking to a notable trade here is a large treasury options trade this morning, targeted a rise in the 10-year yield of about 20 basis points ahead of Friday's expiry. So premium on the position in April 2023 options is about $6.5 million.
Something like that. trade will be dead if we break below 151.85 right now on Apple. So there's your Apple trade right there. Some kind of a failure to break above back here. Say the price is above with a pullback, 163 and 53 cents, and the next target above after that, 169.
Comments from ECB's one
66 or so.
On both headline and core inflation. Says without the 50 basis points ECB hike, the market would have been worried. Says the ECB can pursue price stability and financial stability simultaneously. So surprised at the resistance of core inflation in last year's report, says ECB's Wunsch, and says core is more sticky than headline inflation. Says euro area has strong banks and liquidity ratios, and adds that if the market stabilizes, the ECB have to do more on rates. So ECB's Wunsch says let's take time on rates. It is still early days, and the risk of a wage price spiral is not high. So again, currently ECB's Wunsch, you spoke in an interview there, did also add that a Fed pause would be one element for the ECB to consider, as the base case is economic recovery, just not very dynamic.
NVIDIA, not even nearly done. So we'll do NVIDIA next. NVIDIA trading off its daily trigger like it's nobody's business. Last week, we talked all about a healthy chart, how it looks, what it looks like, where to buy. Talked about buying on the daily. If you'd bought the daily here and bought the daily here, you're printing fat money right now, right? Bought the daily down here, fat money. We talked about the difference between what Tesla looks like and what NVIDIA looks like. Healthy stock, how it trades, how high does it go? We're going to look at two places for you. 270.88. We're right there right now, 270.88. Right in here. Should see some kind of rejection or some kind of failure to close higher than 270.88. It should trade back down, though, and go even higher. Targets above include 294.40 and then 323.91. $276.41, excuse me. $274.11. Yeah, this could expand even higher right there. 275 right in there. Expect buyers to step back in on NVIDIA. Hold on here. Next buy-in on NVIDIA is right at $250, and then we've got another target or more targets above at 312.38. $23 to $10. You get a break here. If you get a break of If you get a break of 242 right in here, you will go back and close this gap below. There's a gap left behind on NVIDIA between 221.53 and 211 down here. 211 and 223, call it. Right in here is a gap to fill. But this is back where the weekly is. Let's just be aware that you could get more than just this is by the fucking dip. This is by the mother effing dip down here. To continue higher to that target above of 313, I believe. Yeah, 313. Hold on, exactly 313.31 for a target above here on NVIDIA. Now that the call side is printed, I'm watching puts come in on the SPY. In the money, 398 Ps. Got all that supply above on the SPY. On ES, all kinds of supply up there. Seeing the strangle now play out in the market. Market's now got a strangle on it at 399C. We talked about that at the beginning of the morning. And now you're seeing put buyers step in at 398P. And so they've got both sides of this market. They now have cheap call or calls they bought cheaply, and they just bought puts cheaply on the market. One minute bear cross is forming up right now. 10:52, 8 more minutes left until the half hour. Yeah, I was just thinking about earnings, Chase. I was just thinking about earnings season. The trade up into earnings season. $26 Grumpy, thank you for subscribing on YouTube. David W56, thank you for following on Twitch. Stinkmaster Flex, great name, by the way, has followed on Twitch. Mikey Hassan has subscribed Tier 1. Mikey, thank you for subscribing, brother. I really appreciate it on Twitch. Please consider lending your follow through Amazon Prime on Twitch if you can. You can sign up for free. It takes money away from our boy Jeff Bezos and puts it inside Cap's pocket.
Stream is sponsored by
Justin Eli, thank you for subscribing on YouTube. Career low, baby.
Futures, Forex, and stock instruments.
Yo-Yo FH on Twitch. Subscribe or followed yesterday on Twitch. Take a look at Tesla again real quick. I bet all the Tesla bulls are just pumped right now. Tesla bulls trading on a 1, 2, 3, 4 trigger cluster right now. They're sitting. Tesla bulls are sitting on probably the most bullish place they could be right now. If you're looking for a dip to buy in Tesla, as long as it doesn't break that 186, could be a bullish Well, it could be a trap, but it could be a very bullish outcome for the bulls on Tesla. I'm sure they're all talking about it. They're all getting hot and sweaty. You can see that bullish consolidation forming up. They want to see face rippers higher. If you are in a trade on Tesla, just note that 186, not like it needs to hold. Now, if it breaks below briefly, that's not breaking below. Let me bring up Tesla one more time for the Tesla bulls. The Tesla bulls can see this. So, talk Tesla real quick. Tesla on the daily looking bearish. See that? So this is an indication saying that we're not actually bullish here. We're actually bearish. The hourly starting to roll over here too, starting to look bearish. So though Tesla looks bullish here on the outside of everything, let me get rid of some of this stuff here. On the facade of Tesla, Tesla looks extremely bullish. I will say to you that momentum is saying otherwise. Momentum is saying that Tesla is going to price is going to break below 185, 186, and continue its move lower. Now, I want you to be aware of this because if you're long right now, Tesla, you need to see for your trade to be dead, you'll want to see price not only break below this 186, but reject. So just be conscious of this. The rejection trade is where it's at for you. So let's say you're long Tesla, and Tesla breaks below briefly, and you start panicking and you want to sell. Oftentimes you can wait for the rejection trade to then get out of your trade. For the move lower later on, okay? Now, if it breaks below and it comes back up, no problem, holds its pants up and continues higher, you can then re-enter the trade in here. So if you're long Tesla here, there's no problem being long on the outside. At least it looks fine. On the surface, Tesla looks like it's consolidating for an extreme move higher. If you're already long here, I get it. Just know that if you break below, you can always wait for a retest, get out of your trade, and then wait for a move higher, consolidation, maybe even a recheck to go higher here. I'll just be careful in here. There's some underlying stuff saying that Tesla is weaker than it looks on the surface, and it's just down here. Not completely weak, but not the best either. See it right here. You really do want to see Tesla velocity here start to move higher. I can show you that. You want to start seeing some yellow bars here just for confirmation bias that we're going to trade higher here. You don't want to see like this start to develop on the downside, especially on FOMC day. Start to see this stuff develop here in a breakdown in Tesla. You have normal waves in Tesla, right? When you trade in Tesla, you can actually see them. It's not too hard to see. Trading below, trading above, trading below, trading above over here. And it's not quite bullish yet. You want to kind of see you kind of want to see like some development here. You kind of want to see this develop. So another way to look at this with Tesla would be on price. You want to see the confirmation trade take that long right there. You want to see it test and then make its move, and then you're set up with a trade long, and you take it there. Yeah, and price target above on Tesla, as you already know, is like $242. You have a speed bump above on Tesla at 223.26, 223.26, and then 240 and change above. And if you were to measure that move, you know we're going somewhere higher, right? You know we're going to like $300, and then we're going to $350. And then we're gonna go kill some shorts above at 400 at some point, right? But that's a lot of work. That's a lot of work ahead for Tesla bulls out there. That's that no landing. Got all these old school setups going on in here. All these old school setups going on. Got the old bull flag that fails on you in here. Got the old, oh yeah, baby, I caught it down here. And then boom, they slam it down on you. Too funny. Let me have some coffee here. Give me a minute. I'm going to take a quick break here. Oh, you're welcome for the Tesla breakdown.
So Evergrande estimates offshore debt holders to recover 9.73 billion renminbi.
What is Prime video feed? If you're a Twitch, so so this stream that you are seeing here, it streams to YouTube, it streams to Twitch, it's restreamed in some other places as well. Some feeds in Europe, and then some blogs and Discords. So there are different groups of people watching in different places. And one of the places I was discussing on Twitch earlier, so on Twitch, if you're a Twitch subscriber or a follower, you can go to Amazon Prime, sign up for, I believe, Amazon Gaming, and then you can subscribe for free to my channel on Twitch, and it takes $2.50 a month from Jeff Bezos and pays me. It's free. It's a free way for you to support the channel. A very easy way to do it. Now, YouTube doesn't have anything like that. Well, so those are for people that are on Twitch. I think that Winky can describe it better than I can. Oh, no way. So I was offered partnership this week, Winky. Should I take it or no?
ECB's Visco says credit growth has stopped in Europe. The most important thing is to avoid a credit crunch. ECB's Panetta says banks will pass on rates more than in the past.
Should I take the partnership, do you think, or no? Yeah, I would have to stop streaming on YouTube, wouldn't I? I forgot about that. Yeah, I remember that. I forgot about that. I have to bail on YouTube. I heard of some, what some people were doing is they were doing 2 streams. They say that I could get people were saying I could do like a second camera setup with a second instance of Streamlabs and just separate both of them, and they're both now like a camera's on one side and a camera's on this side. And then it is 2 streams. Technically, you get away with it. Then some other people were saying that the language is vague on exclusivity. And then other people were like, well, you try fucking around, then you'll find out, I guess, won't you? So we could also monetize YouTube, and people could sub to you there. Yeah, I haven't thought of that either. I haven't done any kind of monetization. Well, what's funny too is that I went through the Amazon affiliate program for books, like the books that you see there, and I got kicked out yesterday because I didn't post the links inside of the website. So I have to like post them on the website. But the funny part is the amount of time that it took to be approved as an Amazon affiliate. Now I have to go back through the entire process again. And then I looked at what I made on Amazon Prime for the books. It was like $1.50 or something in total. So I was like, is this even worth the time? Probably not. Probably not worth it. Yeah, the answer is clear. Don't take it. Yeah. Yeah, I agree with the partnership stuff. Well, that's what some people are saying. I watched a couple videos on YouTube, and some people were like, don't take the Twitch partnership. Yeah, Joe, I was gonna send. I was gonna have Mrs. James send you those links. I haven't talked to her about it yet. She's gonna be upset because she's the one that actually did that work. But I have to go tell her, hey, you gotta redo all this stuff, and then I want you to send these links to Joe to post. Yeah, I agree with Winky here, though. Twitch is ultimately better for streaming. I'm gonna agree with you, Winky. I have to say that. If you're on YouTube, you got to give Twitch a chance. There's some real positives on Twitch. There's some things I don't care for right now. They don't save your videos, so that it would add an extra layer of work. I'd have to record each live stream and then post them to our website to store, right? Because right now they only save 6 days worth of videos. And then, I think we'd have to figure something out to store our own videos on the website, I guess. And I think maybe that changes as time, or if you get enough subs or something, maybe they let you keep them on there longer. But the storage is an issue. YouTube's like, hey, we'll keep whatever you want, which is kind of nice. But the Twitch functions are awesome. Like Twitch, like the functions that they have, you can like remove a screen, remove the chat. You can play it in the background while you're doing something else. You can just listen to the audio and then just watch the chat. There's a lot of options on Twitch, at least, that YouTube just doesn't have. Functionality, I guess. A lot better interaction, that kind of stuff. Oh, you did? Oh, okay, so they can't watch them. So on my end, it says it deletes my videos after 6 days. So I'll have to find out why it says that. Right now it says 6 days, they delete videos. That's what it says, at least. Maybe I'm just reading that wrong. Is it a time limit setting? Yeah, I don't know for sure. On the back end, what I see is your video will be deleted after 6 days, or it won't be saved any longer. And I don't know the answer definitively. I'm still extremely new to Twitch. If it's like going to YouTube for the first time ever. Uh-oh. I've got an error on YouTube. Hold on a second here. Stream health. Having some, matter of fact, I'm having some YouTube streaming issues right now, as a matter of fact. Are you experiencing anything? If you're a YouTuber right now, are you experiencing any kind of stream issues? Still good on your end? So on my end at 11:09, it just said YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience buffering. If you see any issues on the YouTube side of things, let me know and I'll reset the entire stream. I'll reset my router if I have to, and my not my router, my no issues on your side. Okay. Just let me know because we don't want to be middle of the rate hike and not be ready for it. Hey, Winky, is it possible to see what you guys are saying here? Wotan123 is asking, do you have a video for your chart setup? Yeah, Wotan. Every morning I post on @CaptainsAlpha, a private handle on Twitter, the levels for the day. So if you follow that Twitter handle, it's a private handle, but I'll let you in. I just try to keep the bots out of there. And every morning, well, most mornings, 98.8% of the time, you'll get the levels every morning for the major indexes. You can pop those into your own trading platform. And then if you show up every morning at 9:30, most mornings around 9:30, 10, I come on stream and I set the chart up with you. You'll see the levels usually are already there. And then I tell you where the implied move is. I'll tell you where support and resistance is on velocity and triggers. And so you should be able to follow along at home. Good question. I got you, Wooten. Yeah, follow on @CaptainsAlpha and show up early in the morning, and we'll get you all squared away. Another thing, Wooten, would be here if you're new to the channel. If you're new to the channel, Wooten, you definitely want to join the Discord. There are some admins and moderators in there that'll get you all set up. If you want to follow along trading every day, trade against me, do whatever you want to do. But it's a way for you to integrate yourself into the community. Same thing goes for YouTube. There is a Discord invite for YouTubers out there. Yeah, the YouTube error message is sponsored by Twitch, right? Fernando's asking, am I anti-Bitcoin? No, not at all. I was an early Bitcoin adopter. I sold way, way, way too early out of Bitcoin. But if you want to see BTC, we are in talks right now with some people, so that we're going to start doing recorded videos every day. It'll have full market coverage, so you'll see every night. You'll see coverage of Bitcoin. Hey, thanks, Eugene. I appreciate it, man. No worries, brother. I appreciate you subbing through the Prime sub, even though you're watching on YouTube. Foresight Finance saying that he's blocked on Discord. We'll try to get Foresight Finance. I don't know what your situation is, but what I would ask you to do is to try to contact one of the mods. They're trying to restructure, unbanning people, giving people a second chance. So definitely check back with those guys. Yeah, the Prime thing is kind of weird. You go to Prime, like Amazon Prime. You go to gaming, and then I think it's like Prime Gaming, and then you look up for Twitch. Like just do a Google search, Twitch Prime Gaming or something on Google. It's CaptainAlpha or S, Captain's Alpha, @Captains with an S. I'll post that for you right now.
U.S. House Financial Services Chair McHenry on recent banking crisis after failure of Signature Bank and SVB says it's too early to tell whether new legislation will be necessary.
Also, Cap, if you can enable that setting in Discord, we can become Discord partners. What did I miss there, Winky? I missed something from you, brother. So you want me to enable partners? Which setting in Discord, Winky? I missed some of the chat. It must be a thing. I had like years of video in mine. Winky saying years of video in his. Must be a setting. Time limit? Is that what I want me to do? The time limit setting? Two-FA. Hold on a second here. Oh yeah, two-factor authentication. Roger that, brother. Two-FA for moderator. Got it. Hey, Peugeot 81, thank you very much. I appreciate it for subscribing with Prime. Peugeot 81, I like that name. Eugene Park, baby. EPEZ 12, subscribing with Prime. Wooten 123 followed, and 26 Grumpy followed and subscribed on YouTube. B Slim has followed on Twitch. Thanks, B Slim. Appreciate it. Stephen H is saying, "Hell no, YouTube is way better." So Stephen H, what are your reasons? I've heard both people have preferences, with valid preferences. Why do you think, Stephen? Why do you think YouTube's way better? Let me know. I'm interested to see why you think so. Yeah, the Twitter handle is private, but all you do is follow it, and then I go in every morning and I let everybody in. So my public handle. There's a lot of fake CaptainJimJames handles on Twitter. So I have a regular handle on Twitter. You can just Google search me. It's CaptainJimJames. My Twitter handle itself is kind of wonky. It's at JimJame748888138, but it gets copied with scam accounts, bot accounts all over Twitter. And when I have a private handle, I don't get that those scammers inside of that handle. So I have another question for you this morning as we wait the decision. I have some other stuff for you out there. Hold on, I got a bunch of stuff to do. That's the other thing that I did. Totally forgot about this. I took the advice and I canceled. Matter of fact, I have to request a refund. I canceled the pay for scroll down here late last night. It was irking me so much. I'm like, fuck that. I'm like, I'll just get some defined RSS feeds. So I'm like, I'm gonna cancel this. Now I gotta track them down and be like, I want my money back. I paid $20 to have every 15-minute updates on my data scroll, my news scroller. I'm like, you know what? I'm like, they're right. What am I looking for? Hang tight here. There we go. Yeah, Deckhand Dougie is making a very good point. Twitch, the one thing about Twitch is that the live feed is not delayed like YouTube. And the gamification of Twitch is fun too. I agree with that. Yeah, this is the first day with first Fed day with me on Twitch, isn't it? You know what? I didn't think about that. It's the first time Yeah, Nino's making that same point right now. See if I can go in here and see. Having some YouTube issues in the background. YouTube's all angry right now. YouTube's not happy at all. Let me see what they're saying. Is it worth the extra cut they take? I get if you don't make much off of subs and members, but when you're making lots of members regularly, then YouTube is way better. Yeah, I agree with that statement, Steven. The weird part, Steven, is that I really want all subs to, like, at some point I'm going to have to delete, or I'm going to have to cancel all the subs and direct everybody to a website so I'm not sharing subscriptions with Twitch or YouTube. That's what we're working on in the background because we pay so much out to PayPal, to Twitch, to YouTube. You're like, the split is insane. So at some point, the subscriptions will just move over to our website. So you have direct support. Yeah, I agree, Steven, 100%. Saying YouTube equals traffic equals growth. That's a huge difference. People get a lot of subs or members. Just saying. Yeah, I agree with you, Steven, 100%. Dude, I don't make any. I was going through my numbers. It's weird. Like YouTube, they really like YouTube is like they love a recorded video. Like, so I live stream every day. If I were to just make a video every night, they would be much happier. I'd make way better revenue if I was doing recorded videos. Like live streamers on YouTube, they're just like, fuck you, go get out of here. It's kind of weird. They love like people being able to come back and scheduled recorded videos every night, that kind of stuff. Yeah, like even how they set it up. Yeah, I saw the shadow banning. Who was talking about getting shadow banned? Trading Fraternity at one point talked about getting shadow banned on YouTube too, right? Yeah, Ricky T is saying he remembers to check out the stream when I tweet it. Casey Capshaw switched to Twitch. What if I schedule? Yeah, so we're gonna build in the new website's gonna have it built in, like scheduled live streams on. You need the SEO for all that stuff. So as soon as the website is live, it'll be scheduled. You need like the cross-platform schedule, but still it makes no difference. Still makes no difference. Now, if you look at what live streamers on YouTube capture for an audience versus what recorded videos do, it's completely different. Way more revenue posting on YouTube videos, absolutely. Because they stay relevant. Like people come back and watch them. They'll watch them the next day. They'll watch them a month before. If you add in videos like classes or if you add in videos about a topic, people will come back and check on those videos for years. Any of my recorded videos have like 15,000, 30,000, 40,000 views. 60,000. I've got one 4-clip series. Matter of fact, I got another video on another handle that got 70,000 views in a day or something stupid. And I stopped posting there, and it was all recorded videos. Recorded videos are key, clutch. There's a weird algorithms in the background. Coffee Shop John subscribed on Prime. Thank you, brother. Casey Capshaw, Stephen Williamson subscribed on YouTube. So let me ask you guys a question. If Winky is listening right now, Winky, I still haven't figured out how to do a Streamlabs, Twitch, and YouTube poll. I don't know why I haven't figured that out. I don't know why I haven't figured that out yet. Like the Streamlabs bot poll. And write that one down too, because every day I forget to do it in the morning. But if you could ask a question to both Twitch streamers and YouTube streamers, ask them, do they think we get 50 BPS, 25 BPS, a pause, or a cut today? I'd like to see what everyone thinks about that, the results of that. I'm interested to see what the sentiment is here. Johnny Roast Beef subscribing with Prime, baby. Says hype train, sub, gift, or use bits to get to the next level. Yeah, Chase Winter's saying we should grab some call spreads for say tomorrow or Friday, like 408, 410, if they do the vol crush pump. Yeah, Chase, I think it's on the table. I think what you're looking for today, Chase, is this will be the deciding factor down here. So we want to be watching for if we get weakness down here, is it just a buy the dip, vol crush call spread for Friday here? Or do we blast down below this implied move and hold below it? If we hold below this implied move down below, probably not a good bet to take call spreads into Friday, but I agree with you. Chase is saying to you, hey, we don't want to get caught in repricing of options. But if you do want to grab those call spread, vol crush Friday calls, it all matters. What matters here is we have time. Well, first off, we have time. We know I'm going to guarantee you, unless it's something crazy unless you hear something crazy like we're cutting or pausing rates, which would probably get leaked early. Unless it's something like that, you're waiting for that vol to come in after. Let's say we get 25 BPS. And everything seems honky-dory, right? And you get this little face ripper up here. And then as soon as let's hold on a second here. And Chase is asking a fair question. So, you get that face ripper up, this failure, and then all of a sudden you see everyone's all bullish. And then we come into the presser part of the day. And you see that bleed off, and then you see the horrible questions coming in. And it's down here that you want to be paying attention to. Like after that 2:30 hour, you want to be paying attention to, do we slip under here? Or is it some kind of a buy up into the bell? And that's kind of where you're looking at for that call spread vol crush into Friday. Timing on that, Chase, is going to be important. No worries, Wink. Another issue is what Volwiz showed on Twitter yesterday about how you get big down moves after expiration on OPEX and FOMC. Yeah, that's my one concern, Chase, is where VIX is, right? We want to see VIX come up today. So you want to see VIX crank today at some point. You do need to see VIX crank. If you don't see VIX crank, there's an issue. VIX will go hand in hand with today's moves. I agree with that as well, Chase.
US Senator Warren asks the Fed to crack down on large regional banks, according to CNN.
Yeah, I think ultimately this switches over to. I think ultimately, we're gonna. I think on our side, ultimately, we're gonna scrap anything from like associated with Twitch and YouTube in terms of subscriptions, and just roll it all over into the website. So if you're like, hey, I want to support the stream, we have an option for you. Just go to the website, and you can sign up for a monthly subscription. It's like $5 or something, $2, whatever it is, and then you get invite links to any extra content, that kind of stuff. Yeah, I think you have to hit. I think you have to hit I vote. Right? Is that what you have to do? You have to do it, not I. Sorry, you have to do exclamation mark and then vote, and then it'll allow you to vote on the where do you think that we're going in the market. All right. So next question for you. Trying to get all this stuff. We tagged the H line. That's done. Next target above, 436 on the market. I've got some questions for you here. I want to go over one quick thing here. Just a second here. VIX getting a little bit of a bid here as well, even though we're going higher. We get the Fed rate decision at 2 p.m. We've got Fed chair presser at 2:30 p.m. On Thursday, we've got claims at 8:30, continuing claims at 8:30. So, that's the other thing here, Chase, is you've got more volatility, man, tomorrow morning at 8:30. That trade might not be until early morning on Thursday. Friday, we've got durable goods. Bullard speaking at 9:30. We got durable goods at 8:30, and we got Bullard at 9:30. We've got U.S. services PMI at 9:45 on Friday as well. Man, this could kill the market, right into the weekend. And then maybe next week it comes in. We got nothing scheduled for Monday. We've got advanced retail inventories on Monday. Case Shiller. U.S. consumer confidence at 10 and at 9. We've got the FHFA home price index. Pending home sales on Wednesday, and then we've got the 30th. We've got GDP second revision claims on Thursday as well. Continuing claims. Then we've got on Friday, we've got personal income, PCE, core PCE. Those have made a difference. That's next Friday, the 31st. And don't forget, next week, we have some kind of volatility coming with Senate hearings where they're going to try to explain away what they're going to do to backstop or change these banks. Give them new rules on how to steal money from the poors. Now I want to ask you. I was going through my. I want to ask you out there. I was going through my tweet deck, and I deleted all of my tweet deck, and then I don't like what I replaced with. What I followed on tweet deck. Let me go through this and remove these two. Remove this one. Remove this one. Remove this one. And I wanted to refresh my tweet deck. Remove. Okay, so on TweetDeck, if I was going to follow somebody on TweetDeck, I'm going to ask you, but if you have TweetDeck open, for people that post on Twitter, and I don't mean shit posting, I mean either news, market news, or I don't know, they trade the SPX all day long, and they're in, out, in, out. Who are your favorite follows on TweetDeck or on Twitter? And I'm gonna watch these people for a week and see if I like them or not. Or not like them, but does it help to have this? Because what I'll do is I'll read their stuff on stream here. So let me know in the chat who your favorite Twitter follows are for live market coverage. And I'll add your favorite follows. RT Gamma. Here, let me look up RT Gamma. Try to put an at in front of it so I can find these people. I think I follow RT Gamma, but I'm not sure. I see a bunch of different RT Gammas here. Nope, that ain't him. I like Froggy Trade. I follow Froggy Trade. Froggy, you know what? I have never had him on my I've never had him on my tweet deck, and I like him. He does a good job. Yeah, we'll add him in there for a little while and see how he works out in there. I always like him. No, Adam Mancini doesn't do it. Doesn't meet muster. He doesn't do. I don't think he does anything like I don't think he does anything that's like he does like market, like, you know, we're here, we can go there, we can go there. At Grateful Trading, I follow him. I like him too. Yeah, I mean, Mancini is kind of like a guy that he does like a market brief in the morning and at nighttime, right? Yeah, short seller ST is my boy. I like that guy. I don't see at Grateful Trading. I don't know why. Maybe I'm spelling it wrong. I gotta be spelling it wrong. But I know I follow him. Let's see. Nope, I'm not seeing him either. Maybe I'm not hitting the trading. Nope, not seeing him either. Short seller ST's badass though. See, at Mark Dow. Don't know him. I don't follow him. We'll look at his account though. At Mark Dow. At Mark Dow. he says today, whatever the decision today will be the dumbest one in the history of central banking. And he shows cat pics. I like that too. And dog pics. Yeah, no, so I've got no issues with Mancini. Let's go back to the original question. let's not get on a tangent here. I'm trying to rebuild a tweet deck. So I'll keep up like 6 columns for people that post I don't know, market news or actionable, like where they're trading at that moment. I don't care about after action reports. I don't care about market briefs in the morning. I don't care about any of that kind of stuff. This is for me to read to you guys in live stream. So if someone's I know Froggy Trades does that. He's like, I'm long, I'm short, I'm out, I'm flat. Fuck this market, I'm taking the day off. That kind of shit's like shit that I'll read to you and be like, hey, Froggy Trades is doing this today. Yeah. Yeah, I like Mark Dow. I'm looking at his stuff right now. I'm looking at his stuff right now and I like what he posts. He's got like dog pics. He's got weather stuff. Yeah, I got nothing bad to say about Mancini. But his tweets are, they're not really actionable. Let's see what you guys got in here and YouTube. Alpha DM for us. Did you check your Alpha DM? No, I will though. I'm friends with Volwiz. He's awesome. At Max Anderson. At Max. I don't know him. Let's look him up. At Max Anderson. Let me see if I got that right. At Max Anderson. I don't know if it's at Max Anderson. Maybe it is. I don't know. Nope. He's from 2023. Nope, not that guy. Nope, I can't seem to find him. You might have the. I don't know who that guy is. I can't find him on TweetDeck at least. At Jim Cramer. Theta Warrior, I like him too. And I like VV Vault Disney too. Hey, buddy, what's up? Appreciate it. I'm reading what you guys are saying right now in the chat. It's hilarious. U.S. Senator Warren has asked the Fed to crack down on large regional banks, sources at CNN say. Crack down on the rules they were following. Oh, you gotta love it. You gotta love it. You gotta love it. We got NVDA trading like a penny stock, trading 271.58. We got Apple with a new high at 160.49. TLT with a bid today. Fascinating to see. Goldman Sachs looking like it's going to have a bloodbath right now. So check out Goldman Sachs right now if you can in the back end. Bank of America just blasting down right now. Q's retesting a high with a new high at 311.98. Credit Suisse. Oof. Ooh. Man, Credit Suisse. XLU hanging out down lower. Meta, bullish, baby, bullish. GME not able to hold itself up right now in that consolidation phase we talked about earlier. Just looking for that consolidation in GME right now. We'll see if they actually get it or if it loses momentum. XLF, man, be careful here. I'm warning to you right now that XLF is looking like it's about to crash. So be careful on the SPY right now. This can be very detrimental to the SPY. Just a warning to you. XLF right now is extremely bearish at the moment. Same's going on with KRE right now. We've got regional bank panic setting in with that comment from Senator Warren. Is she a senator right now? So yeah, she is. I stopped paying attention to her. XLP getting a bid where XLU was kind of like some rotation from XLU to XLP. USO pulling its pants back up. INTC looking a little bullish here. Man, FRC looking pretty rough right now. Wall's doing okay in the regional bank side of things. HYG, interesting, right? Watching that big bid on HYG into yesterday's close, and then not so much today. We'll take a look at HYG in the back end here. Amazon, Virtual finance. What's going on with virtual finance, man? VIRT. Netflix, not showing bullishness like it should. Snap, still bullish, consolidating, looking for higher highs. DIA, not looking too sexy right now, is it? DIA is looking shortable. BBBY still can't pull its pants up, of course. You're seeing BBY with retesting the lows from yesterday. Oh, UNG. Oh, man. Let's get our gas lottos on. Look at UNG. I bet you're all pumped on UNG right now. Let me look in the background at UNG. Nope. No. I got nothing for UNG. I guess the UNG crowd, though, is probably thinking there is. I don't see anything yet on UNG. It's got more work to do. Man, look at the... I'd be watching CVS. Now, right now, it looks like dog shit. But I like the consolidation in CVS. Yeah, keep your eyes on CVS. It's going to need some time to develop. SMH. Semiconductors, man, still bullish, baby. Still bullish. Snowflake, another one worth watching. Snowflake, I like Snowflake right now to some extent, but there are some tight stops on it, right? But you can see demand coming in back on May 27th of 2022, again on 11/07 of 2022, and then January 4th of 2023 on snow, worth at least watching in the background. Yeah, that's right. NVIDIA and Apple's holding everything up right now. Like smoking a cigarette and drinking whiskey while doing the rings. Meanwhile, you've got XLF just bloodbathing it in the background. I mean, look at XLF. Can it get a bottom, please? Let me look at XLF on, see if XLF is any kind of bottoming pattern here or not. Well, let's take a look at XLF. I'll say this to you. I'm going to say this. So XLF just bounced off of its hourly trigger. Its hourly trigger's at 3171, and we just tagged 3172. If you see XLF at any point break 3172, it's on, man. It's ugly. That should be bottom on XLF. Like right where we are right now, that should be bottom on XLF. This is the dip to buy. So let's look at XLF real quick. Let's mute Bookmap. This is either going to be a positive for the market or a really bad thing for the market. So XLF. Let's look at XLF. Worth at least paying attention to. So XLF, such a gross. Man, look at that bearishness in XLF. I guess 67%. I mean, I don't think you can get any more bearish, right? On XLF. The one thing I'll give to XLF is this. If it can hold here in its hourly, it has to hold here. It's worth paying attention to. Just keep an eye on it here. 3171. It has to hold. You want to see the 1 and 5 minute get under here. Kind of give it a lift up. So we'll look at this on a larger time frame. So just on a larger time frame, even for all the bearishness, this is what I want you to pay attention to. Is, you have extreme bearishness in XLF, right? I just want you to look right here. And the way that XLF has been moving, You can see right here, it starts to become bearish. And then we get a nice little lift up, right? See how we come up here? And if we can see any
Energy
kind of
trader Gunvor is to
consolidation
expand
come up in
US
XLF,
oil and power trading after strong profits last year, according to the CEO.
could see, this might take some time, but even so, like it's a bottoming process. So just the only thing I'd say to you on XLF would be, even though it looks extremely bearish here, you can see we have higher lows on velocity. Just pay attention to it. If you see this consolidate here and we don't break below that right here, this 31.72, if you can see any kind of consolidation in here, and you can see this daily coming down here, if hourly can take price above, I'd be interested in it above 32 bucks. And worth at least watching here. It's at least worth watching if the hourly and the daily come together. And so if this hourly comes together with this daily here and price starts to move higher, it could be looking for a pretty significant squeeze. Just monitor XLF here. Could be some bottoming action in XLF, even with all the bearishness on it right now. So if we're looking at XLF, so for all that bearishness in XLF, no interest in consolidating below. So if it starts to trade down here, I got no interest in it. I got no interest in catching that knife either. If you look on a 5-day chart on it, I've got no interest in catching knives down here. And I got no interest in this down here. But with that being said, this is constructive. It doesn't look constructive, I bet, to you, but it is kind of constructive. The one thing here on XLF would be $33.75. $31.75. There is a trade in here if it stays above. Now, if it breaks below, it's bad news. This is like bad news down here. And there's some really vicious daily coming down here. So my point here is that 33.70, yeah, right up in there. If it can kind of try to get back up in here and the daily can come underneath, there might be a retest down below here. No guarantees in this trade. Something to watch over time. If it can hold its pants up here, something like this. Now, if this starts breaking down here, right, the trade is dead. I have no interest in catching knives down here. I would be interested if it can show itself, it comes back down, retest, and then maybe take this trade long. We get up here. Now, some kind of rejection because of the daily coming down, right? And then daily would sweep underneath. The hourly would come up underneath. Then you'd have the white and the red line right here and possibly pick this back up over here. XLF, it's at least worth watching. Now, if we have a bad day in the market with Jerome, all bets are off. All bets are off because this can go the other way. This can become a yeah, fuck you, we're out of here. We're going way down to the depths of hell. We're gonna print $20 because there is a target down below at 20 on XLF, but just be aware of it. There is a bullish trade in here somewhere on XLF. Now bulls need that too, right? Bulls aren't going to get higher without that trade developing over time. Coiling, nothing going on in the SPY right now. No movements at all. It's now 11:56. We have 2 hours until chance to buy calls down below, chance to buy puts on the high up here. So you don't lose too much on theta burn as we head into the Fed rate decision. Let me see if I can read anything coming out of Twitter right now. I'll give you guys a quick update on Twitter. What was the Winky? What was the Yeah, XLF's got to buy. They could still go down a little more. There's a larger trade chase above. Once we consolidate and get above the hourly and the daily, there's a huge move higher there. It's going to take some work. Poll closes at 12:50. Right on, brother. No. Leave it going, man. I think 12:50 is great. I think my only concern between now and then would be, does the market start to make its move higher here? Does the hedges start coming off now, or not? But no big deal. I'm going to look for myself here for maybe a trade. We got 402, 402, 402. $1.43 right now. I got 392 puts still. And I got 365s too. They expire today. 142 for 402. All right. I'm going to take a quick break here. I'm going to leave this up with you. I'm going to leave the live stream on. I'm going to put on in the background. I'm going to put on some news in the background here for you. Hold on a second here. I'm going to take a quick 15-minute break. I'm going to go potty. Hold on here.
It's submerged in the depth.
Forward to working toward a final solution with relevant stakeholders on the details of these plans.
Nah. Just a second here.
%84 probability of a 25 base point hike, but that's actually below the 100% level that we usually go into these meetings with on the day you have an announcement. The Fed is expected to hike 25 basis points. You can expect the Fed chair to say banks are well capitalized and talk perhaps.
I'm going to leave this on. I'm going to take a 5-minute break. I'm going to go potty. I'm going to grab, do I need to grab anything for this?
And he might, and this is the key here.
Probably some more water.
About future move. It is in the guidance where all the action is likely to be in markets today, and there could be some sharp reckoning in those markets depending upon what the Fed decides and what Fed Chair Powell says. Here, the market is priced in the chance.
I saw that, Mr. Talking Monkey. Eddie Temple, layer cake. I like layer cake.
So there could be sharp rate movements for a market that is priced right now. There's the 440 again.
Yeah, T.
And a Fed that currently predicts that year-end will be 513 and could today
turn up the volume, please.
Up again
okay.
537. With the question also if stocks are baking in cuts and are unprepared for a Fed that still sees itself batting inflation in the year ahead. The key is going to be listen.
I'll be right back. Give me 5 minutes.
And how much concern he expresses about the potential for the recent bank turmoil to drag down the economy, growth, and reduce inflation. That is, how much of the Fed's goal to reduce inflation is accomplished by the banks? Frank?
Steve, stick around. We know you got a big meeting at 2 o'clock, but I want to have you stick around so we can bounce a couple things off you really quick. I want to bring in the committee right now. Liz, you're sitting right here to my left-hand side. Steve broke out some numbers. 83% chance of a 25-point hike, 17% chance of no change at all. What camp do you fall in?
First of all, I don't think we can separate monetary policy and financial stability at this point after the events that have occurred over the last couple weeks. I think they are now hand in hand, and they're going to continue being hand in hand until we finish this rate hike cycle. Steve is absolutely right that we usually come into these meetings with a pretty clear idea of what we're expecting. I think 83-84% is still pretty clear of an expectation. What's going to be the risk, and I say this every time that we have a Fed meeting, I mean it even more today. The most dangerous time to trade the market is between 2 and 2:30 p.m. Eastern time. You get the data at 2, you get the dot plot at 2, you get the economic projections at 2. He starts talking at 2:30, and almost inevitably we reverse whatever that first move was. So this is a time where we literally have to sit on our hands, watch it happen, listen closely. I think that probably there's an excuse to do both things. What I would say the responsible thing to do here is to pause, say that we're waiting for more data, leave it open to possible hikes later on, find out if this does have as much of a disinflationary effect as they're expecting, and then do it again. I don't think that that's going to be the case, though. I think he's got clearance to hike by 25 because of the rallies that we've seen over the last few days.
All right, Liz Young, 25-point hike. Wait and see approach to trading until at least after 2:30 Eastern time. Joe Terranova, where do you stand?
Well, I agree with Liz. The market has given the Federal Reserve the opportunity to raise by 25 basis points. That's clear. I still go back to the experience of the Orange County bankruptcy in December of '94. The Federal Reserve raises one more time after that. Then by the middle of '95, they're cutting rates. I also believe that the rally that we've witnessed in the market now introduces an element of surprise which previously didn't exist in the last several days. Now the surprise is if the Federal Reserve is far more hawkish than we are expecting, then you will see a dramatic impact on the market and obviously a negative one for that. What they should do is really sit back and pause. I think, as I said the other day, they're going to be criticized in either direction. If he raises 25, he'll be called Jean-Claude Trichet. If he does nothing, he's Arthur Burns. So he's going to be criticized in either direction. But I think...
Can I ask Joe and Liz, who are arguing for a pause, and in my presentation just a minute ago, I talked about the potential, and I don't know that's going to happen, for the Fed to ratchet up the outlook for 2023 to 537. Guys, if you have that 3-bar chart in the back that I used earlier, that's a potential. It wouldn't take only a couple votes to go that way. And I just want to know, Joe, does the market freak if the Fed goes the other way and said instead of a pause, it really says we're going to do more this year?
Yeah, that's the surprise, Steve. That's the hawkish surprise, given that the market has rallied 4.5% for the NASDAQ and the S&P basically 3% in the last 5 days. The market is not prepared for that. I also think what it doesn't do is remove the most important condition for the market, and that's the interest rate volatility. How do you relax the interest rate volatility? That's really significant. Last point on all of this is understand the stress in the mortgage-backed security market right now. That is extremely intense. Silicon Valley Bank has $58 billion in MBS that if they want to raise liquidity, they're going to sell. So they're going to sell alongside the Federal Reserve. How is the Federal Reserve at this meeting going to address that? The need to sell MBS to raise liquidity at a time where the Federal Reserve is no longer the marginal buyer for these mortgage-backed securities because they want to sell with them.
Right. Steve Weiss, give me 1 second. While we still have Steve Leisman, we're going to lose him in just a few minutes. Steve Leisman, I just want to run on your point for a second about possibly the Fed continuing its rate hike strategy. I know there's 5 new voting members this year. They all been with the Fed for less than a year. Are those the wild cards you're talking about that might lead to this outcome that a lot of people aren't talking about?
I think there is a potential wild card. We got 5 freshmen voting this time around. We've got Barr and Cook and Jefferson on the board, appointed by Biden, and Logan from Dallas and Goolsbee. They've all been with the Fed less than a year. They've all been at the Fed during a time when we didn't really able to answer the question, are they hawks and doves? Because everybody was a hawk. Inflation was high. The Fed was hiking aggressively. Wasn't any question. Now there might be a question. On the other side of that business of we don't know, and there could be some uncertainty about either the vote today or the dot plot today or speeches in the future, whether or not they're more concerned about the disinflationary impact of the banking system. There's also Powell, who is, by the way, statistically, he is Mr. Consensus. We looked it up today, and there have been fewer dissents on a percentage basis with Powell than there were under Greenspan, Bernanke, and Yellen. I don't remember the number of votes, but it's only 3%. It's half of what it was for Bernanke and Yellen, which means he will change the statement or do what he has to do probably to keep more people on board. So there's a lot going on behind the scenes.
Steve Leisman, give us a second. Let's get over to Steve Weiss and give us like 5 more minutes. I know you got to get out of here soon, but give us 5 more minutes. We want to get your reaction to somebody I don't think anybody calls Mr. Consensus. Steve Weiss, we got to get your take. And Steve Leisman, please stick around.
Well, thank you for properly identifying me as an opinion leader.
That's ECB officials claim vindication.
So, look, here's what I say. The Fed is going to go 25, I believe. If they don't go 25, the message that they send is that, hey, maybe these banks are in trouble.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
And the people that can least afford rising prices. So I think they do go. But the message really will be in the dot plot. So what is that going to tell us? That's what you've got to look to. And I do believe that the Fed's got a dual mandate, which is employment and inflation. So they're going to pursue their policy along that. Now, they're also responsible for the financial health of the banks. But I don't believe that's an issue right now. You have two notorious examples, one principal one, which Silicon Valley Bank, of poor risk management. It's not up to the Fed to make a policy decision based upon their poor risk management, particularly when it's not JP Morgan or B of A. So I think that they go ahead. I think that the hawkish dialogue continues. I think it's kind of asinine to believe that in 6 months the Fed's going to start cutting rates. It's usually a year after the last increase. So that's my view. Hopefully I didn't disappoint you, Frank.
Steve Weiss, you never disappoint me. Steve Leisman, we still have you down there in D.C.?
I am still here, sir.
What's your take on what Steve Weiss had to say? He's saying inflation, insidious, and that's what the Fed has to make its #1 priority.
Yeah, well, first of all, I wouldn't call the market pricing asinine. I would call it confusing and perhaps not correct in the sense that you look at that rate outlook chart and you see those cuts built in. I'm not sure it's the right call here, but really what it comes down to is two things that we don't see. We can't see the flow of money in the banking system. Powell can see that. If he sees that there's money still fleeing the regional banks or some of these other banks and going into, he might be more concerned than we are right now because he's seeing that flow of funds right now. The other thing is that we don't know what the ultimate impact is going to be of what people expect to be tighter credit standards. Ultimately, Steve, that is a disinflationary impulse to the economy. It has always been less lending. It might mean, by the way, higher interest rates for your loan, but that also means less borrowing, and that could mean fewer jobs and less inflation down the road. So we don't know that. He's going to have to take a gamble with that he can deal with that later when it appears and not preemptively.
Steve, it's Joe. So on the surface, the debate ranges 25 basis points or a pause, but the real stress is on balance sheets. How does the Federal Reserve Chairman address that? How does he address my concern with mortgage-backed securities? Do you think that he's going to give us any guidance on what he may or may not do with the balance sheet as we move through this?
So, Joe, I'm not sure that this solves your problem with mortgage-backed securities, but remember, the Fed is offering you a one-year loan at par, not you, offering banks a one-year loan at par for your mortgage-backed security, right? At the one-year OIS spread plus 10 basis points is the rate, so it's like 470, 480, something like that. Maybe a little bit lower today because of what's happened. But in any event, you can take that on your balance sheet and you can finance it for a period of time that removes the concern on your balance sheet, at least for now. I think that he takes the information that he has about what's happening in the banking system, tries to overlay that on the system, Joe. I don't think he's gonna panic here, and I don't know what to do with Steve's idea about you don't want to show panic. Look, if the house is on fire, you call the fire trucks, no matter what it shows about what's happening inside the house.
Right. All right, Steve Leisman, we got to leave it there. It's been a good time, not a long time. We know you got to make your way over to the Fed. Thank you as always for joining us. All right, so Steve Weiss, I want to come back over to you. You're saying inflation is the #1 thing they have to tackle.
This stream is sponsored by Tick Strike.
Right now, we know
Tick Strike allows you to actually hear order flow futures, forex, and stock instruments. Get a free trial at tickstrike.com.
About the house on fire, isn't the house smoking at least right now?
I don't believe it is, but obviously Powell's a lot more informed than Steve, than anybody here, because he's seen the actual flows. All I can key off of is what we've seen so many bank CEOs come out and say. We're picking up deposits. We know that's true. We can see that the equity market has rallied back, providing some comfort. Because while the Fed doesn't care about the equity market, people do when they hear it every day. Oh, the Dow finished up higher. Oh, Microsoft's up another 3%. So then that gives them some comfort. So my bet is that you don't see a disaster, you don't see stresses in the bank system, and that the Fed gets back to or stays on course with inflation. Now, of course, if Powell's seeing something different, which he could be, although I ascribe a small chance that, then they should pause, right? Because you don't want more runs in the financial system. But where are you going to go? You can go in treasuries. We saw a big move in treasuries. We saw rates. We're seeing rates move back up, right? So the 10 years move back up. So I still think it's focused on inflation. And going back to cutting rates in 6 months, you don't want that to happen. Because if that happens, that means the economy has gone into more of a tailspin, right? And the Fed has to react by cutting rates. So, and I don't think that's going to be the case.
Well, that tailspin metaphor, you're not the only one putting it out there. JP Morgan's Macroeconomic using that same kind of unsettling metaphor, saying a soft landing now looks unlikely with the airplane in a tailspin and engines about to turn off. Liz Young, are we at that point right now? And if so, is a 25 basis point hike, is that the answer?
I don't think we're in a tailspin now, but I disagree with Steve in the sense that I do think that there's smoke coming out of the house. These analogies are going to drive us all crazy. But look, it may be the case that we don't see more headlines of the same nature, right, of the deposit fleeing nature. It may not be that it's regional banks, but I do think that this was the beginning of exposing what is a universal problem for the market and for corporations right now, which is liquidity, and the fact that we sucked all the liquidity out of the system very quickly on a number of different levels. And the market moved very quickly in response. So this liquidity issue, I think, will continue to show itself in different ways. Look at things like high yield spreads, right? Up 100 basis points just in the last couple weeks because of what's going on. So for a long time, I've thought that there's some sort of credit event out there, whether it's companies trying to refinance debt that was taken out when rates were very low and they can't quite make those ratios anymore. I don't know what the next big headline is, but I feel confident saying that I don't think we've seen the end of the headlines. I just don't know that it's going to be the same type over and over again. So I still think they will have to cut, not for a good reason, but I think they will have to cut before the end of the year. Maybe not 3 times, but I think we'll see at least a 25 basis point cut before.
So if you bring it all back to the equity markets, that's why I continue to be bearish. Because everything you've said, everything Steve said, everything Joe said, right? Whether it's liquidity crunch, whether there's smoke coming out of the house, all it means that earnings are going to decline, that the market PE is unsustainable, and actually is sort of ridiculous that you've seen multiple expansion in the face of a truly declining economy with best case believing that poll, which I don't believe, that rates will be cut in 6 months.
How do you explain the resiliency, though, in the equities market with all the negative news, all the negative events of the last 10 days? Yep. It's remarkably surprising how strong we are.
You know, I think there's a lot we don't understand how this market
Check
trades,
one.
whether it's the increasing of algos, whether it's that index funds own more than 50% of every equity. Just don't know. I mean, it just doesn't trade on how we all grew up in the market, on fundamentals.
Fundamentals.
And there's insatiable appetite.
That's
as I
bullshit,
said,
too.
to focus on the single data point in a
Utter bullshit. I posted this stuff for you guys on Twitter. They've been buying the dip on forward PE ratios since the 1970s. All these guys are like 60 years old, 70 years old. Liars. Liars. Any of these guys that came to the market in the mid-70s? Liars. Fundamentals? Out the fucking window in the 1970s. Fundamentals, my ass. All right. We're going to talk about something here. I think we talked about this yesterday. Fundamentals, man. Oh man, these guys. Talking about fundamentals here. When I was a boy and I had to take the bus, I was climbing hills in the wintertime. We had Arctic dogs and no such thing as we had the first elevator in the state back in 1978. I'm like, this is all bullshit. Absolute bullshit. We're going to talk about something important here. Now, on FinTwit, I posted this morning. I made a post on FinTwit this morning. You can check it out. You can look me up on FinTwit. Google search CaptainJimJames. I made a post this morning about housing, and that of all home purchases this past year, 25% came from investors. That was just this year. That's not this whole past decade of it happening. Now, I'm guilty of this. And I've, over the years, discussed with you here on YouTube and discussed in FinTwit the waves and motions of this going on in the background of the housing market. You see BlackRock and large institutions getting involved in this, right? Even in my own private, I'm in private forums of buyers and sellers of wholesale properties. And you even see, I've updated U.S. time has passed on what happens in there. And even have talked about how this year specifically there was a lull and then they came right back. And these buyers are in there right now. And we're seeing it right now come out in the news. And with saying that post that I made this morning, there's this weird setup that's been happening in the background. And it's important because we're creating not just a surf class. We have a class of serfs being created right before your eyes. The agreement with the Fed has been broken of fighting inflation, fighting all kinds of nastiness out there, right? That came from COVID. And we had an agreement with the Fed, right? And the Treasury Department. We're going to fight this. We're going to fight that. We're going to break this. We're going to break that. All that kind of stuff. And the Fed balance sheet, we have erased all of that work. All that work has been erased to backstop basically banks that legally took on more risk than they should have. Banks that were, these are regional banks, right? These banks also had what? Exposure of up to 65% rather than the traditional banks only having 35-40% exposure. But even then, we're better positioned than prime banks to put money in savings, to actually buy bonds when rates went higher. They could have even backstopped themselves. They didn't. They took the money and ran. Prime banks have more exposure, right? They're already, or not in some way, they already have 60 to 65% of their bank backed up by T-bills pre-rates increasing. So they don't have a lot of maneuverability. These regional banks did, and they didn't, right? No, they didn't do further backstopping for themselves, did they? They said, fuck it, if it burns, it burns. We'll start over again. We'll let the Fed help us. And, the background over the past year, that some people are going to get fucked in this. That the poor people are going to get fucked. But it's even worse. Because now you've broken the agreement with everybody. There's no more participants on equal, right? The banks are holding hands. Stock market's holding hands. Poor people are holding hands. They backstop these regional banks, and they basically know that these prime banks are fucked as well. And so now they're stepping in right now to protect rich people. Golden parachute. Meanwhile, in the stock market, what are they doing? They're protecting the stock market. And they're saying, we're going to protect 401ks for you. And so if you're rich, if you're a stock market participant, if you have a 401k, you're safe. But who's getting left behind right now is going to get left behind and ultimately fucked is a poor person. They're doomed. Doomed on a level, the fleecing of the United States of America, I don't think it's ever been as apparent as it is the past 2 weeks. It's being front run, the fleecing of the poor in this country. Now, I know that you out there think that you're not a poor, but you likely are. You likely don't make more than a few million a year. You likely have a mortgage, the second, third mortgage. You not likely, but a lot of you out there. You likely have bills. You likely have all kinds of credit out there. You likely have a wife or a husband and kids. System is built for that, and I not guarantee, but a lot of you probably live paycheck to paycheck above your means, and even you are one step away from being kicked out of this class. That seems like they're going to make it with their 401k, with their house. They're like above a poor person. But in reality, as time passes, your risk, as this unfolds, risks you to being kicked down into becoming a renter. BlackRock is betting on that as well. That's going to happen to you. So you might think that you're not a part of this class of poors, but more than likely you are. And if you watch the the range of who's poor and who's not, and the difference in who has wealth and who doesn't, it's vastly, the disparity is just growing and growing by the year. And when you see 25% of all purchases going to investors this year, that is insane. Now, you'll see some people out there saying, yeah, it's with this coming housing crash. Fuck no, there isn't. There's a coming surf class of people that make enough money out there, but are still part of the poors. They're not actually as rich as they think they are. And even today, this decision by the Fed is basically saying to you, it's basically saying to you this, basically saying, hey, look, this is where we're at right now. We protected the banks, and we're going to protect you, the 401k holder. Seems like your housing is okay. And we're going to protect the stock market. We're going to fuck the poors now. And the truth is, this agreement is broken. The truth is that you're now going to be told, not you, but a poor person, a real poor person, people that think they're poor, are basically going to be shoved down their throat. We're not all in this together. And you're going to be dealing with inflation longer than you expected. You thought you were going to break this down between 2023 and 2024? Sorry, buddy. That's out the window. It's now 5 to 10 years. Oh, and sorry, buddy, you thought we were going to cut rates? That's now 5 to 10 years. You're going to get rates. You're going to get inflation. And if you don't think you're going to see a spike in inflation off of what they just did this past 2 weeks, you're insane. It's insane to think that we're not going to see a spike in inflation. Now, you can hear all the talk today and the jabber and the blah, 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 and all this kind of stuff. You can see that the Fed's fund rate is saying, hey, we're going to cut rates. Now, in my view, the only thing the Fed can do is either start cutting checks for people, and that sounds crazy, right? Like checks for poor people. Here's your bailout while you deal with inflation. Well, that sounds crazy, but they're not going to do that. So you're hoping as a market participant that they're at least going to bail out the stock market with a rate cut or a pause, right? And market participants are like, yeah, if we don't get it today, we're going to get it the next time. We're going to get it at least by the end of the year. But the truth is, if you even want to keep that contract that we really are fighting inflation, even though we're backstopping the banks and we're going to fuck the poors, that means it's going to be rates for longer. There's no other solution to it.
Just some commentary from Barkins.
So you're either going to
Branson
accept...
says that banks are seeing many defaults, not seeing many defaults at present. Credit losses can happen with a lag, they do note, though. So
you're going to either accept higher inflation,
can happen with
you're going to accept worse living conditions for longer, or we're going to pump this shit to the moon, right? There's no way out of this. There's no way for you to argue that a way out of this. And ultimately, who's going to get fucked are the poor people. The already poors, the people that make like 40,000, 60,000, 90,000. The crazy part here is that you're creating a system of services, a system of serfdom. So I'm going to have a guest on right now. We're going to chat about that. That thing. Because to me, you know, I don't normally get angry about this. I mean, I wasn't even angry about it into a week or two ago. Last Thursday. Not this past Thursday, the one before that. You know, like last week on Tuesday when we're all like, yeah, it felt like we've been trading a week and it's only Tuesday, right? Because we see all this stuff happening in the background. Hold on here. I'm going to have somebody on here in just a moment. I need to do something here. Collab cam here. I'm going to do this in the background. I'm going to start collab cam. Okay. Copy a link. Generate a new link. Copy this. And I'm going to see if I can, I got to share the main display, hopefully. There we go. Stop sharing. Hopefully that's not the porn display that I don't show you guys. And we're gonna look this guy up here. Here you go. One of my favorite interviewees. One of my favorite people to have on. You know who you are. I'm sending you a link right now to your Twitter DMs for you to join, baby. And we're gonna see if he's here. And close that up and see if he's in there or not. But I want you guys to understand that out there, there's been a contractual break in the agreement behind who's backstopped, who's not. And there are some participants, and there are some people that are participating. There's some that are not. Put that back on right there. Let me see if he got the message yet or not. Let me close some of this stuff down here. In the background, baby. In the background. Let's see. Oh, he's in here. He's here with us. Let's see if he's here. Let's see if he's with us right now. Let me go check on him. Oh yeah,
so just an
dude! I got that sweater, man. I should have put that sweater on. I've got that jam, man.
However, in just under half an hour's time, our very own
that thing is jamming. Say something. I want to hear you.
Presentation with giving some fundamental analysis.
Say blah blah. Say check, mic check.
Decision. So the live video for this is available.
All right, hold on. Let me see if I can see it. Because I might have some issues here. Main camera. Okay, show on stream. Oh, come on. Are you there? Say something.
I'm here.
Oh, yeah, you are here. That is a handsome sweater.
It is a very nice sweater. I believe it was Brooks Brothers.
Is it wool? Is it alpaca?
It is wool. It is wool.
It's nice. Do you wear that on the boat?
Occasionally, but it's usually pretty freaking warm here in the summer, and this is a thick ass sweater.
Is it cold where you are right now, or is the house just blasting AC?
No, it's like it was. I don't know. Let's see what it is here. It's like 55.
Outside or inside?
Outside. In the house, in the offices here, we've got it at a nice 70.
And do you pay for that extra on your rental or no?
The AC.
Yeah, is that
the
tied
power
into your
bill
rental
is
contract?
mine. No. Only water, I think, here in this place.
Is your water heater on a payment plan of some kind?
No, not yet. That's coming. Homeowners in-home services LLC.
That's what I was on Twitter this morning, and I was like, it would be great to come up with some kind of like a black box that you could attach to anything inside the house. You could be like, okay, so we're gonna do a rental, and we're gonna charge extras. We'll just like cars, we'll just limit what's in your rental, and the rest of it's an amenity. Like your AC and your heat keeps the house at a steady, I don't know, 68 degrees or something, 72 degrees.
I think all of that's coming.
What's that?
I mean, I think all of that's coming. That's actually, like, if you look, there are so many companies that came along in the last 8 years or so to allow you to easily, like if you go into Home Depot, even there's some company that makes a little module that plugs into your breaker box, and it will tell you what each individual component of your home is consuming in electricity, so that it's tracking the usage on a per device basis rather than just the meter outside. And so you can buy these smart breaker boxes. I can totally see a world where basically they decide, you know what? I think we should turn everything as a service, especially in a rental. Well, you want to use the AC? That's wear and tear on the AC.
That's
so
the wear and tear part is
for that.
You could see some kind of a slumlord, not even a slumlord, like a house slumlord that charges $2-3 grand a month, being like, look, these people got banged up in the last recession. They can't buy anything, and they have to live a certain lifestyle. So they have the money, but not the credit. So I'm going to tell them, look, that dishwasher costs you $3,000. You only get 30 washes a year. You get one a day. And you're out.
Right. I'm
tracking you, and you're doing 3 or 4 a day with 4 glasses in it. So, buddy, that's not going to work for me.
Yeah, you're way over your usage limit for washing.
I'll unlock it. You can add 60 or 90 a month, and it's going to cost you $25.
That's going to cost you, and you got it. And it's going to be a 1-year contract minimum.
1-year contract, and I get to invest it myself and make. I get to suck all that money off of that. You buying the next dishwasher for me. You buy me the next dishwasher, and you get to use it.
I really think that's where we're headed. I mean, it just makes sense, right?
When you have more investors owning homes than real people.
I mean, I live in Georgia, which based on that document or the link you sent this morning, you sent out, we're number one. Yeah, we're number one. So we lead. Cool. In large corporations owning all of your houses.
Woo!
And it's evidenced by that. Where my house is, around me, the homes generally sell for, between about 700 and 1,000 and $1 million plus. But every home in my area.
Is this generally or is this pre-COVID?
No, this is now.
Yeah. Okay. All right.
So, every home in my area now that is available, you can't buy them. None of them are for sale because of the same problem we've discussed on Twitter, that is almost 40% of all mortgages in America were originated between, or the current mortgages were originated between 2019 and 2022. So everybody's got like a mortgage at 2.5%, 3% in my area. So they're not going to sell while we're at 6 or 7.
Nope.
And then all of the homes that are being sold at this point, there's really something wrong with them. Like they're for sale, and they've been for sale for a long time. And that's the reason why they're still available. So there's no real home inventory available. So if you want to move into my area, anywhere inside of my school district or within, say 20 miles of me, you're a renter. And you're not a renter in a home. In most cases, the homes that were bought by individuals and are being rented, they're all occupied. So the ones that are coming online are in neighborhoods that were built to rent. So in my area, there are a lot of homes that are built to rent. New homes for rent is the sign in the front of these neighborhoods. And you look at these homes, they are 4 and 5 bedroom homes, 2 and 3 car garages. They are renting for $5,000 a month, and you have no option to purchase them. And that's what they're doing. They're building them there. They're building them near my offices. Right across the street, there is a townhome community. You can't buy them. They're renting for $3,500 a month. And welcome to the neighborhood. And this is very rural part of the Atlanta area. And so I don't have a good perspective on the markets around the country. I travel a lot, but I don't, look around for homes a lot. But if it's anything like this is an unsustainable situation for people. That no one's going to be able to ever own a home in this event.
Yeah, I think you're making a good point here. Is that it's unsustainable for people, not for the people that own these houses. I mean, I got to say something. When I moved here to Detroit, I could buy a house from anywhere from, believe it or not, $1,500 to $20, $25, $30. And on the back end, renovating these houses and then trying to sell them, I was able to flip them for like $100,000, $150,000. Increase the cost of a home here in the Detroit city area, but it's all changed. Now, it's no less than $20,000 to $30,000 to buy, and then the renovations are now costing minimum of $130,000. And you're automatically like, I'm going for 100% markup on these things. So you're like, it's $200, $250. In a place where a home used to go for, 2 decades ago, $1,000. I mean, you're talking about just an artificial, automatic price increase. Michigan, in that report, had 25% of all new home sale, all home sales in this state this year was 25% were to investors. And the investor boom here is relentless. Has been pauses, but relentless. And
they've given up on home sales here in Georgia. They were like, screw this, we'll build them.
Yeah, there's like a forced we're not taking anything less than this going on here right now. So it's like rapid, and even when you're not going to sell, let's say you don't find a buyer to say, hey, can you buy this at this price? You're then saying, well, fuck it, I'm just going to do rentals. And I'm just going to charge this amount of money. It'll be the same as a mortgage for someone buying this, and those renters are there. And this leads into the next question. The important one for you, Joe, is so I was like, I'm going to get out of Michigan. Now I'm like, maybe I'll keep some of these homes because I don't know about my own children. Are they ever going to be able to price into something? Do I have to leave them a home so they can either occupy it or they sell it to buy into that class that can own a home 5 years or a decade from now? And we were talking about this. What's your thoughts on that? The next generation of kids.
it's an inflation thing, right? So just look at the quickening of inflation in the United States. It is growing in a way that it hasn't for generations, and that's causing that's causing the asset class of a home to inflate beyond the reach of many people, even with what would be before COVID would be considered a good paying job.
Yeah,
Like,
let's say you get an engineering degree and you get paid $90,000, and the average for an engineer is 40 to 60 in the U.S. Let's say it's 90. You're like, boy, I got a great job. I'm an engineer. Just got a college, got a great offer. Not 200. You're not like Meta or Amazon. That like elite engineer. You're just like middle of the road,
Right.
making 90K at a college, but you want to get something that's a starter home in a nice community. What's that running right now? 3 to 500,000, let's say, right? Somewhere in there, 300,000.
Depending on where you are in the country, yeah, it can easily be, anywhere between 350 and 5.
Yeah, and so what do they have to make to afford that with a wife? Let's say they have a wife or a husband. Some wife, she's the engineer. Can he be a homemaker or no?
No. I mean, you've got it. There, no one gets to be a homemaker anymore. That went away in my generation.
That's right.
Realistically, so because of the fact that wage inflation did not keep up with price inflation.
Nope. Do we lose him? See if we can get Joe back on here in just a moment. I was just on a Facebook Marketplace, and we bought. He's still here. Show on screen. You're back.
Yeah,
baby.
I'm here. I don't know what happened there.
You're good. You're back.
All right. Yeah, all I was saying was that wage inflation didn't keep up with the inflation of the cost of goods and homes for 30 years. And it finally reared its ugly head in my generation that we were trying to buy homes right after the pandemic, not the pandemic, after the Great Recession, when housing just collapsed on everyone that had started to buy a home. So I caught the worst on that. I bought a house in 2006. It was hilarious. And but my generation, it started to show that if you and your wife don't work, you have to be in the top 3 to 5% of earners to be able to actually have a stay-at-home wife or a stay-at-home husband and just have one group working. If you're not in that top 5+%, you're unlikely to be able to own a home, save for a down payment, raise kids, fix cars, all that stuff, and then save for retirement. There's no way to be able to do that. So that was before this increase in inflation. And, while we did have wages growing for the first time in a long time during the COVID pandemic, because it forced businesses to have to compete for employees, because right now we're at basically effectively zero unemployment where we are. I mean, everybody that wants a job, there's multiple jobs for that person out there in the market, and so they have to be competitive.
I just can't imagine. If I get out of college. I just met this guy the other day. My wife was looking for a new piece of furniture for my kids, and this lady had a really nice piece of furniture, right? So I get on Facebook Marketplace, look at it, go over to this guy's house. Guy is a doctor. She's now stay at home, couple kids, young children or whatever, and they had ship boxes out front in a starter home, and they were like, "We can't move, we can't go anywhere. We've got too many college bills. He's working, I'm taking care of the kids, all this," and they're kind of in this weird place of being stuck in this moving up. And how much money do they need with their debt to move up in class, I guess. And I just wonder about if somebody regular out there with a normal, let's say you have a liberal arts degree and you're not making $90,000 a year. If your parents aren't going to give you something, how do you even start to enter the housing market? How many houses are left at $150,000, $250,000, even at $250,000 You've got car loans, school loans, all this. Like
you're buying a house at $150,000 that needs $100,000 worth of renovations to feel safe and enjoyable to live in. So, that's the reason why they're, the rental market, because they have.
Hold on here. We're still having some issues here. That's my thing is now we're not right now talking about kids or adults. We're not talking about you as an adult or you being 30, 40, 50 years old. We're talking about this young generation. These, let's say they're 10 years old or 15 years old, 18 years old. What do they need to make it in life, I guess, quote unquote? I guess I know a lot of you don't want to. Like, I don't mind being a renter. I like being this or I like being that, like being mobile. I know that 50% of people under 30 years old live at home with their parents. That's a known fact. And the question becomes, well, let me just check and see if he's back or not. Nope, doesn't look like he is. Joe, if you're listening in right now, try to rejoin the conversation. Go back to that through that link again. If not, I'll send you a new link, brother. Let's see if I can get him a new link to join. Let me generate him a new link here. Copy it. So, Joe, if you are listening, I'm sending you a new link. So we can get a new connection. See if he'll join us here in just a moment. Now, that's a key question here, and this leads into today's Fed rate hike discussion from the Fed, from Chair Powell. And what is he doing, right? How do you come back from saying we backstop banks, we're going to continue to fight inflation with 25 BPS, and meanwhile, we're going to leave people behind? So if he comes out there today and says to you, if Chair Powell comes out there today and says to you, there you go, you're back, baby. You look handsome. If Chair Powell goes back to you, though, and says, hey, I'm going to keep fighting inflation, we're going to backstop the banks, we want you to all accept this, and you see right now your 401ks are safe, but we're going to keep fighting inflation, that target date, if you're out there looking and saying to yourself, well, they're going to keep fighting inflation, we had targets of 2023, end of 2023, 2024. My assumption here is that you're now looking many years ahead.
Yeah, absolutely. I hate it because I'm looking at it, and you and I both have young kids, and we look at it from the standpoint of, when our parents were where we are, the dollar was worth over double what it is today. Mm-hmm. And if it's only reduced in value relative to the assets you want to buy with it. It's only gotten faster. And I don't see, with the Fed positioning and signaling how it plans to deal with the current monetary problems we have, it's obviously going to continue to print. And when they print money, it debases the value of what you have or what you earn. And we're going to just keep doing that. So that's why when we were discussing your houses, what to do with them, realistically, the houses that you hold, or the property that you hold, or whatever hard asset that has pricing power as inflation continues to grow, those types of assets.
Not a sailboat.
Yeah, not a sailboat. Not a sailboat. But those types of assets will be basically a coin in the game that will increase in value as if a dollar's only worth 50 cents, then now your house is worth $2. Like, that's just the way it is, because those assets will be safe, or at least safer than paycheck to paycheck or cash you're earning each month. So you just lose all power if all you have is a paycheck. A paycheck has historically never kept up with inflation in the United States.
I don't know any other way to give my kids a leg up. I'm trying to think of some other way to be like, you're not going to be fucked. It's the only thing that I can think of to try to give them any kind of a future. Where we're careening towards is like you're saying, like as years pass, even if the housing market comes down, it still doesn't come down again to some level that's reachable.
I think that large corporations have learned the stability that housing can add to their portfolios in a destabilized monetary system, which ours is now and is getting worse, and is basically guaranteed in the future to only get worse and worse. So they have learned that housing is a great stabilizer because housing, the cap rate of housing is great, and it gets even better as money becomes worth less and less if you bought it in the past. So buying housing now is a great way to protect yourself in the future, because people are going to be, in dollars terms, poorer in the future and having to pay you more of their monthly income just to be in the house that you own.
And now we're extending the inflation fight, which props up the housing market for even longer, doesn't it?
Yeah, absolutely. I mean, I hate it because like all the people, anybody in this stream that doesn't own a house and would want to in the future, right now, it already may be too late unless you change the way that you earn money, unless you change that method or do a real, like, I quit a job to take another job at a high factor more than I'm earning today. Like if you're just getting cost of living adjustments at your current work and you work there for 35 years, the chances of you ever getting a breakout amount raise so that you can actually accrue enough money for a down payment on a home is very low.
Not only that,
that's just the truth.
Not only that, but
that's
even when you do, you and I were discussing what the mortgage, insurance, taxes, and then having to keep up with that over time. We're talking $5,000-6,000 a month, right? And then forbid anything bad happens to you. If not, let's say nothing happens to you, no roadblock to you. You don't get hurt. You don't get something tragic happen. You don't get a sister that needs medical care. Anything you can think of out there. Even then, you're still only working to that I'm going to retire and I just paid my mortgage off and now I'm going to use this money for my late care and later in life of my kids. I don't know what they're going to do. So even if you're there, what do you gain? Like, how hard is it for someone to own something tangible?
It's extremely hard. Well, it wasn't hard. That's the reason we're where we are today. It wasn't hard in 2020 and 21 and some of 2022.
Like real equity that improves every year. Like I own something and it's going up and I don't owe any money on it right now. Even if I have mortgage on it, I still have like $100,000, $500,000 in real equity in a property.
I mean, I think that everyone that has power and control realized how dangerous it was to give the keys to the masses with interest rates as low as they got, because a lot of people figured it out. They realized that when you can borrow at effectively,
0
plus 2% or 1.5%, whatever the banks wanted to make, in addition to the origination fees they made originating loans on commercial real estate or housing, like those, that level, most smart people knew that was a limited time. And that we were going to not stay at 0.
They came out
We're not Europe.
They came out of getting fucked over in 07, 08, right? And a lot of these people, they knew they got screwed in 07, 08. And once they had, that's what I noticed. I noticed a lot of these home buyers were like, I remember what happened. They're a little bit, about a decade older than me, and they're like, I went through all this, and now, and even 2 decades, people that are older, same thing. They know exactly, scoop it up while you can. Knowing that we're going to wind up here.
Absolutely.
And so what happens this next generation is my question. I don't know that I think it becomes a chase that you can never catch up from. You heard Elon say that too, right? That everything will become a service one day for most people. You're going to pay for services and vehicles, stuff in your home.
You will, and it will seem like a deal at some point. Like right now we're in, it's kind of like the market before the FOMC It's spiky and crazy. It'll level out at some point, but when it does, it's going to level out at a level higher than the like comfort where you can feel comfortable being an investor. And then you'll feel like you're in a good place by making a payment that is lower. But the payment that is lower means that you have to work forever.
Yeah. That's
and when you stop working, you are out. You cash out of the system, and then you are no longer valued by society. And because of that, you're going to end up where America is a service. We're freedom as a service. You have all the freedom you can afford today. If you don't pay, you're out. We'll evict you, and now you're a now you're a serf, like you were saying before I came on. I mean, there's a lot of places in this world where people don't own things. It's usually not very good when that happens.
Now, you were talking about what happened in England, right? You're saying in London, your friends from London that.
Yeah, I've had several people from the UK tell me that it's like, big balls is like such a bad and sad trajectory for the white collar folks. It's just look at where America wound up in the 80s for people that were blue collar. That's where we're headed for in the 2020s and 2030s for white collar. You don't own anything, and good luck. You might have a 401k at work, but
this stream is sponsored by To The Tick.
You'll never have a large enough percentage of your wealth to put into it to really get free. Even if you're maxing it out and getting your employer match, it's that there's a plan for you. But so the idea that we in America are going to end up like the UK has been given to me by two people I know that live in the UK, where very few people own homes, and all the homes are effectively owned by a group of larger companies that lease and rent homes and flats in London and the larger cities in the UK. And that's just the way that it is. But they went through that in the 1970s and 80s when they were kind of going through and getting rid of all of the government-owned industries. When they did that, there was a lot of volatility in the UK, and that allowed for corporations to come in and swoop homes that people were losing. And they did. And now, my buddy that just moved back to the US. But my buddy that was living in the UK, he married this lady from London. Like her family was pretty wealthy, and they did not own the home they lived in. They leased it. They leased a house that had an orangery in it. I don't even know what the hell that is, but they had one in there. So it's like this. There was a solarium and an orangery and like all these crazy rooms we don't have in the US. But nevertheless, they had those in the home they rented. They didn't own this house because there's no way anyone can own these homes, because these homes are so inflated now. Like a small 4-bedroom home in a village well outside of London. One of the guys there at one of the trade shows I was at, he was from London. He said that if it was the first home to go up for sale in years in this village that he lives in, and it was immediately bought for millions of dollars. And it's just a 4 or 5 bedroom home in a nice little village, but it's sold for a couple $1 million and will be rented because you can't own there.
Just want to make a quick interruption here for anyone that's watching right now. This is a 5-minute chart. There's a quick 1 minute and 5 minute barrel plane. But I do want you to just pay attention to right here. If you see this cross take place, I want you to watch this cross right here. And I also want you to watch this cross above. As we cross over here, if price rejects above, bears are looking for this trade higher here. And then a rejection trade right down to 396 or so. So a PT down below if this can work itself out.
Comments from ECB's Nagel.
So be aware of a squeeze higher trade to possibly 398.42, and then a price target. And as a matter of fact, I was readjusting these. This is the hourly and the daily trigger. They have moved up now down or from lower lows to higher highs now. So I just want you to be aware of that as this plays itself out. I also want you to see the 1 minute chart and how it's playing itself out. This is the 1 minute. Here's the bearish cross on the 1 minute now. And you're gonna be looking for some kind of a squeeze and trade lower. We've got a gap to fill down below here at 397.69 and then 397.77. But on a higher time frame here, just want you to keep your eyes. There's a small gap down below here, and then there's a point of a crossover here. You could see that gap get closed. You watch this gap get closed, squeeze higher, and then that trade lower into
ECB's Nagel says expansionary fiscal measures risk fueling inflation further. Says inflation
that
projections
hourly
contain upside risk,
and daily. This
wages
is
may
again
rise
the
more
place
strongly
that
than
bulls
assumed.
want to hold
Says
and
that
buy
the
dips.
ECB's job is not done yet. The bank must be bold and decisive. Says further rate hikes are needed in the coming meetings if inflation develops as projected, and that the bank sector is resilient. Contagion risks to the euro area banks are low.
Dude, what is going on here?
On the 1 minute, SPY is having let's make a lower low.
Yeah, I also want you to see on the 15 minute, we get the bearish cross above with the price target down below at 396.81. And then on the hourly, really quick, this is just above. This is where that dip buy is down here at 397.46. So mark that on your volatility or your path lower if you're a bear, 397.46. And for a dip buy for the bulls, or at least some volatility for you to get down here to this 396.80. There's a little bit of a 397.46. And then we're going to go right back to this 5 minute, 397.46. That gap has been mostly closed. 397.46 is right down here somewhere. Right down in here.
Comments from U.S. Treasury.
They didn't quite close that gap. There's a tiny little, you might not be able to see it on your screen here, but there is a tiny little gap. Hold on.
Linked to failing banks.
That's really weird. It looks like I have. Somehow I have financial juice, even though I turned it off. They're still playing in the background. Sorry, Joe, to cut you off there.
No, you're good, brother. You're good. Let's say I'm just being a doomsayer. I'm starting to sound more and more like a bear every day. I don't like it. I used to be a to the moon trader, but the stuff we're doing in the economy is just so asinine and short-sighted. It's all short-sighted. Everything's about political expediency right now, and it's really hard to watch.
All right, hold on here. I got to turn that off there. Turn this off here. Hang tight. No, I had a bunch of stuff playing in the background here. So you're becoming more and more of a bear. So just like to wrap it up, because we only have an hour left. What do you think? I guess people are really interested, not so much. I want to know your take on, do we get 0, 2.25 or 25 BPS? Do we get 50 BPS? Do we get rate cut? And I think, can you expand if you can? If you can't, if you don't want to, that's fine. Your thoughts on what matters? Is it what's in the press release? Is it what's in the presser? Is it the questions that are asked? Give us your take on what you expect today.
Well, I mean, I think that Jerome Powell probably, like, I just picture him kind of like an old, if anyone remembers the old SNL skits with Stuart Smiley, where he like sits in the mirror and he looks at himself and tells himself he's good enough, he's smart enough, and gosh darn it, people like him. Like, I feel like that's Jay Powell right now. Like, he's going to raise 25 BPS because he said he didn't say it was pause time. And I think he realizes that he needs to raise to, I guess, to wring out the last bit of credibility in the Fed. But in the end, raising is just doing the devil's work about crushing you and me, because he's going to raise rates. It's going to make it harder for people that need money and need loans. We're going to keep inflation. We're not going to raise enough to stop inflation. That's for damn sure, especially not while we're expanding the balance sheet as we raise rates. and erasing half of the year's worth, or ever since we started cutting or started raising, we erased 50% of the balance sheet reduction in one weekend.
Yeah.
So at this point, we're headed towards what I was talking to you about. I was like, the minute I read about it the first time, I was like, holy shit, that's exactly what we're going to do. We're going to have a no landing. We are going to continue to squeeze rates, which is going to hurt everybody. We're going to continue to have inflation. We're going to crush Main Street. We're going to crush Wall Street, and we're going to ultimately bail out the banks. That's what I think we're doing. I think we're going to crush everybody, and then they'll dip in and save the few institutions that they feel like they need.
Yeah, and if you make your living off of other people's money, you already see it, right? If you go out to a restaurant or whatever, you see higher priced food, you go to get a service, you go to get hard goods, all those costs to them are being passed along to you as the poor person, right? So if you're a landlord, if you're a whatever you're doing to make it, you're going to pass all of those costs down to the poorest of the poor.
Yeah, I mean, so if in a no landing scenario, we basically try and push the economy to grow through a lot. I mean, obviously not raising rates too much yet, going with 25 basis points, or then maybe pausing, which is going to allow inflation to go nuts, because as you've seen, any expansion of the Fed balance sheet and the markets goes crazy, which is great. That's wonderful, but it doesn't fix any of the underlying problems. So we leave the cancer down there, right? And we just punt to the end of the next election cycle, and then we're going to crash this economy. So if we don't do something now, the problems are harder later. And I think that the Fed is basically signaling that they are going to listen to the requests of their handlers in Congress, and they're going to say, yeah, no, we're going to crash this fucking bitch, but we're going to do it later, not now. And that's where we're headed.
How do you think it works out politically, and how it affects the market?
I think politically they're not going to get what they want.
We're going to bail out your 401k. We're going to bail out the stock market, because we need them to be our partners here to some extent. Even if it's not, let's say Apple sells from 160 to 125, you're still kind of safe, right? So you're like, yeah, my 401k is at least steady. It's not at $80 or $90 or $60. Apple in my portfolio, it's at 125. Like even right now, at Apple at 160, it comes back down to 130, 125. What have you lost? Nothing, right? But what do you think politically happens if they say today, if he says today, we're going to keep fighting inflation and we're going to bail out the rich people? Do you think that has implications politically? Maybe even the market down the road into election season?
Yeah, I mean, at this point, we're whistling past the graveyard. I think that the average Joe on Main Street still doesn't fully understand what's going on, or what these decisions they're making in their, for them as their representatives are going to mean to their future. And they're going to get, the average Joe just knows, do I have a job, and are they laying off people near me, and I'm worried about my job. And so I think right now what they're doing is they're trying to protect, just like Senator Warren was saying, how are we going to protect jobs? Because that's all that the people in power currently need, is everybody to have a job and there to be two jobs available for everyone looking for one. That's it.
Yeah, let me ask you in the chat. If you're in chat watching on Twitch, YouTube, and let's say you're young, and let's say this is a fascinating topic, because I'll ask this question sometimes, and I'll say, hey, do you want to retire someday when you're older? Even if you're like, I'm not thinking about that, Cap. Because I'll have people be like, well, I don't mind renting. And I'm like, okay, that's fine. I'm like, but where do you see yourself do you have this like not imaginary, but you're like, oh, I'm just gonna work hard, rent, and I'll build a cash pile for when I want to retire and do what I want to do? Are you like, I'm just gonna screw it and I'm gonna go be a ski bum and not worry about it? Are you trying to make some kind of future for yourself? Do you feel like, and I don't mean people that already own homes pre-COVID. I mean people are like, I just got out of college, trading the stock market, and me and my wife and I, or my husband and I are trying, or my husband and my husband are trying to secure our future. And I want to know what your take is out there if you're watching right now, and more specifically, not just like, hey, I have enough to buy a home, I've got the down payment there, buying, or I'm waiting for the crash, the inevitable housing crash to buy. I'm just hoarding money right now. Do you think you'll even be able to get above or like get ahead, not just meet the minimums? Like, can you make that payment of $5,000 every month, $3,000 every month, $4,000 every month, and do you have some money left over where you can actually invest that or put it into a 401k, or I don't know, make improvements on these homes you want to buy? Do you see your future outlook as positive? Do you see it as negative? Let me know in the chat if you are one of those people. If you're an older person, matter of fact, I'm not going to name a name. We have someone in the group here, someone that's helping us in the background, and he's at retirement age, and even he says he's being squeezed. This man had a great career with a big company, great retirement, walked away with a large chunk of cash that pays him every year, and he's like, I'm being squeezed right now with inflation. He's like, I'm getting hurt as an older, and he did everything right. This guy had wife, kids, didn't do anything wrong, healthy can be, and even he's telling me in the background on phone calls, I'm getting pinched here, squeezed. So we're not going to leave anyone behind is the point. Even people that have done the right thing their entire life are right now getting squeezed. So if you're young, say something in the comments. And do you think you have the leg up on people or not?
Yeah, I think at this point we're
thanks, Eugene.
We're making it really hard. We're making it really hard for the average worker in America.
Yeah,
and they don't care. I mean, they're going to save their buddies, like you and I discussed a while ago.
This is an ongoing conversation, isn't it? It's been developing.
Oh my God, it really has. From back when I was a happy bull, like we started this conversation way back then.
There's a squeeze happening right now in the SPY. Bears are going to want to watch this crossover here. This is your place above where you're going to look for this squeeze higher and see if the Bears can take us down into the hourly and daily trigger down below here. So
Did
far,
you change your 1 minute trigger to yellow?
What's that?
Did you trade your 1 minute trigger to yellow?
No, I added in a 5 EMA for the 5 minute chart, just so a 6 EMA to the 5 minute chart, so I could just keep track of it on both time frames. People, we were trading the 1 minute live, and I was like, this ain't working for people. We're gonna slow this down for people.
Slowing it down.
We're gonna slow it down. And you'll see it here. We switch back to this 1 minute chart. This white line is the yellow line on the 5 minute here. And so on a 1 minute chart, they're just teeing off. The 1 minute and 5 minute on a 1 minute chart, they're just teeing off right here. And you'll see this if I switch back to the 5 minute. Just teeing off right now. Just teeing off. And this looks like the only bottom that's here in the market, at least on Bookmap. Demand hasn't shown itself in any lower numbers down here. It's just showing itself right now, right where that yellow box is. We'll look for a squeeze higher to 398.33 as this bearish crossover happens. This is not the norm, right? As we head into this FOMC, this is not the norm that we see. Right around 11:30, we usually see a squeeze higher here. We saw it early this morning at 10:15, not at 11:30. You're seeing the risk-off appetite into the FOMC rate decision. It's 1:14. We've got 46 minutes left until the news is dropped on us. Maybe this is some kind of a precursor. Someone knows something that we don't know.
The other thing I'm worried about is that when you and I were talking about how the Fed would raise rates to stem inflation early on, like last year, we were talking about the fact that obviously you have to get the Fed funds rate above the rate of inflation for it to beat inflation. And that a failure to do so would mean we would just have to go back several times to the well and start raising again. And so currently, that's another reason why I say we're going to do 25 is because we're not there yet. And Powell knows history and knows that the only way that you get inflation to really get under control is either to bring inflation down, which we're just not doing that, or raise rates above the rate of inflation, which Volcker showed works really good. It's not pretty, but we are not there. And pussyfooting around it and just sort of edging towards it is never going to get us there, because inflation is kind of like it's almost like a magnet, right? Like the closer you get to it with the rate, it doesn't just magically come down to you. It's like having opposing magnets. It's going to push it up too. You just got to like jump over it and push it down. But how to do it without absolutely tanking the economy and being blamed? There isn't a way. There really isn't a way.
Do you think that you have the Volcker moment? So people talk about the Volcker moment, but there was the first time Volcker attacked inflation, and then he had to come back later on and actually hammer down on it. So I've heard some talk of we're at that first Volcker moment where they let inflation come back and rear its ugly head. It kind of just took the head from being dunked underneath the water, the apple dunking, and said, breathe for a minute before we dunk your head again. Do you think that we're there maybe? Where do you think we get the dovish Fed? We're not like 25 BPS. Please let us beg and plead to keep fighting inflation. Yet you're gonna let the market, or at least the banks, breathe for a minute here. Or do you think you know what I'm saying? Like maybe we retighten down the road a year or two down the road, or do you think it's a chance of no, we're gonna stay the course right now and protect the banks?
I mean, they're going to protect the banks no matter what.
Yeah.
But that doesn't mean that they're going to protect them with interest rates. They could just protect the banks with balance sheet.
Yeah.
That was what I was saying. That's our no landing is we let interest rates fuck everyone. Sorry, I keep saying F-bombs. But we let interest rates, mess everyone up, and then we save the ones we care about, right? Like that's kind of what it looks like they're doing. I mean, this was probably earlier that they had to deploy the balance sheet than they thought they would, but that's kind of where we are.
That's where I think we are too. And renegotiating that contract is going to be wild, I think, wild to see.
Yeah, like let's destroy everything and then save what we love, and that's kind of where we are.
Let's see what some people are saying in the chat right now. Yeah, that's kind of funny too. So Lane Meyer just said, "I'm just waiting for Chat GPT to take over so I can collect my UBI." It's funny because I see that talked about, right? Everybody's going to get a universal basic income, and then you've got oligarchs out there saying people need to work harder. You see the French being told you have to work harder. You see U.S. citizens being sold you have to work more and harder for less.
No, I think the French were being told if you
Longer.
insist on living a longer life, we're going to insist on you working longer, because it's really not a matter of harder. I think they're like, you bastards are living too long, and rather than we tried to kill you off by making it really cool to smoke, but that's not working anymore. So in France, they just need people to work longer now.
Don't get trapped in here if you're a bear. Just so you know, we've got some collapsing on the VIX in the background. At least you've got the hourly. I'm going to show you guys something real quick. I think that's fascinating. We had this whole conversation about universal basic income coming down the road, down the street, and that you'll work less. The people, like lawyers, will be out of work. Attorneys will be out of work. Scientists will be out of work. Developers will be put out of work by all of this. And then you still have in the background, there's still this thing where you've got people that want profit. So they're like, well, we're going to have to find some work for these people. So we have to create something where they need to earn money. so that I can stay profitable once your job is taken away from you. So would you comment on that, or do you think that that will actually come true? Do you think that life will get better for? Do you think life will get better for the worker as decades pass, or do you think we'll just find another way to keep people enslaved to the grind?
Goods, consumer goods. Elon Musk says, that, AI and robotics are going to be the largest deflationary force in history, even more so than like agriculture. And that's possible. I think that's totally possible. That, that at the point when we have useful robotics and useful in that, they're not capable of doing one repetitive job again and again, but,
do you think
that requires.
Do you think they'll let regular people off from? Let's say robotics are making me money, but shouldn't I use the people?
I mean, it's just going to depend, right? Like used to be all of your fabrics were hand woven, but they're not anymore. Now they're all made by a giant machine. Did we want to keep those people doing something? Sure, but was the consumer willing to pay? What the equivalent today would probably be $10,000 for a sweater for someone to sit there for weeks and weeks at a time and make a single bolt of cloth? No.
Yeah.
So I don't think it will come down to there being we want to keep people working. The problem we could have is the consumable goods in our society will become so inexpensive that if you are just getting, say, a stipend from the government who's charging a huge and enormous tax on these companies that have basically eliminated the working class jobs of the world,
yes,
that they're distributing, anyone would be able to have the consumable goods. But what you still would never have enough money to do, even in an ultra deflated in society where AI has taken over and made every job basically free, what you still would never be able to do is save up enough money to own an asset or own a rentable house or own a business that could repair those types of robots or whatever. So I think we'll still end up being completely screwed.
Yeah.
Once again, not to be the perma bear, I just don't think they're going to let us play in their. I don't think they're going to let us play in their playground. You know what I mean? Like if they had the infinite money printer of endless labor for free, why would they let us come and join them? Right? Like, I mean, just be a good consumer and buy our stuff.
Going to interrupt one more time here. So this is the VIX here, and I want you to see we have demand established below, right? Demand established below here at 1697. These are some low targets as well for the VIX. You've got 1861. And then down below here, I want you to see as we come into this rate here, you want to keep your eyes on 2190, 22 flat. You want to see if price breaks above on the VIX and continues higher here. This will be bad for the markets. Or if price is rejected and heads lower down to 1950, and then you've got some lower targets below that. 1950, you've got 1897, you've got 1839, and then that 16 and change down below here. 17 flat, let's call it. I said 16 and change, 17 and flat. So just be aware of this this volatility zone here in the VIX, and it's going to lead you, or it's going to help you to track, maybe open a screener at home so you can see, you can just mark this off on your screener at home between 2186 and 2220. You want to see if we break higher, if we reject and break lower, it'll give you some insight as to where we're headed in the market. I'm also going to bring up the SPY real quick for you and show you that we're sitting right on top right here, consolidating, believe it. I know you don't think this is consolidation, but it is. On the SPY right now, what looks like consor, and then we have the hourly at 396.71, and there's a wick here. You might not be able to see it on your side. There it is. There's a wick right down here where the buyers stepped in. I want you to see that. Those buyers stepping in here, trying to buy this dip in the market right where the hourly is. This is where you see 1, 2, 3, 4, 5, 6 triggers. Very bullish here on the SPY. If you're a bull, they were buying this dip down below. I know that you didn't think that was bottom, but
Hey, buddy,
as
I
of
gotta
right
get
now.
out of here.
You gotta get out of here?
I got a meeting. Yep.
All right,
let me
listen,
let
I'm
you
gonna
go.
let you go. I wanted to say something, man. Thanks for showing up today before we did the FOMC. Thanks for the preview.
Absolutely. Y'all have a good one.
You too, man. All right, so hold on here. We got to get rid of this thing right here. Hold on, I'm gonna turn off the collab here. Turn this. Close that off there. The collab cam, the collab frame. Close that out. So I want you to see that the bulls stepped right in down here. They were like, we're going to buy this dip. And we don't care where we're going. We don't care if you reverse down and double top it and test it again. They came right in and bought this like it was nothing right here. The bears are looking for rejection above at 398.27. Now, but I do want you to be aware that no matter what you see come out of this Fed meeting, that they did step in and buy down there. So I'm going to bring this back up here. Hold on a second here. Bring that back up so you can see. Bring this one back up here for you. Hold on here. Come on now. Come on now. Give me that little thing that I need down there. And I want you to see that the bulls are stepping in and buying this. Now, if you were able to, hopefully you're able to buy yourself some calls down here from earlier this morning. If you remember when you joined us this morning, said buy some calls. And I said, when we're on a high up here, buy yourself some puts for a strangle on the market. You should be doing quite well at this point. You should have some nice cheap calls. You should have some nice cheap puts. And you should be ready for whatever this rate decision is and ready to go for 2 p.m. Positioned for this market for higher highs or higher lows. We're going to find out what that is into the 2 o'clock hour. If you want to know my take on what's going to happen today, I think you're getting 25 BPS. I think you're going to see the Fed chair give the normalcy of what he said at every one of these meetings, and he's going to continue on his path. You might get a little bit of dovishness in there, but that could lead to some real lows. The things that I'm concerned about here, of course, is a rate hike to 50 BPS and then a pause or even less would be a shock to the market. I've already gone over what to expect in those situations. But then a key point here is if you get 25 BPS and maybe you get some hawkish tone at some point, that could start sending this market lower. The one thing here, which we talked with Joe about, was you saw Apple come up to 160. You see these 401ks, right? They're buffered at this point for the market to sell. 401ks are going to be fine with the market selling off. Bulls that bought bottoms in October and January are fine right now. All these bulls are fat and happy. The market doesn't need to go higher for everybody to be happy at this point. It's almost like they're renegotiating and they're bribing market participants for them to continue on their path. Let me check what the stream is saying here. Yeah, Joe Donut, man. Find him on FinTwit, by the way. Look up I think it's at Joe Donut. Find him on FinTwit. Great guy, great friend of mine. Actually, partner in this company. He is my partner. So if you find him on FinTwit, great guy to know. He is he decides upon the direction of the company, the grand scheme of everything, and also we use him as sort of a are we doing the right thing or the wrong thing in the background, making sure that we're doing what we said we were going to do, making sure that we're true to ourselves and true to you. He's like a sounding board to ensure that there's no scam running in the background. 398.27 looking for the Bears looking for ejection above 398.27. Now 128. We'll see if the Bulls can hold on here. We have a half an hour at 1:30, or we're actually at the hourly at 1:30. Yeah, like the dot plot for me, the dot plot can change on a dime, can't it? Hold on a second here. Let me go through a few things here. A couple things I got to go through here. And stick with us live through. We'll get the announcement as it comes out. We'll get a news drop here, a news squawk. We'll come on and talk as soon as information becomes available at 2 p.m. U.S. Treasury Secretary Yellen is saying the U.S. banking system is sound in prepared remarks. U.S. Treasury Secretary also saying that taxpayers will not be bearing the costs related to failed banks. That is wrong. That is not true. That is not true. Not true.
So seeing from the Bank
That
of
is a
Canada,
lie.
so the
That is a
Bank of
prepared
Canada's
comment
Governing Council says sustained growth in
Main Street
overall
Bob and
government
Mary.
spending that was considerably faster than potential growth would boost domestic demand. So the deliberations say the Governing Council all agreed on pausing rates on the March 8th meeting. So the Governing Council noted combined government spending across all levels in the fourth quarter was stronger than expected, and that the Council had noted important differences between Canada and the US, such as higher immigration rates and stronger rebound in labour participation rates in Canada. So the Council discussed whether resilience of US economy to higher rates and persistence of elevated US core inflation foreshadowed similar developments in Canada. So Bank of Canada held rates steady on March 8th because the economy was slowing and inflation was coming down as forecast. So the Bank of Canada Governing Council agreed that if accumulated evidence suggested more persistent inflation, policy rates would need to rise further. So ahead of the March 8th rate decision for Canada, they remained concerned that inflation could get stuck materially above 2%. Also, the Council agreed they would need further accumulation of data over time to see whether January's forecast on inflation and growth were matching forecasts. So Bank of Canada's Governing Council felt it was important to stress conditionality of the rate pause, wanted to underline it, continued to assess whether monetary policy was restrictive enough.
I love it. I love her saying that you're not going to pay for that. I love it. I'm assuming she'll come back on 60 Minutes on a Sunday so she can talk to people and explain how they're not going to pay. Yeah, it's a couple good trades in here, right? Some really good trades here. Nice trade right in here. Might get an extension above here to 398.64.
Bank of Canada meeting minutes is on the
Getting crispy as we get up here. Hey, Primo, how are you doing? Trading shorts, my brother. How you doing? Yeah, I do trade FOMC. I haven't had a chance to trade it right now. I've got some crash puts on. I didn't get a chance to take this trade specifically, and I wasn't able to take this trade specifically. When I'm interviewing people, I've got some technical stuff I have to do in the background, and they have to watch the charts, of course, and try to set this stuff up for you. So it's just been, at this moment, it's been complicated to try to take a trade at this moment. Trying to make sure that you guys are all set on the day, making sure I'm staying ahead of the game for you guys. So you can see, as a matter of fact, you can see these sellers coming in. If you look on the right here on the screen, they're stepping in even earlier, coming right down in here and telling you no. Hidden sell orders above right there. Trying to trap you in for this rate decision. Now, there might be a trade in here. If you miss this trade down or if you miss this trade up, there might be a little bit of a nice slam higher here coming up. So we'll see if we can jump in on that trade. Take a look at the 1 minute chart really quick. You can see it right here setting itself up. So what you could see is a roll here, and then you'd want to take the secondary trade here. Something like that. It's a 1 minute chart. Bounce down below, roll down, check that 1 minute. Just make sure we're not going to fail and roll down here for this bad boy down in here. This is a 1 minute chart.
as a reminder, our very own Tony is currently live on YouTube doing some preparation ahead of the US interest rate decision, which is coming in just around 25 minutes now. So the live video for this is available on the feed if you'd like to tune in for this.
I had a text message to me saying that the stream was stuttering. Are you guys experiencing any kind of stuttering on? Are you guys experiencing any stuttering on YouTube right now by chance? I want you to see this on the 1 minute right here. This is the 1 minute chart just expanded.
So comments from ECB's Nagel says rate hikes are a journey and the journey isn't over.
This H line was already taken out earlier, so we'll move this H line up right here, 399.88. Are any of you experience? Is the stream okay for you on YouTube and Twitch? I want to make sure I've got this right heading into the decision. If not, I'll reset the stream. YouTube is good? Okay.
ECB's Nagel
awesome. Thanks for letting me know in the chat.
Much too high.
Just as Joe was getting off, there was some stream issues. Okay, thanks. I appreciate you saying something to me via text message, Lord Pente. Appreciate that. Twitch saying everything is good. Hey, Primo, brother, how you doing, man?
6 weeks.
If you need to, if you're watching on YouTube, I want to let you know a few things here. If you're watching on YouTube, you could always refresh your watch, like just refresh your page. Down in the, if you're watching on YouTube and down inside of the gear icon, if you click on that, there's preferences. You go to playback speed, click on it, then click ×2. If you're trying to enter a trade, if you're trying to listen to the stream in real time, YouTube natively delays the streams by up to 14 seconds. Another way for you to do this would be to watch it on YouTube and Twitch. Maybe Twitch should be real time. It's as real time as you can get without having to mess with the native player issues with YouTube out there. We will have the data or the data come out from the news squawk, and then they will also give some kind of a hint as to if it's bullish or bearish. As we're coming back down here to test this 1 minute here, and you'll see it here at that 398.12. We'll look on the 5 minute really quick and watch this retesting down below. We can see there's a hedge in the market right here. I want you to know out there that this right here is a hedge from sell side, right? They're going to push down here, push down, and try to push down until that rate decision comes out right here, until they lift off the hedge on the market. The market is actively being hedged right now from sell side. Yeah, please hit the like button wherever you're watching right now. If you're watching on Twitch and YouTube, please do me a solid, man. Just hit the like button, get on FinTwit, tell your friends, hey, come join us, because it gets wild in here on these days. We've got 500 viewers, I think, right now on YouTube, and I think we've got 171 viewers on Twitch. Woo! And it gets restreamed in Europe. It gets restreamed on some Discords and private blogs right now. So if you're watching and you're out there and if you're on a restream somewhere, I want to say thank you for joining us today. Thanks for joining so you can watch this with us today, this rate decision and what you think is going to take place. If you're just stopping in right now, we've got some implied moves on the day. We'll take a look at those. Also, if you joined us this morning, know that there could be a repricing in options 2 or 3 times today. So the implied move on the high and low of 393.86 and 90. We have an implied move higher at 402.95. Now, let's say we don't hit these targets. We'll just miss them and then come back down. Also note that when we have these moves higher, we've got other places. We've got R1, R2 to deal with. And we also have some issues with, if let's say you're like, yeah, we're going to get up there and break through this. Let's say it's bullish. It doesn't matter if it's bullish or bearish, though. If we don't hit the first time, we might hit it the second time. If you're a bear out there, you need to be getting below these 2 levels right here. I want you to see this green box and this yellow box right here. See this yellow and green box right here? You need to be getting below this. If you're a bear, you need to reject. Even if it squeezes higher, you need to get underneath this yellow and green line. And then you need to get and hold underneath the implied move for a real true bloodbath. Because anything like a trade down here that gets bought back up is just for another move higher at the end of the day.
To actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
There's that big implied move right there. Try to bring this up so you can see it into the rest of today. Do you guys want to trade the 1 minute or the 5 minute as this decision comes out? You guys have preferences? Should I keep it nice and slow in the 5 minute, or should I switch to the 1 minute? Let me know in the chat what you think. 1 minute or 5 minute? We'll see. We can trade this together on either. I don't care, but I know that you guys sometimes like the 5 minutes. We have more time to react. You guys like the 1 minute? Do I have a 2 minute? Everybody's saying the 1 minute in YouTube. The 69-second chart. D-Gens, baby. The 1 second chart. You guys are savages. You guys are straight savages. Oh, yeah, there's that 1 minute chart, baby. There it is, right? This is the famous 1 minute chart. Someone was asking in the stream, what does the sell side hedge mean in the market right here? This means you've got sell side institutions and they are hedging for bad news. If no bad news, so when that first press, so there's like a press release that's first released at 2 p.m. and that's going to give you all the details. And there's going to be a robot and some algorithms that are going to scan that right away, and it's going to look for some keywords. If those keywords are present, this hedge stays on. And then we go down, like we blast down. If there's any keywords in that, if there's any keywords inside that, if there's any non-keywords in that press release, like it's 25 BPS and it's not so hawkish, you're gonna see the hedge be removed from the market, so they don't get run over. If there's anything in that press release that's initially perceived as dovish, that hedge immediately comes off the market and we rip higher. And that's where it is right here. Now, one thing to say here, I'm not going to tell you, this doesn't always happen. But right in here, sometimes you'll see that hedge get lifted right before the news release. Sometimes they get access to it right before the news release. Sometimes you'll see a squeeze up here, and then you'll see a squeeze here. And then if you watch Bookmap right down in here, you'll see all liquidity leave the market. It means there's no bid, up, down, nothing. They just lift the hedge off the market, but nobody's buying either. So it's just kind of hanging out. You'll actually see in this on the right hand side over here, you'll see that orange bar disappear. You'll see the yellow disappear, but you'll never see buyers step in either. It's just free floating. Can go any direction. So right in here. What you can do here, if you're not in any kind of position, set up start eyeballing shit. Start looking at 391s, or excuse me, not 391s. Start looking at like 402s. Start looking at, so let's look at this real quick as we get up there. We got 402, right? So we said maybe a failure. So if we have a failure to print 403, 402, look at 402s, 401s on the call side, and then start looking at like a 395P on the put side, and you can probably watch these algorithms take one side or the other as we head into the decision. It's 1:44 right now. I've got 16 minutes. Everything has been leading up to this moment. Just the past 2 weeks have been insano. Just pure insanity in this market, right? You got tech just ripping face. You've got the failure of banks. You've got the hedge on the market for a crash on the S&P 500. Instead of hedging it, dude, we're not. You guys are seeing, right? At nighttime, you're not seeing dealers buying back futures. You're seeing futures just being sold off in the S&P 500, even in negative gamma. You're watching the tech get ripping face off right now. You're watching cheap put hedges being put on the market every single day, just pinning the S&P 500. All leading up to this moment, right? All of this leading up to this moment in the stock market. 402Cs are $1.30 here. Oh, man. And then we got vol crush coming down. We got a little bit of volatility the rest of this week. $1.32 right now. Here we go. Bam. 15 minutes left. Squeezing now. See if we can break through this hedge right here. Looks like we're whittling away right here. There goes the hedge. Boom. Got a little bit more hedge above still. Whittling through this hedge right now. Now we've just got this resistance above. Oh yeah, I can smell it here. If you do get trapped on the wrong side of a trade here. If you get trapped on the wrong side of a trade here, now trading at $1.31 right now, 402Cs. If you do get trapped on the wrong side of a trade here, let's say you're long calls. Let's say you're long 402C. We come up here and we get some bad news. Bam, slam down here, right? Sometimes it's better to hold on to at least try to salvage yourself. Be careful. Be careful. Sometimes it doesn't work out. I've had one trade here where I took one time.
Nagel says, I do not see the necessity to do more to protect the Eurozone banks from spillovers at the moment, but have more in the toolbox if needed.
Let's say I'm long calls here, right? Yeah, statistically, if we sell off here, we will come back here again. 1 out of 10 times we won't bounce back up. We'll actually start blasting through here. That you ain't ever making that money back if that happens. But statistically, if you're upside down your trade, it's better to manage that trade on these days for the first loss. So if you goes down, comes back up, unfuck yourself and reposition. I don't know explaining that correctly, but for those of you that have been here for a long time, you probably understand what I'm saying. If the trade goes against you on a 5-minute, if you're trading a 5-minute here and you see us trade underneath the white line, just right here real quick, I want you to see something. So on a 5-minute chart, as long as we're above this white line right here, it's bullish. This white line right here continues higher and price stays above, right? Doesn't roll over, you're probably safe. If you get underneath this white line, though, if price gets underneath this white line, let's say you're getting burned in the call side, you can take that short side right alongside to make the money back, right? So you're not completely fucked on the day. Does that make sense? So that's another idea, another way to be looking at this decision today. So if you get tangled up underneath this white line right here in a 5-minute chart, you have to take the short side as fast as you can so that you're able to pay back that bad trade that you made. And it's okay. You don't have to always be right. The key part about being wrong is that you're able to come back in and recover from any losses that you incur. You can see this last line above here. This last little lines right here. 148, 12 minutes until we get a rate decision. Good luck to all of you out there in the next 15 minutes. I want to say that to you. Pure gambling today. Don't be trading your entire account. Don't trade what I trade. Trade your own plan. Don't take anything that I say as financial advice. This is for entertainment purposes only. If you would like to paper trade it, paper trade it. If you're out there trading your full account, that's the wrong thing to be doing. You should be if you're out trading 4 or 5%, 0.5%, 0.005%. This is like gambling. This is straight up lottery. No one out there is going to be able to tell you which way the market's going. I can't tell you which way the market's going. This can as easily as go up as flip around and go to the depths of hell. And as I said earlier this morning in the beginning of this broadcast, it is so much easier to make money on non-event days. So much easier. It's easier setups, easier money making. These things right here, if you lose on this trade, it's a lotto. It's all it is. It's a lottery ticket. Don't beat yourself up. Don't be committing 100% of your money to these days. Now, the money that was to be made on NVIDIA was all last couple weeks. Yeah, Apple, all last couple weeks. You had plenty of time to buy hourly and daily triggers. There's no reason for you to be letting it all ride right now on this one thing. Now you can see in the background over here on the right, you see the liquidity is now leaving the market. I'm assuming that you can see it at this point. You see this sell side red bar above here, and you can see that this support down here has now disappeared. I want you to see that
At
this
2
support.
p.m. Eastern Time, we get the U.S. interest rate decision. Forecast of a 25 basis point hike to 5%.
So this is now gone. There's no support in the market right now. We are just being hedged at this moment.
Statement. Just taking a look at some analyst remarks. According to CME Fed Watch, as of 8 a.m. this morning, 86.4% of participants expect a 25 basis point hike at this meeting. So attention will turn to the summary of economic projections for clues on potential future policy moves, the rate statement, and comments from Powell at the press conference. Regardless, here are some other views on what to expect. According to ING, it has been a remarkable few days in financial markets. As recently as 7th of March, Fed Chair Powell opened the door to a 50 basis point rate hike, citing concerns that unacceptably high inflation could last for longer given the tightness of the jobs market. Just 2 days later, and troubles at Silicon Valley Bank prompted fears of contagion and turmoil, leading to a collapse in rate hike expectations for both the 22nd March FOMC meeting and the future path of interest rates. In fact, from pricing 100 basis points of cumulative hikes, we were looking at potential 75 basis point of cuts by the end of summer at one point. Moreover, there are clearly major hawks on the Fed, hence Chair Powell opening the door to 50 basis point last Tuesday, so we can't dismiss the possibility of a rate hike. The fact that the ECB was able to raise policy rates by 50 basis points with limited market reaction also suggests a hike is doable. A 50 basis point Fed rate hike would, though, in the market's mind, unnecessarily heighten the recession risk in an environment of tightening credit conditions. A surprise rate cut, as predicted by one bank, would signal major concerns at the Federal Reserve, which could in turn mean financial market worries turn into a panic that exacerbates recession risks. Some opinions from BlackRock: short-term government bond yields plunged as the emergence of financial cracks spurred the market's hopes for sharp rate cuts. Bank shares led losses in Europe and were a drag in the US after troubles at US medium-sized banks and concerns over a large Swiss financial institution. We think central banks will keep hiking as they both seek to bolster banking systems but distinguish those efforts from the need to keep fighting inflation. We expect the Fed to press ahead with another rate hike, as the ECB did last week. The Fed's updated forecasts may prompt markets to price back in rate hikes after the February CPI data showed sticky core inflation, but the Bank of England could pause hikes next week. Global PMIs will help gauge how much rate hikes are denting economic activity.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
All right, here we go. Please like and subscribe. Please follow. You guys know what side I'm on in this trade already, right? You guys already know what I'm in right now. $154, 6 minutes left. This is what the Bears want down here. Bears want to get underneath. Bears want to get underneath, not just here. They want to get right underneath this monthly trigger. Key points for the Bears getting underneath this monthly trigger. Bulls have all of the support underneath the market right here. Sell side hedge funds right here, hedging the market. On any kind of bad news to be released in the next few minutes. 1:55, 5 minutes left.
At 2 p.m. Eastern Time, we do get the US interest rate decision, forecast of a 25 basis point hike to 5% on the prior 4.75%, the FOMC summary of economic projections, and the FOMC rate statement. Taking a look at more analyst remarks, Wells Fargo says further hiking the Fed funds rate would be a crystal clear signal of the FOMC's commitment to reducing inflation while also displaying confidence in the measure put in place to stem recent financial market stress. However, the dust is still settling from the nation's second and third largest bank failures in history. We look for the FOMC to briefly pause its tightening efforts to ensure the situation is under control. In our view, the latest thing the FOMC wants is more financial instability that threatens the banking system and forestalls any additional rate hikes down the road. But neither a hike nor a pause would surprise us. If, as we anticipate, the FOMC opts to hold Fed funds rate at 4.5 to 4.75% at next week's meeting, it could use the dot plot to clearly signal that the tightening cycle is unlikely to be over just yet. Between the economic data's recent strength and the presumption that effort to stem stress in the financial system will be effective, we expect the median dot for 2023 to move up 25 basis points to a range of 5.25 to 5.5%. And from JP Morgan, Dr. David Kelly says continued over-hawkish talk about inflation has, to some extent, painted the Federal Reserve into a corner. Over the last few days, the market has wavered between pricing in one final rate hike from the Fed or no hike at all. Chairman Powell may feel that he is between a rock and a hard place, with financial instability and the Fed's very active engagement in trying to battle it, arguing for no further rate hikes and still elevated inflation, arguing for a tighter policy. But in truth, he is between a rock and a soft place, because both inflation and economic growth look very likely to grow softer in the months ahead. Because of this, a wise course of action would be to be less worried and sound less worried about inflation, while assuring the public that the Federal Reserve will do whatever it takes to protect the stability of the financial system.
You see that same sell side on the top there, 4050. That was there yesterday as well. Not as strong as it showed itself.
US 5 to 30-year yields extend declines, 10-year to 3.53%.
John Kicklighter saying hierarchy and chronological order of importance for the FOMC decision, hike or hold, September 2023 rate forecast, the September 2023 rate forecast, monetary statement reference to financial pressure, Powell Q&A reference financial pressure, and Powell Q&A reference recession. Two minutes left. Congratulations if you're a bull out there. You got your run up into FOMC, right? Buy the meeting, sell the minutes.
One minute remaining. I'll lead with the US interest rate decision.
1 minute left.
10 seconds.
10 seconds left.
Hike, 25 basis point hike, 25 basis point hike to 5% as expected. Fed says some additional policy firming may be appropriate and deletes reference to ongoing
Squeezing higher now, trading $1.37, $1.41 on 402Cs, $1.54. Watch that headline above, that H line above here.
As planned. Fed projections
selling $1.64.
Point rate hike this year and 75 basis points of rate cuts.
402 is now trading $1.68, $1.72, $1.70 right now. $1.74 on 402Cs, $1.75
than they saw in December. Fed's median view of Fed funds rate is longer run.
Remember the implied move higher up here.
Fed vote in favor of a policy was unanimous. Fed's median view of Fed
slamming into R1 right now. Remember to take money off the table. They do reprice options as the day moves forward. Do not forget that. We also have some liquidity above. You can see us tagging it on Bookmap right now.
May be appropriate.
I am flat right now.
Fed says inflation remains elevated. Fed says it's likely to see tighter credit conditions that weigh on economic activity, hiring, and inflation. Fed's median view of Fed funds rate at the end of 2024 is 4.3%.
Fed dot plot is out as well.
4.1%. Median view of Fed funds rate is longer run 2.5% on the prior 2.5%. And median view of Fed funds rate at the end of 2025 is 3.1% on the prior 3.1%. Fed says it will continue reducing its balance sheet as planned.
Dot plot showing longer. We talked about that this morning, right? They have to add to the dot plot now. Fed projections showing there'll be one more 25 BPS this year and 75 point cuts in 2024. Fed's also saying job creation is accelerated and is now moving at a rapid pace.
ECB's Nagel says we are approaching restrictive territory with interest rates. When we get there, we need to stay there. That's coming from ECB's Nagel.
Hopefully you took some money off that trade right there, pocketed a bunch of cash.
US 2-year and 10-year Treasury yield curve inversion narrows to minus 50 basis points after the Fed.
Did you take the money and run? Please tell me you did. Tell me in the chat that you took the money and ran.
Fed swaps show peak rate of 4.96% for May, little changed.
Still calls on the long side right now. 399 Cs, 91,000 calls at $2.55. I'm not buying that right now. We know it's going to pull back at some point once we hit 230. But there might be one more trade higher here. Let's take a look at it on the 1 minute. Let's look at the 5 minute really quick. Oh, yeah, baby. Slam it up there. Slam it. Yeah, that feels good, doesn't it? Feeling good. No shock to the market on the upside. No shock to the downside so far. At 2:30, we have volatility coming in to this trade. At least we've got one more volatility moment. Let's see if we can get higher here. Let's look at the next place. R2 above. That's at 401.79. So there we go, another one. Another good FOMC. Woo! Fed trying to stay. They're going to stay the course and longer at this point. I'm going to read the FOMC statement. You want me to read it to you? Let's see if I can read it to you here. Hold on. Cut this here. Fed vote and policy was unanimous. Recent indicators point to modest growth in spending and production. Job gains have picked up in recent months and are running at a robust pace. The unemployment rate has remained low. Inflation remains elevated. Yeah, you didn't want to talk about that though, did you? We've got the implied move above here.
Rate dropping to 4.19%.
We've got R3 above at 401.79. We are teeing off above here, looking for 401.79, and then we have the implied move above at 403. Now trading 401.11, looking for a pin strike above at 401.79. We also have some liquidity above at 4050 on ES higher, and that has now disappeared. We'll look see if we can find anything up here. What is that? Woo, 430? No, that's 410 on the high side. Well, that'd be amazing to get up there. Now trading to 4050 on ES. Trading 401.14. Looking for a higher tag at 401.79 on the SPY right now. Nothing unexpected here.
After the FOMC statement, the pound last up 0.7% at $1.2299.
402 is now at $1.93. Another place to take profit right in here. Right in here, ZAR2, and then above the implied move is right around 403. Remember earlier we talked about just failing to get up there and touch this above, this failure to come back down, and then you have that 230 in the afternoon volatility, and then we'll see what the Fed chair says. They'll pin this in here and then probably bloodbath it down a little bit, and we get another trade higher, unless he says something negative to us. Almost a pin strike on R2, 401.68. So we're at 401.70 now, they're calling it. 401.70. It's about 9 pennies from that second target on the high. I bet you I just put this in the wrong place here this morning. I bet I was even closer. We'll see if we get another buying opportunity at 460 on SPY. Oh, yeah, that's nice right there, isn't it? Oh, that's nice. Get that hedge off the market. Now 2:07 in the afternoon. You're going to see at some point. You are going to see so the call side is almost printed here, right? Not quite printed, but the call side is almost printed. We've got the implied move higher to 403 and change. We talked about possible failure above.
The Canadian dollar strengthens to 1.3679 per US dollar after the Fed decision, up 0.2% on the day.
Let's take a look at the VIX really quick. The VIX went below the yellow box that we drew on 22. They're trying to find some buyers down here. The previous low on the VIX just got bought at 2028. We'll see if the bears can hold on to this. Try to hold their pants together, hold their shorts together. Oh man, there's another opportunity to buy down here. 402C is now getting right back down to like $1. It's at $1.55 right now. Let's see if we can get them lower. We're on the trading a 1 minute chart right now. Got the H line came through here. We're going to see if this can hold itself up. I want you to see this down below. You'll see this right where we are right here. See if this can hold. If not, it'll come back down and try to tag up at 399.42. Right down here, 399.42. See if we can get it. We got the H line. This is some kind of support, not real support.
Future traders see 62% chance of a 25 basis point hike in May, according to FedWatch.
A little bit of a repricing of options right now going on in the background. 402 is now 141, 139.
Strike allows you to actually hear order flow in futures, forex.
You're seeing some repricing of options right now as we speak.
TickStrike.com.
A little bit of a bid back inside of VIX right now. VIX trying to hold its pants up. Be careful buying a dip here right now. I don't think there is a dip to buy so far yet right now in the market. I'm watching VIX right now being bought up. VIX Jim Bros down there trying to buy the VIX down here, trying to save the VIX. Bunch of gaps on high right now, and the VIX left behind. We got gaps at 21.38, 21.29, 21.15. Here's all the bull support down below. Place for a dip buy for the bulls would be 399.46, 398.68, somewhere down in here. We now have the hourly and the hourly and the daily trigger starting to come together here. Very close right here for some supportive environment down below. If you want to be less risk on, somewhere down in here, 396, 395, 396, 93 or so. We'll give you the exact numbers here. 397.10, 396.96. Very supportive down in here so far. So you got a couple spots to be looking at. You got a spot right here. You got a spot right there to buy. You got another spot down here to buy. You got another spot right in here to buy. You know, you got like something like this down here to swoop up. If this fails, you add to your position down here for a trade higher. You know, you buy, and then you add. You watch out for the repricing of options. People taking their money and running. People wrapping it up and going home for the day. Nice, easy trade today. Nice and easy. Not too easy peasy. All that worry out there. The H line trying to hold on right here. R1 trying to hold on right here. R2 R1 tag, R2 tag. Do we get the implied move on the upside today is the question the bulls are asking. Bears are like, I want Hawk Pow, baby. I want Hawk Pow. I want a hawk to come out and ask the real questions. Fed saying credit conditions are likely to tighten, weighing on economic activity, hiring, inflation, i.e., the poor guy out there is going to get jacked in this move. We know that already. We talked about it earlier this afternoon. Fed swap market shows the key U.S. rate dropping to 4.19% by year end. Huh. Okay, maybe I was wrong. Fed saying that the banking system in the United States is sound and resilient. I've got the Fed conference muted in the background, ready to go for 2:50 or 2:30, so you can stick around for that. And we'll play that live with you here. So we can listen to J. Powell live. Oh, yeah, nice blood down here. Hopefully we can get some blood into 2:30. Get a nice little dip buy down in here. Oh, yeah, give me some blood. Give me a dip to buy. Give me a dip to buy, baby. Give me a dip down here to buy. Give me a dip. Give me that 230. Give me that 230 blood, scary blood, and then we buy it right up. Give me that, give me it right down here for 230 and then be able to do something like this. Bears are like, we're getting volatility into 230. It's going to come up here for a little bit when Jay Powell is first talking. You're going to get trapped in there, and then someone's going to ask the real hard questions, and we're going to bloodbath this market down below. We're going to get underneath 395. We're going to bloodbath it down to the depths of hell. Captain, change the color to red. Captain, line up the music, baby. Trap all these bulls. Bring some blood in the market. I said music. Bring some blood into the music, Captain. So we're going to be waiting here, waiting to see. We've got 15 minutes left now. 15 minutes. The Bears just made a new low. Bears are looking to make this crossover right here. They are going to be looking for some blood here. They want to see a rejection, capture the bulls, get us into that 2:30 hour down in here, right? Get some fair down in here, and then they want to see us. They want to see us bleed out. They want to see Bear Powell come out here. Bear revenge. Nice job, Biscuit Baker. Made some money out there today. John Haggerty's joining us right now. Added 817 after the top off hour. Missed the 13.040. 50 sold 1 NMQ. Raining blood. You need some bear music? Do you want me to play bear music as J-Pow's as the conference goes on? I'll start with like bull music, and then because it always turns into that, right? It turns into a shit show at some point. Like he'll come out and he'll be like, he'll be reading, he'll be like, yeah, okay, everything is we're good, we're doing our job here. We're gonna stay the course. The banks are being backed up. Screw the pores out there. Everything is fine, and we're don't worry about the balance sheet. And then someone comes in and goes, what about that balance sheet, though? Give us your real honest opinion. Then you'll get Bear Powell, and he's like, yeah, fuck the pores and fuck the stock market. And then you end up getting, while that conference happens, you end up getting like, they get that vol into here. And then all of a sudden, all these bulls are trapped. They're like, woohoo, yeah, I bought the dip. And then down here, we're down here. And then all of a sudden, you get Bear Powell right at the end of that conference, and we're bloodbathing it down below 395. So terrible. Yeah, you got the future swing ad going on right now? Yeah, I'm looking for that swing ad down here, Johnny. I'm looking for a little bit lower buy down here. I'm looking at, even if we squeeze higher, I'm still looking for this. I'm looking for this 230 ad. I want to see it come up here. Not so much here, down here. That's the ad that I want. I want that repricing to take place. I want J-Pow to say something. I know there's possibly another trade higher here, but I want this one down here. I want that juicy trade. I want that 230 action. 245, 240, 245, maybe even 3 o'clock. Just come on down here and swing through it. There could be a trade right here.
Downgrades one class of UBS 2012 C1 and MSBAM 2012 C6.
Fed raises rates but nods to greater uncertainty after banking stress. Fed credit conditions are likely to tighten, weighing on economic activity. I know, it's so terrible, isn't it? Fuck the pores, right? I should make that shirt with a finger pointing up to my face. Finger right pointing at my face. Fuck the pores, and I'm one of them. That might even be a better shirt. Fuck the pores, and I'm one of them. Still have this implied move that hasn't been tagged yet today. I just want you to be aware of that above. We still have not taken out the implied move on the high. A risky trade here. I can understand you wanting to take this trade higher. I completely understand it. I'm not willing to give the money back just yet. I feel like I get trapped. On the Fed days, I always feel like I get trapped in here. I always feel like I'm going to take this long, and somewhere down the line they just nail me. They just nail me. We head down here for 230, 245, and then that's where the real big trade is. So that's what I'm looking for, down a little bit lower. Now retesting the highs right now at R1. We already tagged R2. Now we're looking for the implied move at 403. Is there any kind of a trap in here? I don't know. I can't answer that for you. For me, this is too much risk to take that trade. I want to take the trade on a low at 230. 2:45, depending on when Jay Powell's speaking, what he has to say. I think this is the key part of the FOMC is what he has to say inside that presser.
At 2:30 p.m. Eastern Time, we get the FOMC press conference with Chair Powell.
2:20, 10 minutes away until the presser with Jay Powell. Wait a minute, I've got a I'm not gonna say that on air. Some breaking news from Financial Juice. I'm missing a testicle. I didn't want to draw it too clearly. Yeah, we talked about that earlier, John. We were saying, man, they're going to have to push all this shit out, right? They're going to have to cut the balance sheet down. You know what this smells like, right, John? Smells like pushing it off, doesn't it? Smells like live with rates longer, higher rates longer, and passing the buck, but depending upon the next political empire that comes to power. That's what it smells like. It's today. What was said today, like sustained for longer. Now we're looking at 2025. It looks like I'm not guaranteed, but I bet you when we get into 2025, you're gonna hear, yeah, we're gonna push a little bit more rate. We're gonna push rates higher for a little bit longer. So we're now looking, instead of 1 to 2 years, 2023, 2024. We're now looking at 2024, 2025, and now you're gonna be talking about 2026, 2028. In 2025, you'll hear that. And then 2029, then 2030, right? Spreading it out. Kicking the effing can. You know it, John. You know it. You know what they're doing right here. Kicking the can. Kicking the can. Twitch is saying, what do we got here? Who do we got in here? High stress, the big banks are going to consolidate with smaller banks. We got Twitch is saying it's so simple. The big banks get money from the Fed. Then that offers some of that money to the smaller banks that are hurting. Instead of offering cash, they want to buy shares in the small banks. That's how the world works. Yeah, that's right. Solidus 44 is saying next generation depression in 2028. We bears hibernate until then. Yeah, this looks like the can kicking, doesn't it? It sure as shit does. You know that contract we had? Rip that shit up. Rip the shit up that we were going to be done with this by 2024, 2025. Now you 2023, 23, 24. Now it's 24, 25, baby. Kicking it down the road. Man. You know, a smart man saying they've kicked the can for 2 years, right? We know that they said we're going to do a soft landing. Then we're going to just keep cranking rates until we get above the rate of inflation. We know now that shit's not working. So we got real can kicking here. Real can kicking. And that's right, if it walks like a duck. No, markets can go higher. You saw it in the 70s. Volcker had two moments. He had like the first moment and the second moment. And what happened? The market just ground sideways and up until he actually started hammering with rates. So we get the first and second Volcker moment right here. We get the first moment. It's kind of gross, right? Man, it's not good. Bears looking for that capitulation move. It's postponed. Postponed. Yep. Yes, sir. You guys are all nailing it. No Fed cuts until a change of president. You got John saying, secret prayer, please, God, because somebody who is sane and rational will be elected my boss. I'm tired and I need to retire as Paul Volcker. So Paul Volcker had two moments. He had like the first one where he's like jacking up the rates, jacking up the rates, jacking up the rates. Market's like, fuck it, we're going sideways and up. You're working on this inflation thing. You got Jay Powell today telling you we're going to continue to fight inflation and support the rich people, right? And it's going to take longer than we expected now.
We get the FOMC press conference with Chair Powell.
That's what you're going to hear today from Jay Powell. It's going to take longer. Don't worry about it. We're working on it. Meanwhile, the market's now in some kind of a homeostasis. Like it's like in this bizarre, like it's not bizarre. It's not down though. It's not like, hey, we're cutting rates. We're going to squeeze up and blast down and find the bottom of this market. Woohoo. It's more like this. Yeah, we're just going to keep working on this in the background. Meanwhile, you guys do what you do. No matter what the low is here, when they tell you some shit like that, like it's going to take another 2 years, it's hard for a bear to be like, all right, we're going to bloodbath it for the next 4 or 5. The market might brush this off. The market could brush this off and say to the right and up. Let's make some decent profit. We'll sell it down. We'll make some decent profit. Sell it down while they do their bullshit in the background. If I was a bear, I'd be pissed right now. I'd be quite upset because you didn't get either. You didn't get like rate cuts and pausing, and you didn't get 50 BPS, and there's no end in sight. That is the problem. There's no end in sight. They are kicking the can down the road. No matter what anyone else tells you out there, I'm telling you that they kicked the can down the road today. They kicked it down the road. And when they start talking about 2025, talking about, that conversation is going to turn into 2026, 2027, and it's going to turn into 2028 and 2030. And you're going to be paying for eggs, never $1 again. The rest of your life is never going back to $1 again. And you are going to accept higher inflation. And you are going to accept higher prices. Matter of fact, if I was owning a business right now with a bunch of employees, I'd be like, oh shit. These people are going to want to be paid more. Absolutely. You just got the can kicked down the road on you. Not on my watch. Not on my watch. I won't be remembered for a bad thing here. I'm not going to crash the economy. I'm not going to crash the banks. I'm going to put the hurt on the poors. And the market's going to live on. Buy a dip somewhere is what they're going to tell you. Let us do our work in peace and quiet in the background. And we'll leave the rest of this to the senators to try to whine and bitch and get reelected. And you better hope and pray if you're poor out there that you get a president, a Senate, and a House of Reps that are on your side. Yeah, I don't know if a recession is confirmed here. I don't think so. I don't think so. I think this is a pause here. It's kind of a wild time. Not wild. It's we'll have to go back and look together. I'll show you guys what it looks like on a chart back in the 50s, 60s, and 70s. That's what it's looking like. The first half of that Volcker trade. We'll show you the Volcker years all together so you can see it. So timeline torn to pieces today.
Majority Leader Schumer
burned.
Biden and Yellen
Lighter
and Powell
fluid
have
poured
to
all
stay
over it.
vigilant and
Sorry.
continue the hands-on approach on banking.
Sorry. Thanks for playing. Thanks for playing in 2022. And thanks for playing in 2023. We're going to reset right now.
Expecting comments from Fed Chair Powell.
Yeah, it's probably we're gonna have to we'll go back and look. Tomorrow we'll look at it together. We'll look at those years with Volcker a second
US
time.
Majority
We've looked at them in the
Schumer says
past,
raising
but
the FDIC limit is a serious proposal and should be considered.
you can't. You guys, we've already talked about the Volcker moment, right? And we know that the bear case is that we're at the second Volcker moment, right? Not the first. Second. Volcker's time as the Fed chair, that we were there, right? I'm assuming
US
that
Senate Majority
I'm going to
Consumer
assume
says
that
a
Jay
good
Powell
part
wanted that.
of this failure was regulatory.
And it's got bent over by banks, basically, right? Jay Powell's been bent over by banks, plain and simple. Same thing happened
US
back
Senate
in
Majority Leader
2009,
Schumer says we need
2010, right?
stronger regulatory framework.
Try to add some liquidity to the market, and the banks steal it, right? So, we gotcha, right? I don't know if he's getting bent. He's probably in on the deal, but you're basically here. They're telling you no. That's what they're doing.
Fed Chair Powell begins the news conference.
Okay, here's the news conference. I'm going to turn it on right now. Here he is.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings in the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced.
I am long right now.
And makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again.
Supportive.
Turning to the broader economy and monetary policy. Inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate.
This is going to play
And nearly
into
all
your
participants
board
see the risks
EPS.
to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing.
It's like the 1950s
However,
and 60s.
with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year.
Saying unemployment rates.
Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Core PCE excluding those, core PCE prices rose 4.7%.
Yeah, PC has come under the microscope.
In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year.
None of
but
these
the strength
numbers are
these
going to
recent
matter in another
readings
month or two.
indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025.
They're expecting
The
PCE
process
to
of
come
getting
up. This is
inflation
very bad.
back down to 2% has a long way to go and is likely to be bumpy.
Into 2021, 2022,
Despite
2023,
elevated
excuse me.
inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices.
Selling off
for
right
the
now,
American people.
398.34, 398.
My colleagues and I are acutely aware that
829.
high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are
Here's the
strongly
trade
committed to
lower right
returning
now. We'll
inflation
see
to
if
our
this gets
2%
picked up or
objective.
not down below here at this weekly, monthly, and
At
daily
today's
and
meeting,
hourly
the committee
trigger.
raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since
know
our
that's not
previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes.
I remember
It is
we
too
talked
soon
about
to
earlier
determine
here.
the extent of these effects, and therefore too soon to tell how monetary policy should respond.
Are the Bears able
As a
to
result,
get underneath
we
this
no
with some
longer
really
state that
bad
we
news?
anticipate
If they
that
don't get
ongoing rate increases will
below
be
here,
appropriate
right,
to
this
quell
is
inflation.
just an opportunity to buy a
Instead, we
dip
now
down below
anticipate
here.
that some additional
I want
policy
you to see
firming
that.
may be
Just
appropriate.
an opportunity down here to buy a
We will
dip as long as
closely
we don't
monitor
get really
incoming
bad
data and
news from the
carefully
Fed there.
assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025.
Kicking the can down the road.
These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected,
Now
the path
squeezing
for
higher.
policy will adjust as appropriate to foster our maximum employment and price stability goals.
Now
We will continue to
132,000
make our
calls at
meeting
400C,
decisions meeting by meeting,
trading
based on the
$1.63.
totality of the incoming data and their implications for the outlook for economic activity and inflation.
Well, that's all the bad news unless he
We
gets
remain
bad
committed
questions.
to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions.
Oh, man, they're spreading this out.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we
Nothing's
understand
changed.
that our
Or not-
actions affect
something's
communities,
changed. Well, it's the
families,
same
and
what I said
businesses across
before.
the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Okay, so what they're basically saying is what we talked about just a few minutes ago. He got all the bad news out of the way, and he's basically spreading it out. Now, he's telling you he's like, it hasn't changed too much. It isn't it's not as bad as it is, but the reality is it's kicking the can down the road. That's what they're doing.
And that deposit flight among mid-sized lenders in particular has ceased.
Now, this is where it can get hairy.
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which
And there's something
demonstrate
else
that
about the politics
all
we'll talk
depositor
about here in a
savings
minute.
are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered?
Squeezing higher now, trading
so we considered
436.
we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really,
so he's
it is
done
that
with his
the
speech right
intermeeting
now.
data on inflation
Should get some
and
vol
the
crush.
labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year more than we'd expected at the time of the SCP in December.
Bullshit.
The time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we
Over
sustain
time
that
now, you added that
confidence
in.
with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and
Not
thereby
good
weigh
for
on
the poors.
demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment.
We're gonna talk about this
today with
later.
any precision whatsoever. So our decision was to move ahead with a 25
The
basis
credit
point
tightening, we're going
hike,
to talk about that.
and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes may be, some policy firming may be appropriate.
Talked about that all morning.
Going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook. and in
Squeezing higher
particular on
now,
our assessment of the
474,
actual and expected
481.
effects of
Nothing
credit
out of the
tightening.
unknown at this point.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming?
Trading
Does firming
401.29,
imply a rate
401.32.
increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know. So
trading 401.43 right now.
The hike you did today could further exacerbate the problem in the banks.
Watch for that liquidity
No, I mean,
above.
with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on
Look
on this
above at
potential
407.5.
credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the banks, we're focused on our financial stability tools, in particular.
This is where you
our
create a
lending
class of
facilities,
people that can't
the debt,
get credit,
sorry, the
not
discount window, and
businesses.
also the new facility.
This is where you become a renter.
Nick Timmeros of the Wall Street Journal.
Oh,
Chair
Nick,
Powell, in
baby.
your testimony 2 weeks ago, you had
What's up,
indicated you
handsome?
thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and the people who write the minutes will be very carefully counting. But I'll tell you what I heard.
Yeah, I'll be selling
What I
those. Don't
heard
worry
was
about it, buddy.
Significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been. Remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's people. It's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first part, the first 5 weeks of the intermeeting period, pointed to stronger inflation and stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
We know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
That's right. I agree with that. They were telegraphed in advance. Absolutely.
Hi, Victoria Guida with Politico. I wanted to ask,
especially these banks that risk it all the time in the world.
Treasury,
maybe not prime banks, but all these regionals
the systemic risk exception
had space to do this
allow
work.
Uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would
now
be
trading
some sort of
401.86 right now? Nick Timros out of the way.
Failure of these banks.
Now squeezing higher,
the issue was
401.82.
really not about those specific banks, but about the risk
R2 blown out, implied moving the market up at 403. Do we get it? 402.09.
That was the issue.
I'm trading $1.60 right now on 402C. $1.63
internal investigation on its supervision and regulation?
Yeah, I'm going to take
Vice
money
Chair
and run.
Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision.
Flat right now.
I realized right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen?
Implied move on the high, 402, 403, 404, somewhere in here. It changes all day long with the options market. We could trade higher, but I want you to see this big white line up here. I want you to see it on Bookmap as well. There's this big little block of sellers in here.
And I get briefed
on
it.
We'll see if we can trade higher than this zone right now. We'll take a look at Bookmap. I do want you to be aware, if they tag the high, sometimes they come back down to grab the put side
so,
and print that
I
side.
Back
So we'll
to
take a look on
conference.
Bookmap and see if there are any more highs above from here. Just know you can see this supply, and there's one more place above at 4,100.
Is disinflation still occurring in the U.S. today?
Yes, I mean
that is your R3 right here. I want you to see R3. I want you to see this next tag above.
It's a feature, not a bug, but so. But
as we come in here, we get this one last place. If you were with us all day long, you know that there's another line hiding down in here.
Goods inflation's been coming down now for 6 months.
You know there's one right above here. See if we can reach up and slam this.
But it's certainly
reach up and slam this right here.
Housing services is really a matter of time passing. We continue
now
to
trading
see the new leases being
402.41
signed at much lower levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't
coming
have
into
now,
some major
is
supply
a
up here.
sign
No
of
reason not
progress
to take
in
some
the
profit up here as you
non-housing,
come in here.
Services sector.
You want to leave some runners on to get up in here?
That's just something that will have to come through softening demand, and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation.
Remember this right here. This is important for you to know.
The question is how significant
this was our
will this
conversation
credit
earlier
be,
today,
and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates. People are
You're
publishing
creating a
estimates.
class
and
of people that will be
but it's very
employed
kind
while
of
they go through
rule of thumb,
recession. So
guesswork
what that means,
almost at this
we'll
point.
talk about this
But
in a
we
minute.
think it's
Creating a
potentially quite
class
real.
of people
And
that will work
argues
their
for,
asses off
being
as
alert
conditions
as we go
are
forward,
tightened.
As we think about
They'll
further
have
rate
money
hikes,
to
for us,
spend.
we'll be paying attention to the actual and expected effects from that.
For a longer
Powell,
period
James
of
Mount from
time.
The New York Times. Thank you for taking our questions. I wonder if you could talk a little bit. I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank and whether this suggests that something about regulation and supervision needs to actually change going forward.
kinda cute.
And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think
Uh-oh.
happened, and then I'll come to the questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk.
That's right.
Didn't hedge that risk.
That's
We
right,
now
they didn't
know
hedge
that
it.
supervisors saw these risks and intervened.
They saw it before.
We know that the public saw all this.
They took the money to run.
We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So for us, for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those
One thing I want to make a note here.
It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply
The one thing you
Vice
don't
Chair
want to
Barr
see in
doing
these
this,
VC companies, you don't want to see them completely get shut out.
But that will be up to him.
But you want the banks
So
to
that's
take
really where it
on
is.
a
The,
hedge, which isn't required,
review
is the
can be
point.
thorough and transparent.
So you're not trying to kill VCs or
it is
anything, or
clear
even the
to your-
banks
really to
available to
your
these
last question, it's
VCs.
clearly
But you are
we do
saying,
need
hey,
to
man,
strengthen
to the
supervision
bank,
and
you're saying,
regulation.
look, you were
And
telegraphed
I
to
assume
hedge,
that,
and you didn't.
There will be recommendations coming out
And there
of
was
the
no
report, and I
requirement
plan
that
on
they did. And what they
supporting
did was they
supporting that
took the money and ran.
And the final point,
Now,
can we
what
feel
you don't want to
confident these
see is the
weaknesses don't
Senate
exist
say
elsewhere,
something
given
like,
that they've
"Yeah, if
existed
you're going to
this
be
These are not
financing
weaknesses
VCs, that you have to
at
put
all
this
broadly through the banking system. This was a bank that was an outlier in terms of both its percentage.
No, it wasn't.
Of uninsured deposits and in terms of its
No.
holdings of duration.
Uninsured deposits.
And again,
there
supervisors
are
did
ways
get
for you
in
to
there,
insure it
and they
outside of the
were, as you
FDIC. That's
know,
bullshit too.
obviously,
And you can require these
they
people
were-
to
they were
buy
on
that
this issue,
insurance
but
too,
nonetheless,
which we can
this-
do
this
that.
Still happened, and so that's really the nature of the interview. Of the review, is to discover that.
As a depositor, if you're the bank, say, all right, do you have your paperwork for your
Michael McKee from
outside
Bloomberg,
insurance on your
Radio
money?
and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different
Good
about the way
question.
you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually.
This is going to be important for the politics in this country.
If that happens, participants don't see rate cuts this year.
Hopefully you
They just
took
don't.
your profit there.
I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen?
Yeah,
In
that's
other
right,
words,
you don't know.
What should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's
This is the
happening
kick in the can
among
part.
the banks and asking, is there going to be some tightening of credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes.
That's bullshit.
So the key is we have to have policies got to be tight enough to bring inflation down to 2%.
They knew
over
that
time.
was coming
It doesn't all have to
anyways.
come from rate hikes. It can come from tighter credit conditions.
This is
So
covering
we're
ass
looking
right
at-
now.
and it's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
I am impressed that he didn't raise the inflation rate to 3 or 5. Any kind of new verbiage there?
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that
The
disproportionately
risk
are
comes at
focused on
like year
commercial real
5.
estate?
Another 3 or 4
You know,
years.
we're well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong. It is sound. It is.
Tell them about how you can't
resilient,
let
it's
commercial
well
banks fail
capitalized.
or commercial mortgage-backed
And,
securities fail. Tell them that.
I really don't see that as at all analogous.
Tell
to
them the
this.
truth.
Another question, would you be open to an independent investigation separate from the Fed's probe?
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails, there are investigations, and of course we welcome that.
Yeah, we just don't want the
Mr.
Senate
Chairman. Edward Lawrence
bucking
from
it up.
Fox Business. Inflation has been rather sticky. So do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as
Dip
it comes
bought
to
down
our
below.
front door.
Dip bought
Stick it in
down
our
below.
model
We're
along
looking to
with
see if we
million
get
other
one more
things,
dip
and,
by here or even
we
down
have
here.
responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we
have a
will
lot
get
to talk
inflation
about
down
as
to
well
2%
after
in
this
time.
presser wraps
And
up.
if I could follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging.
Oh, here we
inflation.
go. There's real questions.
You know, if you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down.
We want to
So
see
the-
this
the
conference
sort of
end for the
fiscal
vol to
impulse
roll
is
off.
actually
So I want you to pay attention
not
right now.
what's driving
As this
inflation right now.
conference is going
It
to
was- it
wrap up
was at the
shortly,
beginning, perhaps part of what
you
was
should
driving
see some of
inflation.
that
That's not really
vol
the
roll
story
off
now.
the market here.
Hi, Chair Powell. Neil Irwin with Axios. 2 questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's
Your eyes
$143
right down in
billion
here.
on your balance sheet last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right.
Chase, if you're
we have a
watching
little
right
more
now, this is
flexibility
where
on-
this
under
is your
Section 13.3.
opportunity
We've
down
done
here as we
quite
come
a
down
lot
here,
under
Chase.
the discount window as
If you're
well.
looking
We
for that
needed to do a
opportunity to put
special
some call
facility that
spreads
was
on
designed a certain way, so we
that we
did
were
it under
talking about
13.3.
earlier, you're going to be looking down here for that.
Really no magic to that. It's only available in unusual
Looking at
and
4,000
circumstances and
on
has to be-
ES for that
meet
trade.
certain requirements, but it seemed to be the right place. So
Somewhere right
with
down
the
in here.
FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end? Thank you.
Absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is.
VIX trading up into resistance at 2081. You'd really like to see VIX get up to 2190 if possible.
Tight enough policy to bring inflation down to 2%.
If possible, you can get 2190 on the VIX, then try to get it to sell back down and off. Hopefully, we can get one more move lower here.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout
Bears
the banking
want to get
system.
this cross right here if they can.
You might be concerned about it being scarce for certain banks.
So
I want to buy this down here. Well, it looks like demand's coming up right now. See the demand leave 4,000 and come higher right here, so he might get a bid in the market just right here with this ending soon.
But the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering.
I want you to look at one other thing as this takes place. I want you to look down below here at this implied move in the market, and then we get range expansion in the market after today to the up and down side. I want you to see that we're going to get some range expansion here into the up and down side. If you're looking for a dip to be buying in this market, if you want to put some risk on in this market at the end of the week, it's down below here. 394, 396, 397, somewhere down in here.
Is working, and of course we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Hi, Chair. Katerina Saraiva with Bloomberg News. The minutes of the February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was
coming in
talked
right
about
now on the pivot.
In light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't.
A little bit of volume selling
specifics of
coming
that.
into the
It's
SPY
been-
right
it's
now.
been quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise.
400C for tomorrow,
I think,
$1.76 right now. There's
is now
70,000
on the public
contracts.
record, the supervisory team was apparently engaged, very much engaged with the bank repeatedly and was escalating, but nonetheless what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is
we have Yellen blabbing in the background. We have not considered or discussed anything to do with bank insurance or guarantee for assets.
What we've seen in the past, and it does kind of suggest that there's a need for possible, regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
VIX looking like it wants to trade up and try to tag that 2191 target above on VIX.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in
Dealers
that?
having a nice
And just
little
by way of
tag
example,
on
if a
high,
bank
getting the
with
implied
less than $1
move on
billion
high,
in
and now
assets
trying to come
failed,
back down and clean
are
out
you
all these
promising
puts
to
down
bail out
here.
all of its depositors?
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm
2193
to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate.
Man, I want to buy this right now so bad.
There's really, we have to
I want
bring
to buy like
inflation
a
down to
strike
2%.
above on zero dates here,
The
like
costs of bringing it
399
down,
C's,
there are real
like
costs to
50
bring it down
cent. They're
2%. The
52 right
costs
now.
of failing are much higher. And if you
I want
read
to see
your
like a
history, as
failure.
I'm sure you have,
There might be
you
a
can see
trade
that
in here, like
the central bank doesn't.
you know, you
get
trap all
inflation
these. There's like
back
so there's
in
a bunch
place,
of call
get inflation,
buyers
make
for
sure
today at
inflation
400
expectations
C,
remain anchored.
173,000
You can have a long
contracts. They're 32
series of
cents
years
right
where
now. That I'm probably not going to
inflation
print those
is high
again.
and volatile,
They'll give like some kind of a
and,
failure, so there might be like
it's
something
hard
in
to
here.
invest capital. It's hard for an economy to perform well, and
Haven't bought anything yet.
that's,
Still
we're
flat
looking to
right
avoid
now.
That, and and to
You
get
see that
back
nice
to where we
cross
need
for
to
the
be, back
Bears
to
right
where
here?
we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to...
Waiting for this conference to end.
Yes, sir. Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
It depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be.
Oh,
And so,
bring down those 398s. Where's that?
We're very focused on getting inflation down.
There's 399.24 right there.
Run, that is the thing that will most benefit the people we serve.
398s are 57 cents.
We've had very strong labor markets through these long expansions that we've had.
Maybe we can
Four
get
of
the
the
397s down a little bit
four
more.
longest expansions in U.S. history have been really since the high inflation period, and the reason was inflation wasn't forcing the central bank
get
to
down
come
there,
in
Dirty.
and
Get down
stop
there, Dirty.
An incipient or
Get down
expansion.
there.
You can have very, very
Look
long
at that 397s. They're 76
high inflation,
cents.
and we had several of those, and they're
Oh,
very
yeah,
good
get
for
down
people.
there.
You
Give me
see
some
late
blood,
in
baby.
expansion, you see low unemployment.
Give me
you
some
see
blood.
The benefits of wages going to people at the lower end of the wage spectrum. It's just a
Give me
place that
some
we should try to
blood
get
so I
back
can
to.
buy it up here.
Hi, Chair Powell. Jean Young with Market News. I just wanted to ask.
Trading
with all the
396,
events of the
395,
past 2
78.
weeks, do you still see a possibility
395,
of a soft landing?
67 on the monthly trigger down below here.
It's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's
hold on.
too
Oh, right
early
there.
to
Hold on a
say
second.
whether there really have been changes in that. You know, the question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that.
We've got VIX now trading up into resistance on the daily trigger at 2190.
Find it.
Should get a roll here in the VIX.
Genser with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations?
397 is now trading $1.07. They were 88 cents a minute ago. Now $1.10.
Those are serious regulatory, in particular immediate attention.
Price target above 398.
And I guess there were 6 of them. So.
And getting to
possibly
the seriousness of it,
$3.99.
how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership.
VIX rolling over right now.
I think that's what you think about. You know, what can we do to make sure? But again, that's not for me to answer today.
So you don't have specific thoughts.
Wrap it up, Jay Powell.
If I did, I wouldn't share them because I really, you know, this review's going on. And, you know, I want nothing other than us to find out what happened and why.
Kill the vol, Jay Powell.
What we can do to do better and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts.
Wrap it up, old man.
Just isn't
Wrap it up,
appropriate.
boomer.
There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, you know, to this work, not connected to this bank. And under again, Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Thank you,
Not
Chair
hot.
Powell.
I'm not hawkish on this
with
presser at
Yahoo
all.
Finance. Curious, how do you view financial conditions right now?
I'm not bearish
If
on this in any way,
credit
shape, or
becomes
form.
expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were to tighten enough, if that would prompt a rate cut.
So financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which if they're focused on,
there you go,
you know, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, you know, what will be the extent of it, and what will be the duration of it, and then, you know, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy.
We'll talk about that too, what he's saying here about tightening financial conditions are not reflected in the indexes, and there's a reason for that.
It's going to be sustained.
Joe Donut and I talked earlier about creating a class of people that have no credit extended to them, but yet they have money to spend on goods and services.
I mentioned with rate cuts, rate cuts are not in our base case, and you know, so.
Not as hawkish and bearish as you think, I promise you.
So. Thank you very much.
All right, so that's it. Vol off the market. Presser is over. We have a few things we have to talk about here. So I need to talk about some points here. No matter what they're telling you, I want you to understand and know something, okay? The Fed path, whether you believe this or not, is now extended. They are kicking the can down the road. I want you to know that too. This is what's called kicking the can down the road. There's some scariness here, but not in the way that you think. So the first one here is GDP. We're going to talk about GDP is looking bad, right? By the way, I am long right now, if you want to know. Now, the GDP, I think I said that earlier, but just so you know, the GDP projections are kind of bad down the road, right? We already know that. Now trading $1.40 and 397 Cs. GDP projections are bad down the road, okay? That's not good. Now, with that being said, that's going to come into some politics. You're going to see that impact our political system. You're going to see people out there saying, well, we don't want GDP being low. We don't, and they're going to fight for this, right? They want companies to be able to produce goods and services for you to buy. Now, unemployment is going to be another key part of this. As long as they keep people employed, they don't care if you have good credit. Now, if you're a business, I want you to realize you can go right to the Fed and look at this. Corporations do not care if credit is tightened. They take loans in good credit cycles and bad credit cycles. They don't fucking care. They don't care where rates go. They still take loans. They just build it into what they're feeding back to you as the little person out there. I want you to realize that. You have to put your trader hat on, put your Main Street hat on, and I promise you, you can just look right at the Fed website, and they don't care. Corporations take on debt, and they've been taking on debt since 1970s, early mid-1970s, has never stopped. No matter where the economy is, no matter where rates are, they just don't care. So don't try to associate that with corporations going to get fucked up in this. The real problem here is that poor people will be impacted. You might not be able to buy a home. You're more than likely not going to have credit extended to you, even if you have good credit. Now, that turns you into a renter, and it puts money back into the pockets of BlackRock, puts money back in the pockets of investors. And he spoke about briefly there two other things. He said businesses and might take on you in consumer or in credit tightening is the impact it has on businesses versus consumers is completely different. Now, the other aspect to this is when he's saying it doesn't impact the indexes or show on the indexes is because you're saying to corporations out there, get ready for a class of people that are employed at maximum employment, yet are uncreditworthy, even if you have good credit. But these people will have money to spend while we do our thing. And the scary part about this is that all of this signals a longer period of time of this taking place. We're talking about a longer period of time of tightening, a longer period of time of you being under the thumb to pay for rich people. But you have the ability for this to happen because you're employed. So you're going to see people trying to say, we want people back to work. We need people to get a paycheck and to pay for our bad mistakes and decisions. This is what they're saying for a much longer period. This is kicking the can down the road. Basically, you are getting shafted as a poor person. And if you weren't positioned for this, look out, man. It's not good. If you thought as a poor person you were going to get like 2023, 2024, rip all this shit down, and you're going to be able to buy a house, sorry, you're going to be renting longer. You're going to be working harder. And your opportunities won't be there. But don't worry, we'll keep you employed. Pretty bad. I mean, it's bad overall, but it is definitely not what bears wanted. I'm guaranteed this is not what bears wanted to see. Oh, $1.68 right now. $1.69? $1.70? I guess I got $1.72. Should I just take the money and run here or just hold on? $1.85. $1.80, baby. I'm out. Flat again. I'm flat once more. There's a little bit of room, but you have to be careful. What you're not going to see, I want to warn you, probably won't see 400 print again. Be careful of this up here, not printing 400. You'll see the dealers come in and they'll oftentimes try to vacuum all this up and say, thank you for playing. We'll see you again tomorrow. Just be wary of this. If any of you guys have traded these events, you know how this goes, right? They print the top, they print the bottom, and they come in and they start vacuuming all of your money up. And they take all your gains away from you. Now, I want you to understand this out there. You're going to get all these takes out there. This is kicking the can down the road in my viewpoint. This is definitely destroying poor people. That's middle class. If you're middle class, this other thing that they're doing to you is, let's say you're Mary. You know, remember Mary that bought the new lawnmower? And she bought the new truck and she bought the new trailer and she has nothing to worry about. They've paid off their mortgage. They're saying, well, we'll wait for Mary now. They're saying, you know what? Mary can probably get away with doing that lawn care service she has for the next 5 or 10 years. So fuck it. We'll just wait until she's ready to buy a new house and outgrow her house. And when she's ready to get a new truck and a new trailer and some new equipment because all these costs are too high for her, and we'll get her in the back end down the road. Which is kind of shocking. And they also said, too, that they're going to back all this shit up. They're going to protect the rich as they go through this, and it's extended on you. It is unreal. And now, what does this lead to? It leads to Senate hearings. Hopefully these Senate hearings continue to support VCs, but with some requirements on these banks and VCs. You don't want to see a hammer come down. You don't want to see a hammer come down on VCs and say, fuck you. Don't ever develop anything for the rest of your life. We're going to lose an entire generation of development and growth. But you do want to say to like these banks that take on this risk, yeah, you could have hedged this. We require you now to hedge this when these things are in place. Well, look at that squeezing higher right now. Just blasting higher. They don't even care. Just squeezing out the shorts above. If you stayed long here, congratulations. Look at that. No resistance above on Bookmap. Just clear skies, clear sailing ahead. Do we blast off into this bell? Should I have stayed long here? I'll be pissed off if I'd be pissed off that was the case. Now, now, I want you to realize though, they're pushing this off, and this is going to come into politics. And the VC thing, right? The Senate hearings, you can let them say that shit, but you just want protections put in place that trigger. Like if I'm a VC, I go to a shitty bank like SVB or whatever. One of these shitty regional banks that they're going to say to me, "Hey, look, we only protect we protect nothing. We're FDIC insured at $250,000 and you got $50 million. We require you to have your own insurance against losses. We require," and then you want the Senate to tell these banks to do the same thing for themselves, so that they have to assume more hedging as rates go higher. So that's all that stuff on the side there. That's the other side of this. But for as far as we're concerned here, the Fed is willing to support rich people from this point forward. And that means that your inflation's not coming down. I apologize to you. As time passes, you are going to see, this is going to take some time, man. You are not going to get ahead of the rate of inflation. I'm sure you of it at this point. You're not getting ahead of it. You're not getting ahead of it this year. You're not getting ahead of it next year. And they say they're going to, they say they're only tight in 2 more cycles and that the credit crunch is going to do that. That's bullshit. We saw that in 07, 08, 9, 10. That's the 4 years right there. Right? So you're not going to see that. You're going to probably see a forced Volcker second moment in 5 years, which is horrific. It's unreal. Unreal. Dude, I'm telling you, this is not the moment a bear is looking for. Promise you. This is not the moment you were looking for. This is the trade it sideways and up moment, I guarantee you. You're not seeing a market crash from that, what was just said today. Guaranteed. Yeah, I mean, I'm not guaranteed. I can't guarantee it, but that presser there, no matter what you're consuming out there in social media, that was not the presser you wanted. That was let's create a class of serfs. in my opinion. This is the same thing. It's gross. It's gross. It's the sideways market is what it is. That's what it looks like to me. And he said it, right? He said it about the indexes. He said it. Now, there are some problems down the road. If we go look down the road, right, when they're talking about GDP going down, that kind of stuff, but you're going to see politics play into that as my point. So I keep bringing this politics back up. When we have to deal with that down the road, right? So when we're going down that road, and you're like, yeah, but GDP is going to be horrible in 2 years. There's also an election in 2 years. And in that election, I guarantee you, people are going to promise higher wages. They're going to promise that we start to bring the GDP back. And you're going to see as we start heading lower over there that they're going to they're going to trade this up on those hopes. So no, I apologize. Not what you wanted it to be. It's not what a bear wanted it to be. It's not what a bull wanted it to be either, to be quite frank with you. Bulls don't want to buy Tesla at 185. They want to buy Tesla at $65. Seems to be this like bull bear thing out there where bears seem to think that bulls want to buy. Hold on. Seems to be there's this thing out there where bears seem to think that bulls want, I don't know, like this is the Tesla bottom. I don't think that bulls think it is the Tesla bottom, but this is pushing off. That's what this is, pushing off. And you have to see it for what it is. You really do. You have to look at it clear as day. This is not the bloodbath, the depths of hell. This is not the all-time highs. This is trade this market sideways. Sucks, man. This is going to be a shitty market to trade. It's not going to be the fun market. It's not going to be the fun market to trade, in my view. Yeah, it's gross. It is absolutely gross. Absolutely gross. Your next bet or your next big thing you're looking for is the election cycle, in my view. The next thing you're looking for is politics to change. I'm not on either side on that. I'm just saying if you want a major shift, it's more than likely going to be politically driven. More than likely going to hinge on a presidential, Senate election, that kind of stuff. Yeah, I think that's your next major. I don't know that there's anything else major, like major policy shift outside of this kind of bullshit that we're seeing right now. It's probably a political, going to be pushed off to the politicians. And I'm fascinated by that. I'm fascinated of another 2 years of this, how people are going to feel when they actually hit the voting booth. Well, we've seen how that goes. If people live under these conditions for another 2 years, it's going to get tiring for people. It really will get tiring for people. All right, you guys want to, so right now it's 3:27. Give me your thoughts. Let me read the chat. If you have thoughts on the chat, why don't you tell me what you think in the chat? So I know I'm blabbing about what I think. Let me read what you guys are saying in the chat right now. So if you're on Twitch, Twitter, not Twitter, Twitch or YouTube, what's your fast take? No, this is like, I listened to this for what, 15 minutes or maybe half an hour, and then I read the statement. So you tell me what your take is on this before your brains get polluted by the news and social media. Just your quick 5-minute take on what you heard. Let me know in the chat what you think. I feel like we covered this before this today. I feel like Joe and I have covered this enough at this point. This is actually, it happened what we think is happening. Yeah, no more banks blowing up, bro. That's not happening. Not under their guidance. They're not. Let me see what you're saying here. Someone's saying, I've been thinking more and more that that's the right strategy to all of this as opposed to trying to time things. Yeah, timing's not right, is it? We talk about that in the program oftentimes. Sideways and up, big nothing burger, King of America saying, my take is the Fed. Solid is saying, my take is the Fed doesn't know what they were doing and admitted it. Yeah, he did admit it earlier, didn't he? He had some real key changes in his words today, too, didn't he? He did. He added some things. There's a lot to dissect in his verbiage today. Yeah, so Nordic Trade is saying you don't expect a recession that will kill both the S&P and inflation. I do want you to understand here, very clear. It's a great question. Is that they're telling you that they're going to force you to work through it. They're trying to tell you they're going to keep you employed. They're going to enslave you while we go through a recession is the key here. It's not like It's not like you're going through something where you're not employed. They're going to say, yeah, you're going to work your asses off through this. This is a huge thing right now. These are the Volcker years. Not that there's no jobs. You're going to have a job. You're going to have a job. You're going to break your balls, I assure you. That's what he's telling you. Yeah, that's right. That's right. He wants to keep upper levels of the financial industry intact, money flowing to create industry. I heard status quo. Nothing worthwhile is broken yet. Keep hiking until that happens. I scaled back in. Market already priced in 0.0 to 0.25. Agree. And then pause. Looks like we were getting 0.25 and 0.25 again. Down. As usual, the last thing the Fed wants to do is surprise markets. Blah, 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 blah. I think it's a longer, tightening longer. Market's slow into the right past 430 crash. Looks like it will happen by a war or some other BS. Summary of pressures. Banking system is fine, but will lead to credit tightening and GDP not expected to be robust, and rates will remain high until next year. Overall, not bullish at all. Quite bearish in economy and for equities. Even remorseful at one point. I think the Fed kind of saying we don't know what we broke and we were easing off. Micros haven't changed. Earnings week. We see sub 380 before 420 on the SPY. Yeah, I don't mind seeing 380. I think 380 is natural. So KMAC 209 saying that. I want to talk about that too. Let's look at SPY real quick. We could use SPX, I guess. So I don't disagree with that statement. But that I think is more natural trading than anything. So that's a good one I just read right there. Let's talk about SPX real quick. And we're going to look at SPX on a higher time frame. We're going to look right just on a daily chart here. And I think what he's saying, let me know if I'm wrong here. KMAC 209 is making a point here. And I don't disagree with KMAC here. I don't know if it's 380. I'm going to go with no on the 380 down here. But what I am going to go with here is I wouldn't see this top up here at 409. This is SPX right now. Wouldn't be surprised to see, SPX be above here, trade back down and catch that dip in that close this gap down below and then trade higher. I don't know that we get down here, KMAC. I'm not going to go as bearish as you are down to 380, just as full roll. You might get it. I think they're gonna. I think bears or bulls are at least gonna try to buy that dip in there. So that's the daily. Here it is right here. Bears want to sell this right down, right? Like, yeah, you got up there. Now we're gonna sell it back down here. There's that 380 that KMAC is saying down below. I think the bulls do try to buy this up here. Now on another time frame here. Let's look at something else here. Look at the daily here. And I do want to warn you. Not warn you, but I want to tell you this here. I'm on the boat right now. We're in springtime. We've got March and April. So you got this trade up higher, trade down lower, trade up higher, trade down lower. And I would like to see that complete up here. And then we come into summer months and we trade down here in the early summer months over here. That's what I think is going to happen. So I'm looking for that dip buy down there for that continuation trade higher. I'm looking for a low of or dip buy at least at, let's take a look closer at it on SPX. Some kind of a dip buy down in here, maybe close the gap down here at 395.3, 395.6 for continuation for the bulls. If that gap gets closed and we start to reject off the daily, if we get the rejection off this daily here, we start trading price below, we blast down, and then we get the confirmation that we're going lower. Yeah, I'll entertain that 380 down below there, no problem. But as for right now, being springtime, March, heading into April, I'm going to look for weakness down to 395-ish, and then some continuation to close some gaps above here at 420, possibly even 430 into April. And then we'll get that slow summer, right? The slow early summer, and then the late push up in summer. So I'm down with you for some weakness, just not as weak as you think. I don't think that's going to happen. But that's a great point, KMAC 209. I love it. What else we got here? Go back to right there. And that's where we are right now, right? 395, right down in here. Some of that weakness right now. What about the next wave of earnings? Do companies readjust lower to hit? Then market keeps going up? That's a very good question as well. My fear here is that they run into earnings trading up into it, and then we sell the news as we get into earnings, generally speaking. That's what I think is happening. Yeah, I agree with you too, K-Mac. If we break, so one thing K-Mac is making a very good point here. Still a very good point. So let's look at the 5-day here. Let's just look at this 5-day right here. So K-Mac's basically saying that the bears need to get underneath. Not just get underneath, but they have to like sell down, get the confirmation, and then you get that 380 that you're looking for down here. With some conviction, this can happen in the overnight hours. You can get this if hedge funds can come in a low liquidity environment, they can get this and trade this to 380. I'm not against that trade at all. But if you see the buyers just stepping in relentlessly in here at like 395, they're going to try to fucking get that move up into 430 for April. Because when March and April are like the strong months for the stock market. And then we get that lull in early summer. Everybody starts taking vacations and shit. And we're all fucking around day trading like 15 points up and down, 30 points up and down every day. Meanwhile, everybody's partying, hanging out in the Hamptons. And then we get that final like sell down, and then we get a rip higher later in summer normally. So just look into spring and summer and that kind of shit going on here in the markets. So we'll monitor this. As of right now, for me, this is a dip buy down below. This 395, 392. You can cut your losses down here too. So the next few days, here's the deal. Next few days, we got until Monday here, and we got some volatility also next week on Thursday. But we're on Wednesday, Thursday, Friday, right? And we got some vol. I believe it's next Thursday. I think the Senate hearings are where that real vol is down here. So if you're looking for a dip to buy, it's probably down here, right? You get your dip buy. I don't know if it's today, tomorrow, or Friday, or even Monday. This is your dip buy down here, and your stops are below it, right? This is where you put your dip buy on, right? If we start to blast down, you trigger your stops, and you wait to see if we're going to take this long down to 380. I like the 380 trade. I just don't see it happening. Time of year, I don't see it happening. I think this is an opportunity for bulls to just buy back in, trade this up. Now, if we trade 380 at any point, we start blasting down here, blast down 100 points, something like that. I'm down to buy that dip too. Yeah, I think it's the sideways. I think it's this weird sideways and up trade. So let's look back at SPX. So this doesn't mean you don't get bloodbaths in here. We know that we get bloodbaths. We know that every year, even if I'm saying to you, like, look at this. Even though I'm saying to you we're going sideways and up, that doesn't mean, look at these two lines right here. That doesn't mean that we don't trade out of range one time. That doesn't mean we don't trade down from range one time. We can trade all this shit down here. We can trade all this stuff in here, but still trade this bullshit sideways. It's really bad. This is not what bulls want. This is not what bears want, in my viewpoint. This is not what either side is looking for. And this is what I'm seeing is continuation of this nonsense in here. And this shit's been going on since May 18th of last year. May 18th. I mean, bears are looking for they're not looking for 32, man. They're looking for 2,800 and lower. I don't think that happens here. Bulls are looking for this too, believe it or not. What the Fed's telling you is longer. It's going to take longer. So I think you're going to see moments of capitulation and moments of highs and that kind of shit. This is a brutal market that they're setting up for us. Not going to lie, man. Brutal fucking market. Extension of a brutal market already. Get ready for it, in my view. Seriously, get ready for it. It's going to suck. Not making me happy here. And I wouldn't be... Dude, I've got crash puts on the market. I've got them for today. They expire today. Do I think we got them into this close? Probably not. Probably going to get torched on this whole trade here. Yeah, my puts are at so we're down here right now, and my 392s are at 3 cents. I'm getting smoked. Well, not smoked. I made money on selling puts, but on the other side of this trade, I'm getting burned right now. Absolutely no change in tone here. No change in tone. I just said 4:30 like 5 minutes ago, didn't I? Like 2 minutes ago, I just said 4:30. 2 minutes ago. There's no change in tone here. Zero change in tone. Yeah, I don't know if we get a crash in September and October. I was thinking on the back end of a crash was September or January of next year. September this year, January of next year. And now I'm looking like 2028. I think this is all a scam. Maybe even longer. 2028, 2030. Kicking the can down the road. But you know what? If you disagree, put your money where your mouth is. Show me, take a screenshot and say I'm all in puts right now. Send me a screenshot of like $30,000, $100,000 that you're all in short right here, right now, and I'll get on my knees and suck you off, whatever you want. I've had those DMs before. I've had those DMs on tops and bottoms, and I've done it myself. I've torched 6 figures on saying we're gonna crash, so I get it. If you're doing it, let me know. I'll come back and I won't bust your balls. I'll come back and talk to you. I'll come back and talk to you. I've been there. Yeah, you have no idea how short I am. I know. I don't believe it. I don't see it. I'm not seeing it. I'm not seeing putting that kind of risk on for a crash here. I'm not taking that. I'm not taking that presser as we're going to crash right now. And I was feeling like a crash up until this moment. I don't feel it right now. I don't see the crash. You know, and I'm different than a lot of the bulls out here say a Fed pause is we're going to go up, and my take is you grab the liquidity to crash the market on a pause. So I guess I'm on the opposite side of what a lot of people think oftentimes. Yeah, Binky made a good point here. Binky's saying the only good thing about that speech is that it's over. Yeah, Cap's still working at Wendy's. You wish I was working at Wendy's. I've had 3 major bad. I've also had I've had 3 major losses in my career, like big ones. 3 major ones. Three that were like real damaging. Let's see what I'm reading. Trying to read what you guys are talking here. Since when has a pause caused the market to go up? There are people out there that think it does. There are people out there that believe wholeheartedly. The market goes up on a pause or a rate cut. I shit you not. There are bears that think that too. There are just traders that think that bullshit. I shit you not. So you didn't get a pause. You didn't get a rate cut. You didn't get 50 BPS. You can't be a fucking bear out there and be like, this is the thing about bulls do this same shit too. Like they do. Bulls do the same shit. But bears, man, you're like, okay, if we get 50 BPS, market crash. I'm like, okay. We get a rate cut, market crash. I'm like, okay. And then they're like, we're doing the same stuff, market crash. I'm like, all right, so when do we not get the market crash? When do we not? Like, what happens that we don't? There is no option. It just market crash. I'm like, okay, what about last May and June? We haven't had a market crash since last May or June of last year. We haven't. You fucking traded sideways. Fucking sideways, man. Sucks. Thanks, Primo. All right, so do me a favor, okay? It's 3:44 in the afternoon. What I'm going to be looking for the next 3 days, from now into Friday, is for these dealers to come in and just start vacuuming up all this shit. We've got Vixpiration on deck for tomorrow. We have some volatility tomorrow as well, right? We got some volatility in the morning at 8:30. So we're looking for a dip to buy on tomorrow's vol before right at like 9:30 or something. Looking for a dip to buy down there on tomorrow's vol that we're expecting. Is there anything else that I can leave you with on this broadcast? Probably going to cut it short this afternoon. And I got some phone calls I got to make, and your wife's boyfriend out there is asking me to do some stuff that I haven't followed up on. And I've got a bunch of people that I have to do some work for in the background. Do any of you have anything in the background or in the front that you want to ask? Anything you need to know heading into the rest of the week? I'm looking for a dip to buy tomorrow if possible on some vol coming in. What percent drop in a week? 20%. Good question. %. Thoughts on KRE for a short? I was talking to you earlier about KRE. That's a good question. Let's look at KRE in the background here. Let me take a look at KRE. And XLF. You missed the short. Coming back right now to retest those lows. It's making higher lows, right? KRE had a low back on. Okay, let's look at KRE real quick on a larger time frame here. Let's take a look at KRE real quick. Someone's asking about KRE. Okay, let's take a look at KRE here. It's getting, you know, like if you're a short bear here, like I can understand you wanting to short this to the depths of hell. I get it. I do get it. I want you to just be aware of something. Like you might get that one last capitulation move here. You might get that one last blast down. I'm not anti this. What I'm anti is this right here. I'm anti that those daily can't, like you're starting to lose the steam, the aggressiveness for the bears on KRE and XLF. I'd really like to see XLF at 20, I'll be honest with you. But, you know, you really want to like catch XLE or KRE on one of these highs right here. You get what I'm saying? It's like you're trying to tee off here, not so much the ass end down here. You can get a little bit more on the downside here in KRE, but you want to like, when we're really bullish on KRE, you should be coming to me and say, hey, Cap, I want to short KRE. So do you understand what I'm saying? So you can, like, better positioning. So just look at KRE in a daily here. And let's say we're trading up here again on KRE. You'd be like, hey, Cap, I want to take that short. I'm like, yeah, there you go. It's right there. You see it? And there it is right there. Hey, Cap, I want to take that KRE short. And there it is right there. And so you want to see KRE, like, squeeze higher maybe. Right, get up here, and then you'd be like, hey, Cap, I want to take that KRE short again. And I'm like, fuck yeah, man, it's right there, bro. You get what I'm saying? See it right there? Is there more downside risk on KRE? Sure. Is it worth the risk? Probably not. I don't know what that, you know, I don't know. I don't see it. I see it better here. This is where you get, like, better juice. This is where you like more confidence, more blasting down. And so you're looking for that right there. Truthfully, this part of the cycle. Do you see what I'm talking about here? So, say it blasts down, but then it rips higher up here. You want to short the fuck out of that right there. See what I'm saying? That's where the real short is on KRE. So if you can get KRE back up to like a failure above at like $50, even if it comes up and tries to do this bullshit up here, $58, that's a kick-ass short right there. Make sense? All right. Next one. What's the next question? Yeah, you guys see what I'm saying? I mean, it might be like you might have weakness into the bell or something, or in a 1 minute chart. You may be like, yeah, I'm making money. But the big money is probably on a rip higher. No, you can wait. So I'll show you something else on KRE. You don't buy a spread yet. I want to show this is the other side of this trade. So KRE. you still can't take a trade here as a bull. You can't take it right here because it could be a capitulation moment in here. So let's just look at KRE on a better time frame. You don't even want to enter this trade until it stops doing its thing. You want it to come back up here, and you put like a spread on. Even though this failed here, this is a good example right here. Exactly. So let's say you trade above, right? You get your confirmation trade. You didn't get it, did you? So you wouldn't put this trade on unless you were there, would you? You actually execute the long trade on a confirmation. Now, let's say you still did. Let's say you put the trade on right here. You would actually put your stops right below it. You get stopped out of your trade. Another thing too here is if you're a capitulation bear, if you're like a crash bear here, just put on a ratio spread, man. If you're like we're going to crash the market here, I don't know, put a fucking ratio spread on, because it'll pay you for being wrong. Look up a putback spread on YouTube. The Options Industry Council has a great video on it. It pays you for being wrong. So if you're wrong, what do you care? I don't understand why people don't use them more frequently, especially in these situations that we're in. Now, what else you got there? Tesla. Lord Penta, you want some Tesla news? We'll talk about Tesla right now. Yeah, so even Chase is saying this. Chase is an ultra bear. I'm telling you, there's like you might win, but like the safe short is above, guaranteed. Guaranteed. Don't forget the implied move on the low down here at S2. Let's do Tesla really quick. We'll look at Tesla, and then we'll look at what else are we going to look at here? Let's look at Tesla really quick. You know what we say about the Tesla chart versus everybody else? But even so, with the Tesla chart, it has been improving. There's two places for a bull to be looking for to buy a dip on Tesla. You're talking about a dip at this 1 hour. This is if price can get above 192.98. But in my estimation here, you're gonna be looking for a dip to buy down below at 186.35. Remember we talked about this number yesterday and today. 186.35 down here. Be looking for a dip buy for some continuation higher. You could get some consolidation in here heading into Friday. It will give you the time for the hourly to come back down and swoop up, the 1 minute to come down and swoop up, and the 5 minute to come down and swoop up for a trade higher into next week. And there you can see it play out right there. So 186, still a bullish trade for Tesla. So you're looking for Tesla to come back down here to the 186 number. You could try to dip by this, but I wouldn't. I wouldn't be buying this hourly. I'd be looking for like Friday or Monday, see how this plays out into Friday, Monday, see if there is an ability for the hourly. This is the hourly. Sweep underneath the daily. Gives it time for the 1 and the 5 minutes to get underneath there, and continuation on a move higher into April. Next one. Implied move being tagged right now on S2. We've got S3 at 392.73. You want me to do NVIDIA next? Let's take a look at VIX really quick. VIX here. Let's take a look at the VIX really quick. You guys remember that I showed you this earlier in the stream. I want you to see this right now. Remember this yellow box that I talked to you about earlier? You see VIX now coming right back down and then right back up right here. Slammed here. Came back down, took both those trades, slamming right back up into this 2220. You don't want to see VIX start heading up here. This is where you see the break of 391, 392. If you start this is the bear town we were talking about earlier in the broadcast. See this bear town? If that happens, we start trading below 390, 392, 391-ish, somewhere in there. And then you're looking for a tag above. Your targets on VIX would be 22 to 34 and then above at 2366 for the VIX. Can you go long on the SPY here? You already heard what I told you? That you're not going to get me going long on SPY today. I'm going to wait for tomorrow's economic news to come out at 8:30 in the morning. Yeah, Erms is saying that there's a pin here for today at 392, 395. Should see that pin down here. This is the implied move from this morning. Unless I haven't seen expanded puts out there or something like that. It should be somewhere down in here. Maybe I do have to buy this close, huh? I might have to buy this close right here. I thought I would get to wait. And you might see some hedge funds try to do some finagling down. This is the one last thing is you get hedge funds to come in here after the closing bell and in a low liquidity environment, try to get a nice push down right into 8:30 in the morning, and that's where the buy is on Thursday. Pin strike down below, 392.76, almost to the pin right there. Look at that beautiful pin strike down there. Gorgeous pin strike down below. Man, I want to buy that so bad right now. I want to buy that so fucking bad. My only fear here buying this right now down here is I know that sell-side hedge funds will try to fucking push this down when you're not looking overnight. I really want to buy that really bad right now. I got to be honest with you. I want that so fucking bad right now. Yeah, it's not Beartown yet. We're not in Beartown yet. I just showed you where the VIX is. The VIX has to get above the yellow box for Beartown. We're not in Beartown yet. Oh, you guys want some bear music? Hold on, I'll get you some bear music. Hold on here. I got you covered. I'll get you bear music. Hold on here. Hold on. Well, I get bear music out. YouTube studio over here. Hold on. Don't get it. Don't go green yet. Don't go green yet. Got some more looking at EDM. You bears love EDM. Right there at 0. We need a mood, angry. We need an angry mood for the EDM. Apply. Don't go fucking green yet on me. Oh, yeah. Oh, yeah, baby. Bears in charge of this. To me, this isn't bears in charge. This is dealers trying to clean up the column put side. But bears need sell-side hedge funds. Bears need sell-side hedge funds to take over in the after hours. They want future PJ trader bears to come out into the market, throw some exposure on after the bell, push this market down to where they get paid. And this is the only time they can do it, right? We get the implied move in the market. Oh, yeah, baby. Don't, by the way, if you're a bull, don't be believing this at all. Not believing it, but believing it's true, but it's not going to hold. Hold on a second here. I got to make sure this is all tied up in my cleat. Bears heading into the bell here. Super bearish hawk. J Powell is telling you that the end of the world is coming. We're going to crash this market. We're now trading almost 392.73 right here. Perfect tag into this bell for the S3 and the low for the pivot down here. Normally you would say that this is going to be an auto. This is going to be an auto buy for bulls down below here. Hold on here. But we also know that we have on the economic calendar for tomorrow, we have more volatility. We've got claims and continuing claims. And no matter what J Powell said, we know that the hedge is not coming off the market until we get those numbers tomorrow. So if you are looking for a dip buy, you probably want to wait until claims are done at 8:30 tomorrow morning to take along and probably get a pretty decent dip to buy down below. Yeah, it hit both moves basically, right? Close enough. Both in one day. There we go. We got some bear music out there. I don't know what this song is, man. This isn't bear. Is this bear? We need more spin, man. Yeah, that's bear. Oh, yeah. Trading down to S3 now. 392.56. Do we get all the way down to 390? Look at that bloodbath inside the market. Look at Bookmap right now. It's the last. Hold on a second here. God, please give me a good price. Please, for the love of Pete, give me a good price. Ring the bell, Bulls. Ring the bell. Oh, man, I should buy this right now, shouldn't I? Hold on a sec. I told you I wouldn't be here with you to the close, but now I'm looking for it. Yeah, I don't see nothing. They want 390 in it tomorrow. I'm going to wait for this. I was going to buy this right now for tomorrow. I'm going to wait for the open tomorrow. So I'm flat right now heading into the bell. Hold on a sec. Shit, I still have puts out there. Mother. Oh, dude, I got some money. Whoa. Dude, my puts just came back to like 20 fucking cents. I just got out at 18, though. I didn't get 20 on them. I just sold some puts down here. Okay, so I'll catch up with you guys tomorrow. Expect a hedge on the market into that vol in the morning at 8:30, and then for that hedge to come off as long as those numbers don't come in hot or something like that. I'll see all of you guys tomorrow at 9:30 in the morning. If you are trading futures, let's take a look at futures really quick. So if you are trading futures, we'll take a look at this. Let me pause this shit from the background. Hold on here. Pause that for a minute there. If you are trading futures tomorrow, let's look at futures real quick for you, especially if you're a futures trader. Let's take a look at futures. Oh, yeah. Now, this is interesting, right? Interesting end of the day, right? I want you to see this right here. So this is futures on a 1 minute. Tagged almost perfectly. Look at that, almost to a T. Almost to a pinstrike on the daily. So you're going to expect a bounce here. 399, 94.75. And then down below that, we've got 398, 97.50. Now, I will say this to you. If you are a bear, there's some levels for you to look at here. As a bear, you've got some levels here. You've got 39.94.75. You've got 39.87.50. And then you've got 39.62.50. And if we're gonna look back here on a 30-minute. Oh yeah, man. This is what we want, is a crash. We didn't get our crash, did we? We didn't get our fucking crash. I want you to look on the 30-minute here. If you want a trend change here, you need to get underneath this 39.60 right here. Very important. Otherwise, it just becomes a dip buy for bulls. Do you see that dip buying action? I want you to look at this. See this right here? I want you to see this right here. See how they got this dip buy here? They got a dip buy here, and they got a dip buy coming up here. So I want you to see this. And you got me as a bull. I'm like, yeah, let me buy this down here. So I want you to see that right there, okay? These bulls are trying to buy this, right? 39.60 right here. Okay, I want you to see that. Just be careful as you come down here. You close your shorts down here. If you're really bearish, you want to see a break of that 39.60 in a retest to make sure that we're going. That's that 3,800. So just in here, be careful of bulls trying to buy this dip down here. Okay, you see it right there. 1, 2, 3, 4. Boom, buy a dip. Make sense? Now I'll give you those numbers one more time. Well, let me close this up. Right in here, I'm going to give you those numbers one more time. This is for futures traders, 39.67.50, 39.86.75, and then we've got 39.94.25. And if you can do me a favor, if you're a bear, and try to get me 39.62.75 in the overnight, please. Please and thank you if you can do that for me. And I'll see all of you tomorrow at 9:30. Thanks for showing up today. I appreciate it. Please like and subscribe to these videos. Please show up every day. I'm assuming you guys made money today. I took 3 or 4 pretty fucking good trades there today. You guys all remember the bad trades, but never the good ones. And today was a kick-ass day to trade this market. So I will see you guys tomorrow at 9:30 in the morning. I appreciate you all showing up. I want to give a special thanks to any of the moderators, the admins, to Winky Face. I want to give a special shout out to Joe Donut and your wife's boyfriend, Chaz. And anyone else out there that helps that I haven't mentioned, Binky, whoever else out there. You all know who you are. And I'll see you guys tomorrow at 9:30. You guys all have a great day. Deckhand Doey, Zedlex, Hardio, Z, Holy Croissant, Chase Winter, Uncle JBJ, Flodondris, Superman, Manchair, KB Capshaw, just some guy too. Or just some guy, baby. Cowboy Up 99, Tony Cheesiest, 63 Benzo, whoever else is still left in this chat. Lisa Cullen in the house today. White Shadow 1. Big Zaddy has followed on Twitch. Kamikaze Camo 7 has followed. White Shadow. If you're watching this stream and a restream somewhere, thank you to you for showing up every single day. And then we've got restreams in Europe. And then we've got restreams going on in blogs and Discords. Thanks for being here today. Kamikaze Camo 77 or 007. White Shadow 1 joined on Twitch. Buyer 34 followed. White Shadow 123 is followed. Pranav Kumar 47 is followed on Twitch as well. Josh Hallibo, Jay Billen followed. Don Papa 36,000 used 100 bits today. Thank you very much. Ice Trade 007 has followed. Don Papel followed. Osprey 420 followed. Eugene Park, my man, supporting the stream. Support the stream. I got a donate button down inside the YouTube description on how to support the stream. I've got a donate button at Captain's Alpha, I think. Please consider supporting these streams. We're going to try to keep this supported free and live for you in the future, but if it doesn't get supported, it will become